We'll give you some of the detailed data here in a moment. Right now, from the Interactive Broker Studios, the Bloomberg.
66 points. The S&P 1 points. That's a decline of 2%. The Nasdaq futures 309 points lower. That is down 1.8%. China firing back this morning, indicating no end to the trade war that has pushed the S&P 500 to the brink of bear market status. China announcing new tariffs of 84% on U.S. goods this morning. Ahead of his earnings release at the end of the week, J.P. Morgan CEO Jamie Dimon telling Fox recession is, quote, a likely outcome, end quote. Pat Haskell there, BlackRock, just a minute ago in the studio, saying stress levels are getting to COVID levels, and it's all self-inflicted. No signs of policy backstop in Treasury Secretary Bessent's comments on Fox this morning. As my brother said when his twins were born, he told the other kids, it's every man for himself. The NYMEX crude down 6%, 55.84 a barrel, nearing that cost of production. And again, Paul, as you mentioned, gold is up $78 an ounce, $3,067. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash Bulletin.
Many good conversations out there this morning. James Dimon over with Maria Bartiromo at Fox Business News. Mr. Rowan's talking to Andrew Ross Sorkin over on the Death Star. John Farrell is my guy with the book of the year now. Ruchir Sharma of Rockefeller Foundation. We have coming up for Global Wall Street an incredible treat. We have Ira Jersey and Ed El Husseini, and we're going to break away from sort of simple talk and really do a sophisticated global Wall Street back and forth with them. I'm hoping, Giuseppe, that we can do the two of them in the 9 o'clock hour. I'd love to go a half hour with them if it's feasible. We'll see how that is towards the opening. I have the spread that Ira Jersey told me. Shut up, Tom. Look at this one. It's a new LIBOR OIS, which was the 07, 08, 09 thing. That went out to 4 standard deviations. I've got a spread off of the summer of 2023 regression at 4.9 standard deviations.
That seems big.
That seems big. Paul Sweeney and I's job is not to say it's a crisis. We listen to other people who make that conversation. But I've got Dimon, probably a recession is likely. Outcome, as Shonali Bassick has said, Dimon, put some headcount controls in place, not forcing cuts. You know, I mean, these are the kind of headlines, folks, coming out here, and we should really emphasize that this upset goes back to the tariffs. This upset goes back. I would say, Paul, the consistent theme we've gotten is this is a self-inflicted, what the British would say, own goal.
Yeah, exactly. I'm just kind of looking at Bloomberg's reporting of Jamie Dimon on Fox Business, and Jamie Dimon saying, you know, it's perfectly reasonable in his view to say that trade was unfair, but he also says, you know, this is not the way to necessarily fix it. Maybe bring your trading partners together and negotiate fairer terms. That would probably be the preferred way.
YouTube live chat, thank you for the really constructive conversation. A lot of worry out there and fear. Thank you so much for the simple question. Where in God's name is Anna Wong?
Exactly.
We appreciate that. That's a very important insight. I will try to get Dr. Wong and her team on here in bid. Let us look now at the bond market. We're trying to go to Secretary Bessent on a Q&A at the American Bankers Association. But let us look at the bond market. There's a simple yield discussion that we use each and every day. Well, let's start with the 2-year yield. And the basic idea is 3.79%.
Yep.
It's moonshot near a 4% level.
No, exactly right, Tom. And I'm looking at the steepening of the yield curve. You look at the 2s and 10s, Tom. Again, the 2 years you just mentioned, 3.78%. The 10 years at 4.44%. So, you know, it's 65 basis points of steepening, and we haven't seen that in a very long time here. So, you know, again, that's kind of what we're seeing out there in the market. Some big moves. The yields demanding higher yield.
Hello, this is DrPaulCottrell, and we're doing a live stream on Rumble on YouTube and simulcasting on X Spaces. If you have questions, type them in the text messaging system or just go to X Spaces and you can do a call in. It's a live show. I'm also going to be live streaming on my website. I haven't set that up yet. Good morning. There's going to be a lot to cover. There's retaliatory tariffs going back and forth between the United States and China. Some other countries are trying to produce some sort of reasonable negotiation between their country and the United States with tariffs. So this is going to be a very dynamic story that's going to be multiple days, multiple weeks, maybe even multiple months. And we're going to cover how this is going to affect the market day after day after day, okay? So it's going to be an evolving piece. Now, some of the things that you need to start to watch out for are what's going on in the currency market, especially with the USD, Japanese yen, what's going on in the oil markets, what's going on with the VIX risk indicator, what's going on in equities, especially for the S&P 500 in the United States, what's going on in the equities in other countries, what's happening with the central banks if they're lowering their rates because of economic downturn. And another thing that we really need to work to pay attention to is the 10-year bond yield, if it's going up or going down, all right? So we're gonna look at those indicators throughout these many days and perhaps many weeks and see how this is evolving, all right? Now, like I said, there is a support level, a major support level based on retracement percentages off of a fib sequence where you have 4,810 as a major support level for the S&P 500. It was tested on Monday and buyers came in. So it has been confirmed that it's a major support level. So right now, the S&P futures is trading at 4,940. So we're above that support level. Again, the support level is 4,810. If the 4,810 it breaks, then the next structural support level is approximately 4,500. All right. The 4,750 is not a support level. That's a psychological support level. And psychological support levels usually they don't support. All right. So the next leg down, if 4,810 breaks with a close, if you close below that number for a trading day, then the next support level will be 4,500. So keep that in mind. All right. So the USD Japanese yen is trading at 144. If the Japanese yen breaks 140, it strengthens. If it goes below 140, that's a major problem with financial markets internationally. Okay? We're close to that. We used to be trading at 150. So the yen is strengthening relative to the USD. Another thing that is that you want to look at is oil. Oil is now trading at $56 a barrel. That's extremely suppressed. All right. Just a couple of weeks ago, it was trading in the 60s. So that's another stress indicator. The VIX is trading at 55. That's elevated. It's not coming back down. Normally it spikes up and then comes back down. Let's say it might go up to 40 and then come back down to 35 or 29 and then, and start continuing to go down. This is elevating. So risk is building up into the system. So there's going to be a bigger event that takes place here. You need to pay attention to me. I've navigated through many of these. You just got to listen. Don't be fearful. Do not be fearful. If you have cash on hand, buy slowly into the market. Don't put it all in. Don't be a hero. Also, stay away from individual stocks. If you're already invested in individual companies, don't pull out. Don't close your position. But don't add. look at this from a macroeconomic point of view, and you will weather the storm better, because certain companies, because of the idiosyncratic aspects to their company and their business, or maybe even their sector, it's going to perform differently relative to the broader index. And in these types of situations, you want to be exposed to the broader index, and it cushions the blow, versus putting your money in one or two individual stocks, and they can fall even farther. So it behooves you to think of this in a macro sense, not micro sense. All right, that's my advice to you. You can do whatever you want, but most people will weather this kind of storm by just looking at this as a broad index and then slowly accumulate shares. And you will do way better in the next 6 months than where you're at right now. All right, so just stay calm. Don't bet against the United States. Okay, with that said, please help support my work by going and making sure you subscribe to the 7 channels I have. I have 4 channels on YouTube: Brighteon, Bitchute, and Rumble. You can be a paid member on Patreon. That will help to support all these videos that I do for free. I have thousands of videos for free telling you how to actually improve your health, my perspective of what's going on in international policy and news, and what's going on with the markets. In addition, ask your social media to help by subscribing and following me so I can reach a larger audience. I need your help. And you can donate at my website, the-studio-reykjavik.com. The link is in the description of this video and all my videos. And by donating, you can donate through Stripe, PayPal, or Buy Me a Coffee. It's a great way to help support my work, especially if you're international and can't purchase my products. Now, some of the products that I have on my store are ebooks, supplements, and course modules on pulmonology and immunology. So in terms of the supplements that I have and the health products I have, go to the store, the-studio-reykjavik.com. Use discount 5 and you get $5 off any order. If you spend $150 or more, you will get a free gift until supplies last. Some of the great products that I have are the structural nano silver soaps. You can get it in charcoal tea tree or lemongrass, and you can get it in peppermint and lavender. So please get a few bars for your household. Very high quality soaps. Help support my work, help support your health. It's a win-win situation, so I can continue doing these videos for free. And if you pay attention to what I have to say here, you will make money. But you just got to pay attention and just, I have logic and why I say the things I say. All right, just pay attention, you'll do fine. So with that, let's go to Bloomberg right now.
So we've been overwhelmed with the response to come to DC and negotiate. So President Trump on Monday had a very good call with the Japanese Prime Minister and a very good call with the President of Korea yesterday. We're seeing a delegation from Vietnam. So I think we have about 70 negotiations lined up. I'm not planning on going anywhere for Easter. I believe that I had obviously been providing advice on the tariffs, working more on the tax bill that we'll talk about. Now I'm going to take a lead negotiating role in a lot of the tariffs, starting with the Japanese delegation. But in terms of escalation, unfortunately, the biggest offender in the global trading system is China. And they're the only country who's escalated. And I can tell the rest of the world that, I'm not sure whether it was the Prime Minister or the Economic Minister in Spain made some comments this morning, oh, well, maybe we should align ourselves more with China. That would be cutting your own throat, because I can tell you that these Chinese exports that the U.S. tariff wall is going to keep out, that China, for all of you who can remember that Disney movie of the brooms carrying the buckets of water, that is a Chinese business model. It never stops. they just keep producing and producing and dumping, and it's going somewhere. And, I think, Rob, at the end of the day, that we can probably reach the ideal with our allies, with the other countries.
Okay, I want to go
have
to
been-
Bloomberg's segment. They were talking about Treasury sell-off. This was printed, this was published about 60 minutes ago.
Are substantially wider, but we're probably nowhere close to actually pricing in a recession. If you look at U.S. investment grade spreads on your Bloomberg index, we're around 120 basis points. That usually gets to 140, 150, even outside of recessions. If you're going to enter a recession, you're talking about 200 basis points. So the credit market is under pressure, but it's still nowhere close to discounting a proper recessionary environment. It's actually only over the last couple of days, for instance, that the markets began switching focus from pure tariff concerns, like autos, like you mentioned, pharmaceuticals earlier, and started to focus on the real cyclicals, including financials, for instance, and cyclicals have started to underperform only in the last couple of days.
Victor, if we're going to see vulnerability in the credit markets, where do you think we'll see it first? Will it be in a short-term paper side, or will it be in longer-term issuance? If we do see some pain, where would you see it first?
So the one thing that's different today compared to, let's say, 2022, which was the last time we had volatility and spread widening, is on the borrower side. So back then, high-yield companies had taken advantage of the easy funding conditions during the COVID stimulus and extended their bond maturity profiles. This time around, they have a little bit less leeway. The bond maturity walls are probably 3 times what they were back then. So my guess is that we stay here for another few months. It's going to be the leveraged finance space that starts to look vulnerable. That's not the story today, but it will get there if we stay here.
Don't be a stranger. Thank you so much. I'd love to do the interview in French, but that really wouldn't.
Yeah, that would really work out
That
well.
would work out well. Victor Yord, thank you so much with BNP Paribas Paris out of London this morning to get us started. The news flow is like light speed. Sweeney fell off his chair during the interview. Paul, you were looking at oil.
Yeah, Rich pointed that out. WTI crude oil down 6%, $55.89 a barrel.
Right.
That is, basically the cost of production. That is now getting everybody's attention in the oil patch.
Tick for Ted Tariffs. We are thrilled to bring you for the second day in a row. I think it's just too much, Damien Sassower, and he joins us this morning. Damien, I want to go, there's so many ways to go on our 1-hour conversation with you, but let me start with this. Renminbi is CNY in Beijing, managed in that, and offshore is the Sassower pair, which is USD CNH, which is the offshore. The spread is, as well, Kaminsky had this today, and I agree with her, that the difference between the onshore managed renminbi and the offshore renminbi is the litmus paper of the Asian system now. What does it say about the Pacific Rim?
Well, I mean, it's just one of many metrics. I mean, look, but you're absolutely right. CNH, CNY spreads are blowing out, but it's really about the spread from equities to intermediate credit spreads in the U.S. to funding money market spreads. So in the past, in COVID, we had central bank swap lines coming from the Fed to countries like Mexico, Brazil, Asia. I mean, that's not going to happen this time around if we have plumbing, if there's cracks in the system.
Folks, this is an unfair question to Mr. Sassower, but I'm going there this morning. There is in the zeitgeist, not you, but the idea that the central bank will have to step in as they did in a health pandemic, COVID. Do you anticipate Jerome Powell having to act here, given all you see on the Bloomberg?
I mean, I don't know if he can, right? I mean, let's just think about, these tariffs are designed to punish these economies, and now what? The Fed is going to rush to their rescue by providing them with dollar liquidity in times of stress? I just don't know how they're going to pass that one through. Look at Argentina.
I agree.
Overnight, the Trump administration was criticizing Javier Milei, who is a supporter of Trump, for the country's swap line with the PBOC, with China, which is the country's largest source of foreign reserves. Think about this.
Right.
So Argentina, the Argentina friend of Trump trade, this was, in vogue just a few weeks back. Now it's being thrown on its side.
Right.
just a few weeks ago, Tom, oh, no, sorry, prior to April 2nd, 16 to 21 emerging market currencies were up versus the dollar. Now it's exactly the opposite.
Right.
The whole world is looked over. But in G10, you're still seeing broad dollar weakness. The dollar is still weak relative to the euro and the
Right.
yen and the Swiss franc, et cetera. So, something is amiss here.
I want to make this clear for Paul, jump in here, but Terry Weissman coming up with this experience at Bear Stearns, and we have Damien Sassauer with his experience at Lehman Brothers.
Tom, flight to safety, gold up $74 here, 3,064. Thanks, Rich. So again, we're seeing some real moves across markets, across asset classes. How do emerging markets do U.S. Treasuries today, Damien?
So today at 11:30, I have a call with Fabian Adelucci. He was the former deputy director of the IMF's Monetary and Capital Markets Division. So he literally wrote the book on, funding spreads, financial plumbing, cracks in the system, et cetera. He's now CEO of the Anderson Institute. And I know now he can tell me because he's no longer with the IMF, that the IMF has been receiving requests from across the emerging markets, specifically the frontier, specifically Africa. We froze US aid, right? So that's gone, any source of revenue. And then now basically you're getting requests from countries like Nigeria, Kenya, Senegal, that, the IMF, hey, can you come and bail us out effectively? And again, I don't know if they even have the funding in the Trump-led world to provide them with with the dollars they need in order to get through this. So, it's going to be very, very challenging. And you're seeing that, my God, in U.S. 2-year swap spreads and U.S. dollar cross-currency basis swap spreads, they are collapsing as we speak. I mean, it's just, it's blood.
At Wells Fargo, we get it. You started your business to spend time on the things you love, not banking. That's why we offer business checking, payments, and lending all in one place. You're good at business, we're good at business banking. Wells Fargo.
All right. So let's go to Bloomberg. They're also talking about the high yield bonds.
Ed Al-Husseini, and to have Ira Jersey and Ed Al-Husseini directly with us for 20 minutes makes for the global Wall Street conversation of the day. Ed, let me start with you. You were quoted in an extensive zero hedge article last night, really giving you this news.
Bitcoin is trading at 76,000, almost 77,000. The Nikkei closed last night at just under 4%. And the S&P futures are trading about 0.7% down right now.
The 50 basis point move we've had in the 30-year Treasury so far this week is quite concerning. The fact that it's affecting global bond markets is concerning. And I think the next step here is the market's looking for, I think, some assurance from the Treasury and the Federal Reserve that they're willing to deploy tools to solve this liquidity issue.
Ira Jersey, what are those tools? I mean, you're the one that told me about the 10-year comparison to SOFR. SOFR is being the new LIBOR OIS. What percentage, Paul, of our audience do you think knows what LIBOR OIS is?
I like LIBOR, but now they're still SOFR.
They're the people that won in their bracket.
Exactly.
Ira Jersey, on a 10-year SOFR, I'm out over 4 standard deviations. How critical is it now, and do you expect the Fed to act?
Well, I do think that there's some tools. Like, look, I think we have to go back to the reason why we're seeing this kind of lack of liquidity at this time when, you have potential sellers from overseas. There's certainly foreign investors that are involved in the sell-off. But I think that one of the bigger issues and the reason why these yellow flags are being set up, and I think that's probably a good way to say this, we're not red yet, we're not kind of orange yet, we're yellow. It's because we created all these financial regulations to make the large financial institutions safe and sound, but at the expense of potential liquidity. And so banks and dealers can't just expand their balance sheet on a whim like they might have prior to 2007 or 2008, in order to intermediate the markets. And that's one of the issues that's been going on. Look, I wrote this back in 2014 when we were creating all these articles, that liquidity would be fickle, that there would be this illusion that the Treasury market was super liquid, and then it'd be times that on a dime, you'd see it turn into this type of route that you have now. Now there is some real selling going on, that's certain, but it's being basically exacerbated by the fact that you don't have dealers that can just say, hey, I'm going to buy another $100 or $150 billion 30 year because of the financial regulations in large part. That's number one. Number two, and this is really quick, is dealers have been increasing their holdings of treasury securities. They're near the most that they've ever owned in terms of treasuries, over $400 billion in net longs of treasuries. So they went into this sell-off already full. And I think that that's another aspect of this that we have to keep in mind, is that some of this is positioning being very one way, and that was dealers being long, asset managers being long treasury futures. All of this is contributing to kind of a one-way trade that's now being unwound.
And for years, Ira has told me I have to pay attention to these treasury auctions. I never do, to be honest with you. I let Ira do it. I let Lisa Braun.
I'm in the Sweeney camp.
they tell me if something's going on. But I feel like I got to pay attention a little bit today. Talk to us about yesterday's auction and today's auction, what that might signal to the market.
I think you're totally right. In most environments, these auctions don't really send a very strong signal in terms of demand, in terms of the underlying dynamics of the market. When there are pressures like this week, these auctions may really exacerbate that volatility. It may exacerbate the lack of liquidity in the market. And so this week, particularly the long end, the 10-year auction coming up today, the 30-year auction, tomorrow, people will be looking if they are a stabilizing event or a destabilizing event.
Okay, let's talk about this right now, folks. We're going to go inside baseball, and I want to make clear compliance at Columbia Threadneedle limits what Ed can say in an inflammatory way. And the Bloomberg way is we're not going to be inflammatory with Ira Jersey. But the bottom line is we're back where we were in COVID. The Fed came in during a health pandemic and saved the day. Ed Hosseini, did they come in and save the day here?
We'll help you file with minimal effort.
And let billionaire hedge funds go on their way? Or is it like 1998 where Wall Street's going to have to save themselves?
I think it's very likely that the Fed will use its balance sheet. I think that's the bottom line.
And save the fancy billionaires trying to pick up pennies in front of bulldozers every day.
I would frame it maybe a little bit more generously. It's really important for the well-being of the U.S. taxpayer that the government is able to fund itself at a reasonable cost. And so you need the functioning treasury market for that. And so stabilizing that market and from a financial stability perspective is part of the Fed's mandate. And so I think they will execute on that.
Ira Jersey, you enjoyed this in the trenches at Credit Suisse years ago. Does the Fed just come in and unilaterally bail out Wall Street given what the White House has done? Or does Wall Street have to assist itself out of this perhaps crisis?
Well, I think the Federal Reserve has a job to do here, and it's more of a traditional job that we've kind of forgotten about over the last 17 or 18 years, and that's that they are the lender of last resort. And who are they going to lend to at this point? Well, they've created some liquidity programs that just haven't worked the way that they had hoped. So there's the standing repo facility that they thought would be able to replace the traditional open market operations, liquidity operations that they had done every day. They used to do these operations every single day prior to 2008. But it's not working because it has design flaws. And, that's probably too wonky for most of your listeners. But
so all four bonds have been going up in yield. The 2-year, the 5-year, the 10-year, and the 30-year. The 30-year is at 4.87. The 10-year is at 4.42. Looks like the 10-year went up the most.
That would be a beneficial outcome. The second thing that's very easy to do that, I hope that the FSOC, the Financial Stability Oversight Council, gets together in an emergency meeting soon and says, hey, let's do something that we were thinking about doing anyway and just get rid of the supplementary leverage ratio from Treasuries. So exempt Treasuries from some of the bank capital rules. That allows balance sheets to expand. It incentivizes dealers and banks to actually buy some Treasuries. Those are two easy things that could be done today, right? So it's not, and those aren't things that are unusual either. We did do them in March of 2020.
Well, folks, you just got a window in there. We were allowed to look into the Al Husseini Jersey window of complexity. Did you understand half of what I was saying?
Yeah, here's a concern for me. In my Duke chat, we've got about 10 folks, and we usually just talk Duke basketball. But I actually have one of them say, serious question, are 2-year or shorter durations of US Treasuries still safe? This is somebody who has an MBA from a pretty darn good school. He's worried about the credit quality of 2-year US Treasuries. Is that where we are out there in the marketplace? There's uncertainty just about the credit quality of the US economy here?
I mean, I think we're in sort of this price discovery period where the market is trying to feel out whether treasuries as a safe haven asset will continue to play that role in financial markets. Things are different. Obviously, the liquidity situation is different, but more importantly, the macro backdrop is changing in a dramatic way for the foreseeable future. And that might mean a higher, what we call convenience yield to hold these treasuries.
Good morning, I'm Bloomberg Surveillance, commercial free for you to get in this moment that we're in. We have an improved tape. I really want to emphasize that. We were negative 100 on futures, now negative 36. If it's 53.03. A special moment for Global Wall Street. Ira Jersey of Bloomberg Intelligence with us in joint conversation with Edward Al Husseini of Columbia Threadneedle, wonderfully expert on this. If he survived the winters of Colgate University, he could survive this financial crisis. Paul, I'm just going to parse this headline quickly here. The EU, they've approved tariffs to hit around 21 billion of U.S. goods in retaliation for the 25% duties President Trump imposed last month on the black steel and where that includes Duke merch, like the China tit for tat we just had. And Ira, stay with us. I really want to continue this. This is really wonderful. We had commercial paper. Understand trust barometer. And we had LIBOR OIS. I remember the Thursday it went out to 4 standard deviations. It was this LIBOR, like in the movie Mary Poppins, where Dick Van Dyke's in the bank and they're trying to figure out the bank rate to do railways to India. LIBOR worked. We got rid of it. Huge debate. Now we have this spread, that spread, that spread. Do you have a real handle on what the trust is within the banking system right now?
I'm going to say 2 things. One, we can monitor these spreads in real time, and there's a whole family of them in terms of how markets finance themselves at the very short end. That's where the commercial paper lives. That's where SOFR lives. And they change very quickly. And in a crisis environment, they will widen very quickly as the balance sheet capacity in the market declines. And what we're seeing right now is the slow degrading of balance sheet capacity, and the theory is going to fall off a cliff.
Ira, comment on that. I mean, Ira, you're like the #1 guy on the planet on this. I mean, has SOFR been a good substitute for the glory of men in tuxedos in London calculating 3-month LIBOR?
Well, it's much different, right? So
yes.
when the ARC, the Federal Reserve, like the Alternative Reference Rate Committee, that's what the ARC stands for. When they got together and they were looking for an alternative to LIBOR, one of the mandates was we need something that's going to be liquid, even in times of crisis, even when you have discontinuous markets in some places. And the repurchase agreement market was the one that everyone agreed was probably the most likely to be a continuous market, even in times of financial stress. And you're seeing that today. So certainly, repo markets are less liquid, but they have been continuous. You still have $2.6 trillion of repo that went through the SOFR in the last couple of days. But the rates have gone up a little bit. So it's not a perfect substitute for LIBOR because it doesn't take credit spreads into account because it is treasury repo. But it does give you a sense of the liquidity of the market. And I think that the fact that you've seen SOFR and repo go up a few basis points is a sign that, that's the yellow flag that we were talking about earlier.
Email in if you understood 32% of what I said there. Folks, this is great. We rarely do this, but in a time of crisis, we have heavyweight pros with us this morning.
When it comes to modeling bond portfolios, especially multiple duration and different types of bonds, they're company bonds or sovereign bonds, it can be really complex. It's actually more complex to model a bond portfolio than it is than a equity portfolio. Now, right now the yen is weakening a little bit intraday right now. So we're at 144.77 from the overnight low. The overnight low was 143.9. I just want to make sure the audience remembers, write this down. If the yen breaks 140 relative to the USD, if it strengthens and the USD to the Japanese yen breaks 140, and it's starting to trade 139, 138, 120s, whatever, that's a major sign of problems in the financial market. And you're already starting to hear that other weak countries in Africa need IMF bailout. Now, when there's going to be international stress, you're going to see other global markets selling off. That is a risk indicator, all right? That Japanese yen, if it breaks 140, big problems. And if the equity market in the United States for the S&P 500 breaks 4,810, then the next support level is going to be 4,500. Now, if trade negotiations stall or just blow up, all right, most likely we're going to be going down to levels like 4,100 on the S&P 500. If trade deals start to stabilize and there's some negotiations with major partners like Japan or India, right, or some partners in Europe or the UK, then we're probably going to consolidate at in between the 4,500 and the 4,810 mark. All right. But there's probably some other dominoes that will fall internationally because of the stress. And how that all plays out is hard to model. And that's why we're going to just do it day by day and take a look at what's the structure of the price curve that is starting to emerge and what the VIX risk indicator shows, what the currency trades are showing, what oil's showing. All right. But right now, there's a lot of stress in the market. The VIX right now is trading at 52. 52 is very high. You want VIX at around 16, 14, 12. When you're in the 50s, that's a big problem. All right. So I want to pivot back. I want to pivot over to CNN. They were interviewing John Bolton on Anderson Cooper. This is their take on the tariffs. Okay, so I want to show different perspectives on what's going on here. Okay.
And it urges the White House to, quote, immediately correct its wrongdoings, end quote, warning that China's response if American tariffs stay in place will, quote, continue to the end. Perspective now from former UN Ambassador John Bolton, who served as National Security Advisor in the first Trump administration, Richard Quest, CNN business editor at large and anchor of Quest Means Business. So, Ambassador Bolton, I know you're an economist, but just from a strategic perspective, do you think China is going to blink and try to cut a deal with the White House?
It certainly doesn't look like it, but what Trump is doing is a huge opportunity for China worldwide. These tariffs are a form of economic illiteracy. Trump has no idea really what he's talking about. He doesn't understand how tariffs works. He has said as recently as a few days ago, he views trade surpluses and deficits as like a profit and loss statement, which they certainly are not. So what he's doing has put us in a very vulnerable position and probably in the worst position possible to go after the real country problem in the international trading system, which is China. Instead of taking on the country that's stolen our intellectual property for decades, among other things, by gathering our allies together, all of whom also suffer from China's intellectual property theft, and engaging in concerted action, we're at war with our largest trading partners while we're about to go to war with China as well. It simply makes no sense, and it's just sad and depressing that more Republicans haven't stood up and said that. This is illiteracy.
Richard, what does it look like for Americans if the price of everything imported from China effectively doubles overnight? How much of that gets passed on to consumers?
Well, the ambassador calls it economic illiteracy. I've called it economic vandalism, because if you have 104% tariffs, what the effective thing is going to happen is two things. Number one, things simply won't be imported. It's too expensive. It's become unprofitable, uneconomic. Things simply will not be
Don't
imported.
worry about the tariffs. Don't worry about the tariffs. That's not the big move that you got to worry about. The big move is the sell-off in the treasury market. You got to pay attention to that. That's huge. Because I'll tell you, world wars are catalyzed because of stuff like this.
Christmas toys that just won't arrive. But there are many things now that, as the Chinese have reminded the United States in a commentary a couple of days ago, there are many things that the US only gets from China. Certain electronics, certain parts of manufacture, they can only now be received from China, and the US is going to find that they're going to be left without. They're going to be trying to source it elsewhere. And one point to remember, Anderson, tonight, oh yes, you've got the 104% against China, but you've got the 24% against Japan. And of course, there's the 25% autos. You've got the 15% against South Korea, and you've got the 20% against the European Union. So wherever you look at midnight tonight, the global trading network is about to come under the most ferocious strain that it's seen, certainly since the Second World War.
Ambassador Bolton, I mean, the first Trump administration...
And this is the reason why I said to make sure that you watch the Japanese yen. And if more stress starts to build up and more countries are starting to have economic problems, then that yen is going to blast through the 140 barrier, and it might even trade into the 120s or lower.
Called madman theory, that when it comes to national security, the idea that adversaries won't challenge the president if they think he's unpredictable. Does it make any sense to you to apply that same philosophy to allied trading partnerships?
No, look, the madman...
Shenyun brings 5,000 years of culture to the world stage.
No, look, the madman theory has a rationale behind it. When Richard Nixon recommended it to Henry Kissinger dealing with China, because Richard Nixon was well known as an anti-communist. He had made his political reputation on that. So when he told Kissinger to basically say Nixon might use nuclear weapons in the particular context they were talking about, use them against China, it made sense because Nixon believed he was a hardline anti-communist. Trump doesn't believe in anything. He's simply transactional, anecdotal, episodic, and that's what these tariff policies have looked like in their rollout.
Richard, the New York Times described the market decline as on par with the early days of the COVID-19 pandemic.
Anecdotal, episodic. The guy's been saying this since 1980 on Oprah of what we need to do, and he actually did it. Episodic? Really? The real world is the real word for Bolton is that Trump has been very forthright on what he has wanted to do for decades, like more than, since the 1980s. Literally, he was interviewed on Oprah in 1980, and he talks about these sorts of things that we need to do to bring America's manufacturing prowess back. Now, what is interesting is he was seeing this problem before NAFTA even came into fruition. NAFTA just supercharged it. So he's very consistent, not episodic. Wrong word, Bolton.
Signal that investors view this policy decision by the president as equally volatile as a deadly new disease with no known treatment or cure sweeping across the globe?
I think there's a similarity because in both cases we didn't know how it was going to turn out. The only difference being that in one particular case, in COVID, there was this massive effort towards sorting it out, and we had a vision of where we wanted to go. And everybody seemed to be moving in the same direction. In this particular case, because we don't know what the end game looks like. We don't know. You see, even if, just for argument's sake, let's say the tariffs all come down to zero. Just humor me. They all come down to zero. You've still got the non-tariff barriers which would prevent the US from getting into new export markets, and you've got the offensive behavior that the US has put on its allies. Elizabeth Warren was talking about it a second ago, and the ambassador knows. You can't just have a trade policy in isolation. Not when you've told Canada you regard them as the 51st state, and you've offended the EU talking about Denmark and Greenland. Eventually, all these strands come together so that you don't have allies. You have people wanting to do a deal. That's pure, unadulterated self-interest. But what you don't have is the commonality of view and value that will get you over the line.
Ambassador, I mean, in the long term,
Please help support my work by getting the great products that I offer. It's going to help your health. These are products that I use. It's part of the health protocol. I'll be talking about it throughout the show, and also how to trade in markets. But get these great deodorants. It's for males and females. You can get it in citrus or in peppermint, lavender, and tea tree. I partnered up with Rainbow Herbals, and what we did is we developed this dual-purpose bar, this dual-purpose deodorant bar. You use it as a deodorant every day, but it'll also help to detoxify your body. It's made from essential oils from the Himalayas, extremely high-quality ingredients, no aluminum, no baking soda, all natural. Get a couple bars for your household, help support my work, and help support your health. It's a win-win situation. Use discount 5 and you get $5 off any order. If you spend $150 or more, you will get a free gift until supplies last. Please help support my work by going to my store, getting the great products, and stacking them the way I'm telling you to stack them. And what will happen is you're going to improve your overall health, slow down the aging process, and improve your immune system. So please go to my store, the-studio-reykjavik.com. The link is in the description of this video and all my videos.
the breaking of relationships that have taken decades to form internationally? Is there a long-term cost on this, whatever the short-term impact is?
I think we've incurred a lot of the cost already, not just because of Trump's tariff policy, but what he's done on Ukraine, what he's done to NATO, what he threatens to do to NATO. I can see all over the world, from Europe to the Far East, the decades of effort by many, many Americans in government and out of government to build up relationships of trust, of good faith, of reliance, of dependability, that the United States deserves to be the leader of the world to protect its own interests, not because of economic relations, but because people trust us. They don't trust us anymore. And it's going to be very hard to rebuild. This is the wide open gap that we have left for the Chinese to drive through. And I think they're moving along. Trump simply doesn't grasp any of that. He doesn't understand alliances as long-term propositions. He just sees them as one transaction after the other. And that's not the way they work.
Starting off tonight, Senator Elizabeth Warren, Democrat of Massachusetts, who sits on the Finance Committee, is the ranking member on the Banking Committee. So with these tariffs about to go into effect in China overnight, around midnight, how much more economic pain are we all facing?
Well, we're facing a lot of pain. And
we just have to make our chatbot more agentic. Whoa, future John here. You're here too? Yeah. And thanks to CX1 Empower, things are going to get way less.
Well, we're facing a lot of pain. And understand, we look at the Dow Jones and the S&P because those are easy numbers to track. But the reality is this is already being felt by families, partly because prices are going up. We already see the soft data showing us that there are a lot of companies out there saying, you know what, we can tell what's coming. We're just going to raise our prices now. And then if we need to raise them more later, we will do that. The head of the Fed said on Friday that this kind of across-the-board tariffs means prices will go up for families. We'll see more inflation.
But the problem is that Elizabeth Warren doesn't say that for the last 35 years, we've destroyed our economic clustering because we've been shipping jobs overseas. And when you destroy the economic clustering, you lose tier 1 suppliers, you lose tier 2 suppliers, you lose tier 3 suppliers, you lose peripheral industries. You destroy the economic clustering. That means that the economic viability of areas of the United States go down. But Elizabeth Warren is more worried about how cheap your spatulas are at Walmart, like a typical Democrat.
Employment is likely to go up as well. So there are going to be people who lose their jobs. We talk about this recession, Goldman Sachs, JP Morgan. Oh, I think that all of the signs, the economic signs, are flashing red. And remember, we lost 700,000 jobs a month in the last recession. Recessions are not just things that happen on Wall Street. They are things that happen family by family by family. And there are people who never recovered from it.
Where were the tears for the last 35 years, Elizabeth Warren, on all those jobs that went overseas and all those small mom and pop shops that closed in those small towns? And those towns shrank so much that people just moved away. And there are lots of kind of like ghost towns now in the United States. She didn't say anything about that, but she put money in multinational corporations that benefited from globalization by playing the arbitrage, going to a region that has less regulation, lower cost labor to ship cheaper goods to the United States. And she benefited, and she's a multimillionaire now.
Long-term damage done to just the credibility, the confidence, the stability of the United States.
Boy, you have put your finger on it. Yes. Donald Trump is demonstrating that so long as he is president, the United States is not a reliable trading partner, but also not a reliable ally. And domestically, think about
what it is with Trump being president, he's saying globalization is being stabbed to death because it's only benefiting mostly to the well-heeled K Street lobbying group.
These tariffs that are changing by the day. People are saying they're on, they're off, they're on, they're off, they're off, they're on, right? Who makes investments here? Who wants to say, I'm going to build a factory that'll take me 20 years to recover my costs without having some general sense of what it's going to be like and the ability to sell your goods overseas? You cannot plan. You cannot plan. And in fact, what often happens is people start laying off, hoarding their cash under these circumstances. That is the reason that it is now time for Congress to act. We have the power in the Senate and the House.
No, they don't, because what they're going to do is they're going to try to create a bill, and then Trump's just going to veto it. But let's just see what she has to say.
To roll back the authority that Donald Trump is using, it's a simple resolution. It will go to the floor. Senator Ron Wyden and I have introduced it, or will be introducing it the next day in the Senate.
You need how many Republicans?
Well, we only need a simple majority to get it passed. We may need more than that if the president ultimately vetoes it. But you know, this is the moment for Republicans.
Really?
This is
Let's get to brass tacks here, all right? Where the rubber meets the road. You think Trump is going to actually pass a bill from Congress that says you can't do the tariff war against China? Get fucking real. Get fucking real. You know why she's worried? Because she's got money positioned for globalization. And she's hurting. She's hurting. She may not be able to buy food.
right in front of them. Either they can continue to bend a knee to Donald Trump, or they can stand up for the people back home who are getting hurt by Donald Trump.
I have a W-2 and a 1099, and I spoke with a TurboTax expert who helped me file with confidence. Doing these drawings is hard, but filing with TurboTax is easy.
All righty, so let's go back to Bloomberg here.
You have to have a a long-term view. It's tough to follow Gina because she was so scary on the previous segment. But
I'm going to go to Fox News. They published 3 hours ago with Stephen Miller.
We bring in White House Deputy Chief of Staff for Policy, Stephen Miller, who has just met with the president a short time ago, something that he does quite often. Stephen, good to have you with us today. Thank you for being here. So what is the reaction in the White House to the fact that this noon deadline for China to begin some sort of discussion came and went? Will we now see 104% tariff against China?
Well, very simply, this is about the President of the United States defending the core national security interests of the United States. China has hollowed out our defense industrial base. This is very important for your viewers to understand. America cannot create the essential materials it needs to ensure security into the future because China has stolen those supply chains. So America, but not just America, our allies around the world are dependent on China for our own defense, for our own economic well-being. That is the national security threat the president is responding to. And he's going to take whatever actions are necessary to ensure that he can keep America safe and that we can live in a country in which American workers and American factories can supply all of the materials and needs for our national security and defense.
Is there any indication that they are about to come
Now
to
think
the
about
table?
this. Now think about Elizabeth Warren and Bloomberg. They don't really focus on some of the next steps of this. You know, the second and third degree separation of the tariffs. If the bond market starts to sell off, if countries around the world, especially in Asia and China specifically, starts to have economic hardship, President Xi is going to be worried about being overthrown by the PLA and the CCP. And to galvanize his nation, he may feel as though he has to make his move on Taiwan, with the United States Navy so focused on the Middle East, it doesn't have enough strike groups in the Pacific to be able to counteract that activity. So President Xi might find it opportunistic to actually launch an attack on Taiwan. This will lead to World War III. That's the big picture here. So if we have to depend on China for many of our products, and we have to depend on other foreign nations for a war effort, that doesn't sound like a really good idea. So we need to rapidly move our manufacturing base, rapidly reduce our reliance on China so we can backstop Taiwan.
They dug into their public comments.
I believe that China will be forced very soon to come to the table for the simple reason that China's economy is completely dependent on its exports to the United States and to the West. China has built its entire industrial strategy since its entrance into the World Trade Organization on being able to sell highly subsidized, currency manipulated, dumped goods into U.S. markets. It is an industrial strategy from China to product dump strategically to take out American steel, to take out American aluminum, to take out core American defense industries and defense needs so that we're reliant on China. And what's happening here is that China is now discovering for the first time that they have met an American president who is not going to be intimidated, who's not going to be bullied, who's not going to be coerced, who's going to stand up for our essential security needs.
Yeah,
China needs us because of their export dependency on China.
It's going to be very interesting to see how this plays out. And I thought what Jameson Greer said in the introduction to our segment, which I'm not sure if you had a chance to hear, but he said, the Chinese approach, which has been that we're going to retaliate. And then he said, the president has recognized this, that China is the holdout. and he wants to focus on other partners. And this is what I find really interesting, and I'm curious what you can share about this strategy. Because if you reorganize the trade relationships with so many of our larger partners, Canada, Mexico, Japan, all of these different entities who in varying degrees have agreed to some sort of discussion at least, does that isolate China? Because we know that China has found other routes to go through, Vietnam, Cambodia, and will these trade agreements mean that China becomes even more isolated?
Yes, so this is part of the brilliance of the president's strategy. If you look at those original reciprocal tariff rates that were announced, who got hit the hardest? China, Vietnam, Cambodia, Thailand. That's the China sphere of influence. The true trade deficit with China is $1 trillion a year because China is shipping all of its goods through other countries like Vietnam, like Cambodia, like Thailand, but also it's sending its supply components through the EU as well, that they making it into our markets, through Canada, through Mexico. China is the destabilizing force here for the entire system of global trade. And everyone's put up with it, Martha, everyone. The EU's put up with it, Mexico's put up with it, Canada's put up with it, Japan, Korea, everyone. One man, one president has said, we are not going to let China extort, dominate, and control our entire system of international trade through cheating. All those factories that have closed over all those years because of China's cheating, someone is actually finally saying we're going to bring those factories back home. And yes, as you pointed out, making strategic trade deals that must be fair, again, to the American worker, that must reduce the trade deficit, but making those strategic trade deals with our trading partners around the world will isolate China further, and it will force China to come to the table and finally redress these decades of grievances.
All right.
Let me ask you this.
Now, what I want to do is I want to just give a market update here. The S&P 500 is trading now at 5,025. The VIX index is below 50. It's trading at 49.48. The Euro USD is trading at 1.10. Oil's trading at $57.82 a barrel. BITO, which is a long ETF for Bitcoin, is trading at 1686, and the USD Japanese yen is trading at 144.9. Remember what I said, VIX elevated, especially in the 40s and the 50s, problematic. If the yen breaks 140 and is trading lower, that's a problem for international stress. Right now, we have a support level that has been tested on Monday at 4,810 for the S&P 500. If that holds, all right, which I suspect that it will break, but if it holds, then we saw the bottom in trading for the S&P 500 on Monday. But there's only a 40% chance that it will hold. And it will probably be retested and it'll break. And if it breaks, it probably will go down to 4,500 for the S&P 500. All right. But you only have a 40%, only about a 40% chance that it will hold for 4,810. Before we continue on with Stephen Miller, please help support my work. Where else are you getting specific points of support for the S&P 500? Nobody's telling you that. Nobody's telling you that, other than Dr. Paul Cottrell. Please go to my store, the-studio-reykjavik.com. Get the Max 35 or the Max 14 or Cleanse, which is 30 parts per million. They're at different price points because, people, need optionality because of their affordability. But by taking Max 35 Cleanse or the Max 14, you're going to improve your immune system. How do you take it? Take a teaspoon of it a day, swish it in your mouth, gargle, and about 20 seconds, 30 seconds in, swallow. It's going to help with your immune system. It's the first pillar of a 4-pillar protocol that I have. The first pillar is the Max 35, Max 14, or the Cleanse. Take that every day. That will boost up your immune system. The second pillar is C60. It's going to soak up free radicals. The third pillar, turmeric, ashwagandha, and lignans, boosts up your immune system.
And the fourth pillar of this core protocol is the Boomer Boost that boosts up your energy levels and your metabolism. It's a great way to start your health protocol in your stack, and you customize it based on the different systems that you want to improve. So please go to my store, get the Max 35, the Max 14 or Cleanse, use it the same way, very high quality products. Please help support my work, and better yet, support your health. If you follow my lead on this, you're going to improve your health. It's a holistic approach. It's not just supplementation. It's proper diet, proper exercise, filter your water, stay away from processed foods, the 4 modalities of exercise, resistance training, cardio, stretching, balancing, really important, proper sleep, spirituality or mindfulness, learning new things. These are all very positive for your body to heal, and it's a holistic approach. So please go to my store, the-studio-reykjavik.com. If you spend $150 or more, you do get a free gift until supplies last. Use discount 5 and you get $5 off. If you buy an anti-aging box or a longevity box, it has a built-in discount, and you can put the discount 5 on top of it. So it behooves you to actually buy an anti-aging box or a longevity box that's been curated in such a way to target certain systems, and it's cheaper for you. These products that I have on my store are very high quality, extremely high quality, and you stack it the way I tell you, you're going to get healthy.
There's an interesting group of people, including Bill Ackman, who did not support President Trump in his first term, but really came to support him over the course of the last election. And they're making their feelings known a bit on social media about how they believe this should be navigated. Obviously, they're not the president of the United States, but this is from Bill Ackman talking about his support for President Trump and his advocacy for a pause. He says, "Some have misinterpreted my thoughts on tariffs. I'm totally supportive of President Trump using tariffs to eliminate tariffs and unfair trade practices for our trading partners and induce more investment and manufacturing in our country. I am advocating for a 30, 60, or 90-day pause before the tariffs are implemented tomorrow to enable negotiations to be completed without a major global economic disruption, which will harm those vulnerable countries, companies, and citizens." And he goes on to say more there. What is your response to that, Stephen?
Well, my response to that in part is, why is it only described by some of our friends in Wall Street as a crisis when we correct and we answer a generation of systemic abuse against American workers? Martha, was it considered a crisis when all of our steel mills were shuttered? Was it considered a crisis when American automobile manufacturers went from dominating the entire global trade in autos to being shrunk to the point of barely having any exports around the globe at all? Right? Was it considered to be a catastrophe, a calamity, when the entire Rust Belt was frozen, its industries ripped apart? Was it considered to be an economic catastrophe when we could no longer build a ship in this country, could no longer build an airplane in this country, could no longer build a helicopter in this country, when we couldn't even provide for the basic means to defend ourselves, couldn't even build a Coast Guard cutter in this country, that our supply chains, our industrial base has been so eroded? We have a president who is now actually taking the necessary action to bring back American industrial power and might so that we will have real hard deterrence in this country, real hard strength in this country, and the middle class workers, the families, can earn an income they can retire on. They can retire with dignity.
I would imagine that you would like to hear
their whole family.
And not just that. Just look at the younger generation, all right? The boomers and Gen X had more opportunity when they came out of high school or college to be able to start their career, start a family, buy an affordable home. Maybe it's a starter home, but at least they started building up equity. And they had a decent job. That was all pre-NAFTA. When NAFTA came in, and it slowly eroded our manufacturing base. And in 2000, favored trade status with China. It further eroded our manufacturing base. So you had 35 years of this problem of breaking apart the economic clustering of the United States.
And now you have millennials, you have Gen, Y, that when they get out of high school and college, they can't build families because they can't find good paying jobs. So someone says that this tariff war is bad for the economy. What about the younger generation not being able to find jobs, to build families, to build equity, to buy homes? The opportunities aren't there. I know for a fact, because I see it with my own eyes, there are people that are graduating from Harvard College, all right? They're having a hard time finding jobs in New York. Harvard College, one of the best institutions that the United States has. And they're having a hard time finding jobs in New York. Now, maybe it's because they want to stay in New York and, their particular discipline, there's not a lot of hiring for them. That could be. But the problem is that you have elite students and non-elite students in different schools finding it hard to get work. I know of a grad, all right, where they ended up getting a degree in computer science from Carnegie Mellon, undergrad, ended up getting a master's in artificial intelligence, getting a job, but can't afford to be able to live on their own. So they have to live with their parents. All right, that's Carnegie Mellon. In AI, master's degree. I'm telling you, the jobs for the younger generation are a lot harder to obtain. And if they do get a job, it doesn't pay enough to be able to, the cost of living is so exuberant. It's so elevated. It's so excessive in terms of costs. It's a big problem. And you go down to the core of what happened. It's because the economic clustering was destroyed in the last 35 years.
Maybe take a tone that thinks about some of those people a little bit more.
Yes, can I think about what people have suffered over the last 20 or 30 years?
Yeah, no.
And by the way, we are on the verge now, because of President Trump's strength and leadership, of fixing our entire global trading system. And this is an astonishing fact. Did you know, for example, that we have a $50 billion trade deficit with Japan alone in automobiles? Here's the country we protect. Here's a country that we defend. Here's a country that's an ally and partner of the United States. Why is it that we have a $50 billion automobile deficit with Japan and another $50 billion automobile deficit with South Korea? Our troops are stationed right now in South Korea, keeping them safe and free. Our troops, our soldiers, away from home, away from families in South Korea.
This goes all the way back to Nixon. And that is willing to open up U.S. markets, but it was really supercharged in the 90s, in the 2000s. But open up U.S. markets for foreign goods, as long as they help the alliance within the Pacific Rim against Russia and China. And depending on what era you're looking at, going all the way back to Eisenhower, depends on how we were aligning ourselves with our allies to push against Russia or push against China. Because there was a time where we were more focused on Russia and not so much China, and we aligned with China. All right? But the point here is that we used our open markets for military foreign policy. And it has eroded our manufacturing base, and it has reduced our ability for the younger generation to be able to build the skill sets they need for a long-lasting, prosperous career. All right? People in their 20s could buy homes when you were a baby boomer or when you were a Gen Xer. You can't do that now for the millennials. It's impossible. Absolutely impossible. The vibrance of the ones that are coming into the marketplace after high school or after college, the viability of getting a good paying job is radically diminished. Radically diminished. So you're starting to see at these the higher institutions like Harvard, where they're actually trying to build these SIGs, what's called SIGs, like a special interest group, these SIGs to be able to help mentor some of these new grads into the workforce. They have a Harvard degree. They've spent, I don't know, like $400,000, and they're having a hard time getting a job in New York. Now, some of that is blackballed because of the, because of the whole issue with the fiasco with the whole Palestinian protesting and all that. That's the financial side, all right, where they're blackballed. But you're talking about other industries where they wouldn't be blackballed, and they're having a hard time finding. The reason is that they're not hiring. And New York is a center that's extremely high cost. Extremely high cost. So, people are going to have to move away and start their life somewhere else in a lower cost area. But if you have a very, very technical degree, it may not translate to that new region very well if the economic clustering isn't there. So people need to pay attention. You have Harvard grads, and there's even news where the Harvard MBAs and even MIT MBAs are having a hard time finding work. So there's a change, all right? So NAFTA, for the last 35 years, has destroyed the economic base, so it's harder to find jobs. But not just that, you add in AI. You add in, do you really need as many employees anymore? Now you are starting to see the decoupling of labor and capital, where you have grads coming out of Carnegie Mellon, coming out of Harvard, coming out of MIT, and there's about a 20% of the student base that can't find jobs. And you have an economy supposedly at low unemployment with 4.1, 4.2%, whatever it is right now. I think it's maybe 4.3 right now, but it's still low. And you have grads coming out of MIT with an AI degree that can't find work. I'm telling you, the labor and capital, because of AI, because of machine learning, is decoupled. That's a bad thing. But just put aside the AI issue. The economic clustering was destroyed because of globalization, and it was done on purpose.
$50 billion automobile trade deficit with that one country alone. President Trump is going to fix our global trading relationships. And at the same time, he's going to work with Congress to make America the manufacturing center of the world with the lowest taxes, the lowest regulations, and the cheapest energy.
Stephen, we're going to talk biotech coming up in this hour, and also U.S. Steel. So, two big elements of the trade relationship with China and with other countries around the world where we want to be at a greater advantage. Stephen Miller, thank you. Always good to have you with us.
Hey, Sean Hannity here. Hey.
So I'm 100% backing Trump on this. Don't bet against America. In the long run, she will always prevail, but you got to go through the pain. Please go to my store, the-studio-reykjavik.com. Get the olive leaf extract. This is a dual purpose product. This will help with your immune system and your cardiovascular system. It'll bring down inflammation at the systemic level, which will help with your immune system, and bring down inflammation at the vascular level, which will help prevent further plaque buildup. Very important for your cardiovascular health. And it will help to control your lipid profile, bring down LDL, and increase your HDL levels. Less LDL, less oxidized LDL. less oxidized LDL, less plaque. It's really simple. Please go to my store, the-studio-reykjavik.com, get the olive leaf extract. Take it every day. And get this very easy to digest multivitamin. This multivitamin has the cofactors you need for proper enzymatic activity. That means that your cells are going to perform better, and it's a great base, great foundation to build a stack on. So take this multivitamin. You can see on the screen the label, but go to the store, the-studio-reykjavik.com, take a look at the label. It has the ingredients that you need to start a stack, and then you build off on this. It's very important to take the multivitamin and build on top of it, all right? A great stack would be the multivitamin, so you're helping with your enzymatic activity and the processes for your cell, but you're also helping with your immune system and your cardiovascular system by stacking it with the olive leaf extract. So you can customize these stacks, all right, based on what system you want to target. So, but it's important to be taking a probiotic and taking a multivitamin as the base of your stack. Please go to my store, the-studio-reykjavik.com. Make sure you use discount 5. And if you spend $150 or more on an order, you do get a free gift until supplies last. All right, let's go to Bloomberg here.
Among those who died was beloved Dominican merengue singer Ruby Tariffs, who was performing on stage when the roof collapsed.
Former Major League Baseball's Octavio Dutel and Tony Blanco were also killed. Police in Virginia say all suspects are in custody after 3 people were shot to death in a shooting at a townhouse complex just outside Fredericksburg. They say there is no threat to public safety. Pushback after a student, conflicted over doing the right thing, was suspended for the choice he made. CBS's Jim Crisula.
A judge in Virginia Beach, Virginia, said it was, quote, appalling that a school suspended a 6th grade student for waiting to report that another student had brought a bullet to class. The judge ruled in favor of the child's mother after she sued St. John the Apostle Catholic School for breaching its contract with her when administrators suspended her son for a day and a half last September.
Among this year's additions to the Library of Congress National Recording Registries. Debut albums from Chicago, Tracy Chapman, a Roy Rogers and Dale Evans song is on the list too. And the oldest entry among them, the Hawaiian Quintet's recording from 1913. Dow is up 191. This is CBS News.
All right, what I want to do is now let's go to Fox News dealing with the trade war escalation.
Honestly, no one wants to think about HIV, but there are things that everyone can do to help prevent it. It starts with getting tested regularly.
This is a Fox News alert. New tariffs are going into effect just after midnight, including a 104% duty on China. That's 20% over fentanyl trafficking, 34% in reciprocal tariffs from last week, and an additional 50% added on Monday after Beijing announced a 34% counter tariff on U.S. goods.
Yeah, right now it doesn't look like they're backing down, and the U.S. is also now enforcing reciprocal tariffs on imports from dozens of countries. The president says America is in the driver's seat, and the Japanese and South Korean officials are set to fly in to try to cut trade deals. By the way, I think Italy's coming in next week.
And the president says that the U.S. is taking in $2 billion a day from the highly tailored reciprocal tariff deals.
All right, senior White House correspondent, the highly tailored Peter Ducey joins us right now. From
Very
the
bespoke.
Hello, Peter.
Good morning, and promise made, promise kept, right? President Trump dared China to keep their reciprocal tariffs up, and they did. And now, as of midnight, the new tariff on China, the biggest in the world, is 104%.
Additional tariffs on Chinese goods are in place effective midnight tonight at 104%. Until they make a deal with us, that's what it's going to be. I think they'll make a deal at some point. And don't let some of these politicians go around saying, because I'm telling you, these countries are calling us up, kissing my. They are dying to make a deal. Please, sir, make a deal.
The president continues putting out the word that he and Xi of China have a good relationship, as the Chinese are still warning they'll fight this to the end.
He believes China has to make a.
Why did it shut off? I don't understand why sometimes the audio dies. Hold on. Let me just fix this really quick.
President, when America is punched, he punches back harder.
Vulnerable Republican lawmakers are worrying this is putting them in a tough spot, to the point that for the first time in U.S. history, in a congressional hearing, there have been threats made to the U.S. trade rep. Who's threat?
You can certainly always talk to me, but
Are you at the tip of the spear?
Well, I'm at the tip of the spear for certain.
Oh, come on.
Again, it is the final decision maker on all of these things.
This is bullshit.
About the markets in the meantime. Back to you.
So, Peter, I saw the Secretary of Agriculture last night say, the deals are imminent. We see that from Besson. Do you think that's going to be backed up by, or do you sense that's going to be backed up by the president today? I mean, we got a few queued up, ready to go. Vietnam, we know Japan, we got one of the first couple was Cambodia. South Korea came through. The EU has a plan on the table. Do you sense that?
Saying something more positive about doing deals today?
It's possible because it's been a week since Liberation Day, and so at some point they do want to show progress from these astronomical tariffs that have been put in place, but they are giving themselves some time. Scott Bessent said that they had April, May, and June to get some of these things done, and even just saying that giving that 2-month window, the markets like to see that, and that is what drove the rally yesterday. And so it's possible today, but also very, very hard to predict.
So, Peter, for the most part, over the last 72 hours, there have been conflicting statements from the White House. Some people, like Peter Navarro, had said that the tariffs are going to be permanent. Other people, Scott Bessent, said we're going to make a deal and stuff like that. And then things started working around. The one exception to the rule is Elon Musk, the world's smartest guy, we've heard the president say. He said that the tariffs are a dumb idea, essentially. And yesterday he tweeted out that Peter Navarro was a moron and dumber than a bag of bricks. I know that comment on X was then circulated to members of the press by people on the president's staff. So it looks like people are doing some backstabbing.
Yeah, we were out and about yesterday, and I did have one of the Musk tweets dissing Navarro sent to me by a couple different people who work at the White House. And it's unclear if that is a bad sign for Navarro or if they just thought that it was funny. Because when Caroline Levitt got asked about this, she said, boys will be boys, and we'll let this play out in public because we're so transparent. I believe it was in Axios this morning in their newsletter, they said in the first Trump administration there was a lot of backstabbing. Right now in this administration there's a lot of front stabbing.
Yeah.
Not a lot, just the really, really sharp knives with Musk and Navarro.
That whole transparency thing, you can circle that word every day.
Yeah.
Thanks, Peter.
Yeah.
Well, Angela, you and I have kind of been saying the same thing about a balanced view on this, and I think someone that our audience respects is Maria Bartiromo. She respects the president's agenda. She understands the market. She understands the working class. She has some thoughts on Jesse Waters. I think our audience would love to hear it. Let's watch it.
It takes about 3 years for a company to fire up their supply chain in America, move the supply chain from Mexico, from Vietnam, from China, whatever, into the United States. The midterm elections are next year. So if the Republicans lose next year and then the White House is lost, then the Republicans are no longer directing policy. So timing is of the essence. We actually need somebody with a spine of steel, a tough man, to actually get companies to recognize these are not just economic issues, these are national security issues. However, timing is tight, and he needs a deal. At this point, we need to hear some win from Japan, from South Korea, from the European Union. The stock market going down is not going to be helpful. It's going to be a big issue, a barrier for President Trump getting the agenda through.
I think this is why Donald Trump is doing all of this in the very beginning of the administration, so that we can see the benefits coming up in the next few months, before the midterm elections, before his term is over. Because once his term is over, if another Republican doesn't win, this all goes away.
Right, but her point is that if this doesn't work out well, the Republicans are going to lose in the midterms. Somebody who said something similar yesterday was Dave Portnoy. He revealed 48 hours ago, he has lost in the stock market route 20% of his entire vast wealth. And he's somebody who is completely behind President Trump. He predicts, he hopes that the markets recover. And if they don't, he says there's going to be a giant blue wave and the Democrats are going to be swept into power in the House and the Senate.
There's just no way the markets are going to recover. They already showed you when there was rumors of a deal from our show the other day, it shot up. And then we heard that China was going to make a call. It shot up. And then at the last minute, we lost about 300 points. So
and then when Peter Navarro
said that so right now the S&P 500 is up. It's trading at 5,016. So the S&P 500 is up 32 points right now. So it's a little bit more than 0.7% or so. All right, let me shift over. But before I do that, please go to my store, the-studio-reykjavik.com. Get the probiotics that I have. I have it in powder form and in veggie cap form. Taking a probiotic is really important as a foundation for your health protocol. Also a multivitamin, so stack it with the multivitamin if you want. But you can take it in the powdered form, which is the way I take it, or in the veggie cap form. Both are very high quality. Take them every day. The reason why, it's going to improve the absorption of your gut. It's going to help with your immune system. It's going to lower inflammation. It's going to improve the communication between your gut and your liver and your gut and your brain. You get lots of benefits. It'll help with your hair, your skin, your nails. But not just that, a good gut biome is going to help you with your overall health. A lot of people don't realize many problems that you may be having chronically are starting in your gut. So please go to my store, the-studio-reykjavik.com. Get the probiotics that I offer. Take them every day. Drink it with filtered water. Or if you're taking the powder, I mix it in soft foods. You can mix it in filtered water. But it's very important to take every day. Use discount 5 and you get $5 off. Okay, with that said, let's go back to Bloomberg here.
For the causes behind the increase in egg prices. Also, one thing I really like about this company, the ticker is COMB, which is something we all need today. But the shares dropped earlier on Wednesday. There was a really big drop. Obviously, now things are so volatile on macro level that a lot of that drop was erased. But for sure, that's a very interesting thing to look at, going to that egg price debate that has shaken the economy. But the company also said Tuesday it is acquiring Echo Lake Foods, a Vermont-based maker of ready-to-eat egg products. So clearly the egg economy is expanding. So that's an interesting name to watch. That's actually scoring small losses today compared to what we saw in pre-market trading.
All right, thanks so much. We really appreciate it, Isisiko.
Okay. What's going on here?
Enda Curran is Bloomberg Global Economy reporter. On the latest with tariffs, I don't know, that's such a broad topic at this point. The latest is that the EU is going to be slapping tariffs on some goods into the European Union. How do you expect this to unfold in the next 24 hours?
Well, we've had so much news this morning, as you mentioned, Alex. China has retaliated 84% now on US goods there. The EU have retaliated and referring to also to US tariffs. So, without getting into the specifics of that, what it means is that all goods coming out of China to the US will now be more expensive. That's everything from everyday goods. Blankets and umbrellas right up to
God, I just wish this speaker would continue working, but it's dying on me here.
Prices, as mentioned, but secondly, there's no hint of an off-ramp just yet, no sign of a immediate round of negotiations. And we had a lot of commentary this morning from Treasury Secretary Scott Bessent making the point they are willing to talk. Lots of governments are coming here to talk to the administration, so that's clearly on the table. He also made it clear, though, that China isn't yet coming to the table for talks, but even allowing for the negotiations that are ongoing, it doesn't feel right here right now like there's any kind of a near-term solution to get us back to where things were on the trade front before April 2nd.
So, and is there a sense here, was this retaliation by China, this 84? A, was it expected that China would retaliate, and B, was the 84% number higher or lower, kind of in line with expectations?
Probably expected that they would retaliate. That's been the language from them. Remember, Chinese Commerce Ministry said this week they would fight to the end. They came out with 84% level. On the one hand, that's a wild tariff level, obviously, just like the US one. On the other hand, you've got people saying, well, they didn't go to 104, it didn't fully match the US. Maybe they're leaving some daylight room there for negotiation. But either way, we're clearly now in pretty much uncharted territory in terms of modern trade between the world's big two economies. Lots of analysts out there warning about how this is unsustainable. Obviously, it will lead to a slowdown in trade between both. And obviously, it will drive up prices and slow growth for both. Prices more for the US and slow down China's economy. So, I mean, moving feast is a lot to get people to get their head around in this one.
A big tool here was a potential devaluation of the yuan. I mean, looking at that chart yesterday, when you had dollar yuan on an offshore basis on the highest level on record, it was unbelievable. How low can the yuan go without causing major disruptions?
Well, that's right, Alex. It's a tricky one because they don't want a disorderly weakening either, as we wrote out of our colleagues in Hong Kong and Beijing this morning. On the one hand, they are letting the yuan to weaken. The idea there being that it will help their exporters, give them a little bit of a cushion. But, you can try and say if you let it weaken too far, people want to get that money out of China, it won't make an attractive place to invest, so you get the risk of capital flight, that's one side of it. You also have to think about diminishing returns. You can weaken your currency, but if the demand isn't there, people are worried about slowing trade. If the US consumer doesn't multiply as much, demand isn't there, cheaper currency won't do that much for your manufacturing base. Anyway, so to be expected that they would do this, they're trying to keep it orderly. To your point, it's a big question about how far they think they can push it.
All right, and we really appreciate, thank you so very much, Enda Curran, Bloomberg, a global economy reporter, a very busy man right now, joining us. All right, coming up, Eric Edelberg is Bloomberg Intelligence Chief Mortgage-Backed Security Strategist. Remember when mortgage rates dropped for a second?
Yes.
Yeah.
What happened?
I don't know, but that's not going to work out very well. I'm Christina Hoover, is Chief Global Market.
He's one of the perfect people to talk to about the move that we see in the Treasury market. What is actually going on? And I'm really curious about the 10-year auction today, Paul. Will it fail?
I know.
Well, that is going to be, the Treasury market's going to be really important to watch. All right. For the ones that are watching the dashboard, I have a ticker in the watch list called TN, and that's the 10-year note, Treasury. That's in price, not in yield, and that's trading down by 1.020. All right, so it's trading at 112.3. Now, once I see on the screen the actual yield conversion of that conversion yield is probably around 4.3% or so. Now, the S&P 500 is trading at 5,000 right now. It looks like there's a little bit of a bounce off of the 5,000 mark. So 5,000 is a barrier for intraday. VIX is trading at 50, still elevated. The Euro USD is trading at 1.10. Oil is trading at $56.88 a barrel, and BITO is trading at 16.87. And the USD Japanese yen is trading at 144. I'm very concerned about the Japanese yen trading below 140. All right,
Okay, let's go to Times Radio. They're talking about President Xi will dismiss any U.S. trade deal despite Chinese economic downturn. So this looks like a game of chicken between the United States and China.
As clearly demonstrated during the 3 year of COVID lockdown, they could shut down the whole economy as long as at the end they would toss some morsels of food to people in their locked-in apartments, and they can manage. So in that sense, I do think the mandarins in Beijing believe they can drag this on as long as they want because they don't have the same system here.
The US has confirmed its combined tariffs of 104%.
They're making a bad mistake trying to play chicken with Trump. Bad mistake. Please go to my store, the-studio-reykjavik.com, and get the toothpaste. This is a structural nano silver toothpaste that will whiten your teeth, freshen your breath, help with your gum line, reduce inflammation at the gum line. Good oral hygiene is really important for your vascular system and for your valves, your heart valves. Poor oral hygiene, especially in your geriatric years, can lead to problems with the vascular system and your valvular system. So please go to my store, the-studio-reykjavik.com, get the structural nano silver toothpaste. Has no fluoride in it. You know why it doesn't have any fluoride? Because fluoride makes you stupid. And this toothpaste is the best toothpaste that you can buy. There's nothing better that you can buy out there. Nothing. Nothing. There is no toothpaste out there better than this. So please go to my store, the-studio-reykjavik.com. Get a few tubes of this toothpaste. Use it every day. Help support my work and also help support your oral hygiene. With a holistic approach, you're going to slow down the aging process, bring down inflammation, and your other organ systems are going to perform better. You notice I was focusing on vascular system and valvular system, and how the oral hygiene is linked together. Please go to my store, the-studio-reykjavik.com. Use discount 5 on any order.
It will start from midnight tonight. The latest moves in response to China's own retaliatory tariff of 34% on US imports. Donald Trump had increased the tariffs on China anyway, 20% at fentanyl, 34% reciprocal, that was announced last week, and then 50% in this latest turn, this latest hissy fit, if you like, of the president against China. So that comes into effect, 104% by midnight tonight. Here is the White House Press Secretary, Caroline Leavitt.
I just spoke to the president about this, and he believes that China wants to make a deal with the United States. He believes China has to make a deal with the United States. It was a mistake for China to retaliate. The president, when America is punched, he punches back harder. That's why there will be 104% tariffs going into effect on China tonight at midnight. But the president believes that Xi and China want to make a deal. They just don't know how to get that started. And the president also wanted me to tell all of you that if China reaches out to make a deal, he'll be incredibly gracious, but he's going to do what's best for the American people.
Caroline Leavitt, the White House Press Secretary there. Well, joining me now to better understand China's position is Howard Tsang, who is consultant for the NGO UK-China Transparency. Good evening, Howard.
Good evening, Kate.
Is Caroline Leavitt right there? Does China have to make a deal?
That depends on who you ask. And if you read the Chinese official statements and all the government think tanks people, I think the answer is probably no, because many of them do voice their, first of all, disdain, as well as you can feel this combative mood from Beijing, very defiant, another word to use. And they feel, many of the government sides probably feel there's no, the point of no return between US and China's past. And the US would want to see, in their words, to stop China rising. And they do think to get any type of settlement in the long run, they have to show strength. So at this moment, because they don't have election to bother them, and they don't need to worry about public opinion to such a degree as in the West, and many experts do think that they think time is on their side. They'll just play this out.
I mean, that's interesting. Can they afford to be defiant? If we talk about the actual financial...
No. The reason why.
is that their economy sucks. And if you have less people buying their products, their economy will continue to decline. And there's going to be stress internally within the country for potential overthrow of President Xi. The question is, will he become pressured internally to actually attack Taiwan and galvanize his nation? It's very possible. I mean, there's historical precedents of this. You know, you cause economic hardship and trade barriers and sanctions and that, and wars could be catalyzed.
The effects on China's export market of these tariffs, can they afford to be defiant?
Again, depending on which groups of experts you talk to, and the experts that on global trade and on economics, many would say no, because China, the U.S. is one of China's biggest export market, and China is in a economic downturn at this moment with huge national debt and property market in a downturn, also with a huge debt issues linked to local governments. So domestically, they're in a bit of a pickle. And so at this moment, to shut down the export engine and to deny the U.S. market to them would, in any common sense, be a big thing. But if you read the Chinese, sorry, just to
go on.
Chinese perspective, but if you read the Chinese state media's side of their perspective, they're saying we've been preparing for this moment for a long time. That's some of them writing, and they prepared, hoarded things like petroleum products and grain, food, and also they're doing their best to shore up the finances, internal finances. They think, we're ready for this fight. So it depends on who you ask again.
Is it right, though, that actually US exports only account for about 2% of China's GDP?
United States weighs farm bailout as China retaliation threatens exports. That's breaking news.
It is relatively small. So we're thinking about a whole, nation being severely financially impacted by this 104% tariff. But actually, US exports only account for a tiny amount of China's GDP.
That in itself is a bit of a, how can you put it? That's the official number for direct China to US export. But China export lots of things to many other countries that will turn them into product that they sell on to the US. China also, over the past few years, especially since the first Trump won trade war, moved lots of its manufacturing to first Southeast Asia and even Latin America. And that's one of the reasons experts pointed out why Trump started to slap tariff first on Canada and Mexico to stop Chinese goods from moving onshore to North America and then moving into the US.
But then at least I suppose anything Canada have to pay to the United States will be much less than the 104% trade tariff of anything direct from China to the US. So it is.
Well, that's why some argue the reason why Trump government had this almost universal tariff, and you have to individually negotiate with the White House to get a settlement. And many question what the settlement at the end would be. Maybe part of the settlement would be you have to stop getting Chinese goods onto U.S. shore unless we have an agreement.
Okay, all right. I mean, can China's economy weather this? I was also hearing a little earlier that actually, yes, this would affect China, but the country's wealth has grown so much over the last 5 years. It's just taking a few steps back rather than it, causing a huge financial crisis over there. Their economy has just taken back a few steps. It seems so much growth that it can sort of weather this storm, that most people will feel that that's reasonable.
Well, we have to stop thinking China as the same economy as the one we have here in the UK or that one in the US. People or the consumers, yes, they do matter, but they matter a lot less. And it's a top-down system that the majority of the wealth flows upwards to the government and to the different state-owned departments. And today, as clearly demonstrated during the 3 year of COVID lockdown, they could shut down the whole economy as long as at the end they will toss some morsels of food to people in their locked-in apartments, and they can manage. So in that sense, I do think the mandarins in Beijing believe they can drag this on as long as they want, because they don't have the same system here. If you run similar exam tests here, you have riots in the streets.
Yeah, it's an interesting thought. Look, Donald Trump says, or seems to be saying, that he's still open.
I think that the provinces outside of the big cities within China are going to overthrow Xi. That's what I think.
A phone call from China. He wants them to drop those 34% reciprocal tariffs on the United States, the immediate bite back that they inflicted on the United States. Do you think they will ultimately do that? Or, as you seem to be indicating, and I don't know, I could have read this wrong from your responses so far, Howard, they're sort of happy to ride this one out?
I think deep down, if they could have a face-saving way out, many of them would want to, because it's for their power as well, and to preservation of their current interests. So they probably want to have some type of settlement. But most people doubt in Beijing that what type of settlement can they get from the US? Because if the US fundamentally wants to reshape the world order in its favor, and in the long run undermining China's fundamental interests as they see it, so what type of deal can we get? They call it blackmail.
Look, the EU President Ursula von der Leyen has urged China to avoid escalating the trade war with the US. China, in return, have promised open trade with the EU. Does this push Europe closer to China?
They have been, ever since Trump got re-elected, you can easily detect this new olive branch they extended to the EU, not only to the EU, to Japan, to many of the US allies in Asia and in Europe. And it's a way of, I guess, for them to try to play an active part in rearrange the world order in their favor. But for the EU, this is really a dilemma, because except maybe Hungary or a couple of other Southeastern European countries, and they're more open to Chinese investment and trade. But for the larger EU, they're so afraid that China will start to dump all their goods on EU once the US tariff barrier goes up. And also, China is a supporter of Russia. And
Amazon cancels some inventory orders from China after tariffs. Breaking news.
Propping up Putin government in its invasion of Ukraine.
Yeah, well, we talked about the Chinese fighters tonight. So
exactly, that's a fundamental red line for the EU. So how do you have an open trade relationship with a country that's supporting your enemy?
Gosh, okay, so that brings about another dilemma potentially. We've been talking tonight, and we'll continue to do so, about those Chinese fighters that have been fighting, as we understand it, as the Ukrainians understand it, alongside Russia in that particular war. And let's just look at the comments of Pete Hegseth this evening, the Pentagon chief, the defense secretary. And he said the United States will take back the Panama Canal from Chinese influence. He is visiting China, I think, isn't he, at the moment? He's visiting Panama. He's had talks with Panama's government, vowed to deepen cooperation, and said China would not be allowed to weaponize the canal by using Chinese firms' commercial relationships for espionage. What do you make of that, Howard?
Again, that's an interesting saga, and I'm not privy to the inside dealings in there, but as an observer, I do find it quite interesting. And right after President Trump first mentioned U.S. intention to take over Panama Canal, and the Panamanian government right away said they will not renew the Hong Kong firm that runs Panama Canals, I think it's either contract or lease. And then soon after that, the Hong Kong firm agreed in principle to sell all its ports, including the Panama Canal, to BlackRock, a U.S. mega hedge fund. And that, for a while, everybody thought, okay, that was it. And but then all of a sudden, that decision to sell.
Well, let me just stop. Everyone is using the term hedge fund just wrong. Hedge funds, actually, in the purest definition, are funds that protect you for downside risk. So they usually lose money when the market is moving up, but make money when the market's going down. Usually when the market's going down, it goes down fast. That's a hedge. That's the whole idea, hedge strategy, right? BlackRock is not a hedge fund. It's a major investment firm that has lots of different products, right? And they go into private equity and they do venture capital and they do a lot of stuff, right? They're not a hedge fund. You're even using the wrong term.
To a degree, the Beijing, the Chinese government always went personal. And so the Li family had to almost retract and put the sale on pause. And that's perhaps why you're having the U.S. Defense Minister or Secretary now talking about, we will take it back, whichever way. If we can't buy it back, we'll take it back. So that is, in a way, very much an escalation in that route.
Yeah.
Well,
thank you
yeah.
for speaking to us.
Did he say anything about the escalation that's going on with Taiwan, with China? No, of course not. Please go to my store, the-studio-reykjavik.com. Get the elderberry zinc lozenges in 21 count for each bag, and the Manuka honey lozenges in a 21 count. The lozenges are larger than the drops. They're made from structural nano silver. I also have drops that are in 100 count that you can get in cherry, in honey and lemon, and also in blueberry. All right? Now, get a few bags for your household, the drops and the lozenges. Make sure you have some at home and at work, because you never know when you get that irritation. We're going into the allergy season. You want to mitigate that irritation right away, because if you let it fester, it will cause damage to your cells and your tissues, and it takes longer to heal. So mitigate the problem right away. Very important. So make sure you have some at home and at work. You never know when you need it. Please go to my store, the-studio-reykjavik.com. Use discount 5 and you get $5 off any order. Now, I also want to talk, before we go to Bloomberg, because they're on commercial break right now. Take the stack here, the magnesium and zinc, the vitamin C, magnesium, and the D3. Now, I'm going to explain why, all right? D3 helps to absorb calcium, but the efficacy is increased, it's boosted when you have magnesium in your supplementation. You can get magnesium 3 different ways from my store. You can get it from the Boomer Boost product, you can get it from the magnesium and zinc, or the vitamin C and magnesium. Now, let's talk about the magnesium and zinc. The magnesium and zinc helps your immune system and your brain function. Magnesium helps with brain function, really important, brain health. The zinc and magnesium also boosts up your immune system. The vitamin C and magnesium will help with your immune system, help with your skin, but also that magnesium will help with brain health, brain function. You can take the vitamin C, magnesium, and the magnesium and zinc together. For the highest amount of magnesium that I provide on my store, it's in the magnesium and zinc. All right, but you can take them together, and you get that larger dosage of magnesium for brain health. Really important. Plus, you boost up your immune system. So take the vitamin C and magnesium and the magnesium and zinc together for best effects. And for the highest efficacy with the D3, magnesium in your supplementation will improve the D3. So please go to my store, the-studio-reykjavik.com, get the vitamin C and magnesium and the magnesium and zinc, take them together, use discount 5, and you get $5 off any order. If you spend $150 or more, you do get a free gift until supplies last. All right, let's take a look at what's going on here. Let's go to live now while Bloomberg's still on break.
U.S. China again vowing to, quote, fight to the end yesterday in an escalating trade war with the U.S. as it announced it would raise tariffs on American goods to 84% from today. Beijing also added an array of countermeasures after President Trump raised the total tariff on imports from China to 104%. Beijing said it was launching an additional suit against the U.S. at the World Trade Organization and placed further restrictions on American companies' trade with Chinese companies. The government has declined to say whether it would negotiate with the White House, as many other countries have started doing. And on Friday, China announced a 34% tariff on all goods imported from the U.S., export controls on rare earth minerals, and a slew of other measures in response to President Trump's Liberation Day tariffs. President Trump then added an additional 50% on goods from China, saying negotiations with them were terminated. If you are just joining us for this breaking news on Live Now from Fox, European Union member states have voted to approve retaliatory tariffs on $23 billion in goods in response to President Trump's.
Now, what's important to
tariff.
notice here is that the S&P 500 is still stable with all this negative news from the EU and from China. It's still trading at around the 5,000 mark. It's bouncing, a little bit above 5,000, a little bit below 5,000. Now, there's going to be treasury bills that are going to be sold into the market, I believe at 2 o'clock, I think it is, maybe 1 o'clock. That may cause a perturbation in the markets. So let's go to Bloomberg here.
The administration considering plans to offer assistance to farmers amid concerns about the trade war's impact on American agricultural producers. Let me find a farm stock. How about ADM, Archer Daniels Midland? That's up right now about 0.6%. Yeah, Amazon.
And here's my go-to.
Deere, you can check Deere too.
Now remember, ADM and other big ag companies. Remember what I said? This whole tariff thing, this whole globalization thing, they don't care about the middle class. They don't care about the average consumer. It's the ones that have lobbying group power. So all of a sudden, you have China saying, "Well, we're gonna increase tariffs, and it's going to hurt the farmers." Well, you got big ag coming in and asking for a bailout from Congress now. Who's Congress really listening to? It's not the middle class. It's all about these multinational corporations that pushed globalization and destroyed the economic clustering to benefit their own industry or their own corporate business.
The best option for a meaningful balance.
I mean, look, let's just take a step back. As someone 25 years covering tech, I mean, I believe this is the scariest time that I've seen the markets, but specifically for U.S. tech, because it's really it's really an Armageddon that's come from a supply chain perspective, and that's why we've been so vocal. And I think it's been almost sad to see, because I think as these tariffs, it would set the U.S. tech industry back a decade.
I mean, some of the tech spending is almost maintenance spending, but a lot of it is incremental and new stuff in AI investment. People were taking up their capex numbers huge. And what's happening? Is that just on the sideline?
Get real. This thing we're gonna forget about what's going on in 24 months. All right? We're gonna forget about this. Think about 24 months ago. Do you remember 24 months ago? Not really. All right? But we're gonna forget about this. And he's saying that, well, tech is gonna be decimated for 10 years. That is such hyperbole. It's unbelievable.
Number cuts across the board. And look, for these tech companies, I've talked to so many executives over the last week. You can call Paul Sweeney, Dan Odd's factory in the Midwest. Hey, let's get those semi chips from there. They don't exist.
Right.
That's part of the problem.
But pause and terminate are two different things. So I feel like a week ago, everyone was on the pause button. Are you saying now we're in the termination phase of projects?
I think we've gone from pause to something that's 3 to 6 month delays. And ultimately companies, they don't know what's happening in terms of their businesses. So it's like if they were going to spend 100,000 in incremental cybersecurity, maybe now you put that on pause, 50,000. You don't know what your CapEx.
I mean, let's just use some common sense, okay, for a second here. Did you watch John Wick? All right, the movie, all right, the movie series, all right. I think there's 4, maybe 5 shows. I think I've seen them all. Maybe the last one I didn't see. I'm not sure. But when I was living in Lower Manhattan for the first and second filming, I actually lived across the street from the Continental that's in the movie. All right, so I saw the filming of John Wick. But that aside, right? That's just a tidbit. Actually, the Continental is a sushi place. It's a Japanese restaurant actually that they modified for actually the filming of the movie. All right, but that set aside. All right, John Wick, the Continental is run on a Commodore 64. I had a Commodore 64 in the 80s. So in the movie, you know, when they're doing all their accounting and their databasing, it's all on a Commodore 64. Now, if they can run a crime syndicate, an assassination syndicate, all right, on a Commodore 64, a global one, and you know, and a 1200 baud modem. Why do you need so much tech in your life? You ever wonder about that? We're sold. The point I'm making is we're sold to believe that we need all this more tech, higher, that, you know, more updated phones and more updated iPads and more updated computers and all this stuff. All right? You don't. If John Wick can run their crime syndicate, the Continental can run their crime syndicate on a Commodore 64, don't you think that you could wait a few years before you upgrade at your corporation or even your personal use? Probably. All right? So don't worry about it. We've overteched our lives. And by overteching our lives, your children are dumber. They can't read. They can't write. And they can't do math. So is the society better? No, I don't think so. We've overteched our lives. So take a little lesson from John Wick. You can have lower tech and you'll be just fine. And you probably have a better life. Do you really need an iPhone? You really need an iPhone? It's going to get to the point where an iPhone is so expensive that people are going to go back to like a Motorola Razr type phone. And not that far away. It's not that far away. Just like how people cut the cord for cable to save money, you start having more time in your life. Something very similar is going to happen. Where people stop using, let's say, landlines, they cut that, and they start using cell phones. Well, you know what? You may actually not need a smartphone in the near future and save money.
They're almost washes. Investors not going to look at it. We view it as the chaos gets to some normalized baseline. You start to look at 26 numbers, and that ultimately is how you justify names. But the reason we don't downgrade is our view that this is something, whether it's weeks, months, transitory, use no word, but in some way that this is going to be negotiated.
30 seconds left here. Does the U.S. risk losing its leading position in tech, the great Silicon Valley?
I mean, I think this could take tech back a decade. Right. Yeah, and it's just a reality. It's the food chain, the supply chain is in Asia. It would take 4 to 5 years to build a new factory, and the concept where we can make in America this. If you like 3,500 iPhones, we should make them in New Jersey.
I really don't want that.
And that would take 4 years.
Dan, thank you so much for joining us. Really appreciate it. Dan Ice, Global Head of Technology Research at Wedbush Securities.
Do you really need an iPhone? Do you really need to have Tim Cook be a billionaire and he's not a founder of the company? Please go to my store, the-studio-reykjavik.com. And, you know, I guess the main point that I was making is that if you invest in yourself, that means taking back your time, taking back your money, taking back your health, that you will have a better life. But if you just believe what is promoted on these different shows, they want you to, you know, waste your time consuming their content. You're a consumer. Now, I believe in this idea of strengthening your finances so you can have a better future, and also strengthening your health so you have a better future. Take charge of yourself, all right? Now, some people don't know how to do that, and I'm trying to navigate you through that. So let's talk about the health side of this, all right? It's important to realize that most cardiovascular disease starts in your teens, not when you're in 20, not when you're 30, not when you're 40 or 50. Those are when the signs start to show. But asymptomatic, the genesis of cardiovascular disease starts when you're about 16 years old. 16. You just don't know it. But you start that inflammatory route, you start have a poor lipid profile, and what happens is if you do an autopsy of people that are, let's say, 16 years old, you'll notice that they will have what is called yellow streak. And a yellow streak is the beginnings of plaque buildup in the arteries. All right? So you want to mitigate that. So over time, you start to get the plaque buildup. All right? So people that are younger need to eat healthier. So if you have children, start having them eat healthy. Keep them away from processed foods. Keep them away from the high sugar diet. Keep them away from unfiltered water. You want the filtered water. You want non-processed foods. And stay away from the sugary content. Reduce that inflammation. That's part of the reason why there's so many individuals that are obese in the United States, especially children. The obesity for children is rampant, very problematic. So the development of this cardiovascular disease starts even earlier than the 16 years old. I'm talking about 16 for Gen Xers. All right, it's possible that the cardiovascular disease is starting at age 13 or 14 in the younger generation now. All right, so taking proper supplementation to help with the cardiovascular health in your immune system is really important. So I'm going to show you a stack that's important here. The ashwagandha root is going to help bring down cortisol levels. Now, elevated cortisol levels chronically is immunosuppressive. So bringing down cortisol levels is actually going to help your immune system. Also, ashwagandha root helps to control blood glucose levels. It'll bring down the blood glucose levels. So you're reducing that inflammatory response from high sugar content in your high sugar concentrations in your bloodstream. So ashwagandha root is going to control that. So that means that you're helping reduce the inflammation at the vascular level, and you're reducing plaque buildup, and you're helping your immune system. Turmeric is an antioxidant. It's going to soak up free radicals. So it's going to reduce stress in the cell, and it's going to reduce the reactive oxygen species within the bloodstream. When you're reducing free radicals in the bloodstream, you're reducing oxidized LDL. And if you're reducing oxidized LDL, you're reducing plaque formation. In addition, turmeric brings down systemic inflammation. So that's helping your immune system and your vascular system. You stack these together and you're boosting up your immune system and your vascular health. And you're reducing the chances of plaque buildup. Please go to my store, get the turmeric and the ashwagandha. I don't care what age you are, you should be taking this every day. Please go to my store, the-studio-reykjavik.com. Take this, mitigate the problem, and the facts are this. In your teens, you started cardiovascular disease. Fact. In the United States. Fact.
I mean, how does a farmer gonna see it here? I mean, are wholesalers not gonna buy their crop because the wholesalers know they don't wanna have to deal with the tariffs when they export it? How does that all work out?
Well, that's the key thing, Paul. It's already started. The key thing that has been bad for farmers was that what was good was a massive pump in prices because of Russia's invasion of Ukraine to the peak in 2022. It's somewhat like World War I. It was great for U.S. farmers for a little while, but now it's gone away. But what it did do is it ran into this firewall of rapidly advancing technology where Brazil now is going to be exporting about 110 million metric tons of soybeans. That's double what the U.S. Used to export. And China's taking them, but they don't need as much anymore because they're adopting genetically modified seeds. So the overall picture for farmers was bad before the tariffs came in. The thing is, this is the heartland. This is the land where people voted for Trump. It's, they're less concerned about the stock market. Yeah, so he's going to do what he, like last time he wrote it from checks. Now that helped, obviously, but people just don't like that. It's like if you can find a way to get corn to stay about $5 a bushel, yeah, we'll do that. And by the way, we'll create a lot of it, and that's the problem. Then we'll make it go lower. It's just the trend is creating more with less. Unless we get a drought, prices are going to probably get pretty cheap.
Here's my insanely dumb question. Is there not enough demand to just sell all our stuff here in the U.S.?
No, there's not. One of the biggest places we export our ethanol is to Canada. Well, that might not work out so well. We export 45% of our soybeans. It used to be 55%. That's going down. We've been dropping our wheat production for, or at least acreage, for years because we don't use much of it. We export most of it. We're basically the piggy bank for the world. And the corn, that's a unique market. We only export about 15% of it. A lot of it's used for motor fuel. And one thing I want to remind our listeners, before the introduction of internal combustion engines, a large portion of our land was used for transportation fuel for horses.
Exactly. So, Mike, I'm going to front run Alex on this question here.
All right, selling is starting to accelerate for the S&P 500. We're now trading at 4,961 as we're getting closer to the Treasury's auction. And I also think that the Federal Reserve is releasing minutes today.
Bill texted me on Tuesday when I pointed out $40 a barrel, which I've been pointing out for 2 years. Mike, no, don't do that to us. I'm sorry, but that looks like things will have to go. So the good news is we're right near the U.S. average cost of production, the largest producer of energy on the planet for crude oil. $56 a barrel. Bloomberg New Energy Finance said they'll probably do okay around 50, but typically you got to get around 40 or lower to shut it off for an enduring bottom. So we're heading towards that low price cure. It's happening globally. And remember what's happening since we pumped up in prices because of Russia's invasion of Ukraine. We're increasing supply, still decreasing the demand, most notably from China. And unfortunately, prices have to go down to really shut off those excesses. It's just the way the cycle usually works. And so it needs some kind of shock for it not to happen.
And what we're not going to get is a step in from Saudi Arabia because OPEC Plus announced kind of the same moment we got tariffs from the Trump administration that we were looking at more oil coming on from OPEC Plus because in essence, this is the theory, is the Saudis want to ding the overproducers like Kazakhstan, Iran. They want to get that compliance back, which means they will tolerate lower prices, which gives everyone anxiety back of 2020 and 2014 at the end of the day, Mike.
Exactly. By the time we get to midterms, the average gallon of gasoline in this country, which is around $3, is more likely to go to $2. And what's the stated goals of our Trump administration? Lower inflation, they might get more deflation, lower energy prices, lower bond yields. It's all going that way. A little blip lately in bond yields, but and I think Saudi Arabia is a pretty good ally, and Trump seems to get along. So we all see the tilt there.
Which is so interesting because you know who this is good for? Consumers, but also like Delta.
Yeah.
Like you can see a lot of companies already locking in their hedging costs, and they're like, "Ooh, lower prices. Let me lock that in right now."
Yep. There's a lot of cross currents out there. Mike, 30 seconds here. What's the play here for you? What are you talking to clients about today?
Gold higher, Bitcoin lower, and virtually most commodities continue to go lower. Deflationary. Deflation from the inflation is a normal cycle, particularly when you have a paradigm shift of what's happening in the U.S., kind of shutting off the ability for the rest of the world to export to the U.S. and the almost unprecedented austerity. Unfortunately, the trends were in place before Trump was elected.
All right, Mike McGlone, thank you very much. Appreciate that. As always, Mike McGlone is a commodities dude. He's at his agricultural conference up there in Indianapolis, Indiana.
I want to go.
And I think they're talking like corn and soybeans and stuff like that. So
I mean,
noses.
NYMEX crude oil is down 5.4% today. It's trading at $56 a barrel. Please go to my store, the-studio-reykjavik.com. Get this structural nano silver gel in the tube form or in the quick dispenser form. Both are very high quality. Use them the same way. They're a multi-purpose product. All right. If you're not feeling well, or someone around you is not feeling well, at home or at work or in school, use this. Put this on your hands, around your ears, around your eyes, around your nose. Lightly coat your nostrils. It stays active for 5.5 hours. So please go to my store, the-studio-reykjavik.com. Get the structural nano silver gel. You can use it as an aftershave. You can also use it as a daily skincare. And if you have an abrasion, a cut, or minor burn, put it on that lesion and it will help to heal it. Please go to my store, the-studio-reykjavik.com. Get the structural nano silver gels. Have some at work. Have some at home. You never know when you need it. Trust me. Trust me. You're going to need it. And not only that, you can use it every day as a skincare. Please go to my store. Use discount 5 and you get $5 off.
Joining us about liquidity in the bond market. Is it normal to see a 55 basis point increase in 3 days for the 30-year? I mean, maybe not. We'll see how liquidity is faring. Leland Miller, also one of the best out there from China Beige Book, to talk more about the relationship of U.S. and China and the tools that China has to combat any tariffs. Burns McKinney over at NFJ Investment Group on the markets, and Geetha Ranganathan, a Bloomberg Intelligence analyst on U.S. media. Ad agencies also getting hit, and George Ferguson will talk about Delta. But let's kick it all off for you with a Bloomberg Business Flash, and for that we go to Charlie Pell.
Hi, thank you very much, and here's what's going on. We've got another choppy session today. Right now, we are trading just about at the lows of the day with the S&P 500 index down now by 26 points. That is a drop now of 0.5%. The Dow Jones Industrial Average lower by 266 points for the Dow, a decline now of 0.7%. And West Texas Intermediate Crude Oil, it is slumping today. WTI below 57, 56.25, as we were just talking with our Mike McClone, down now by 5.6%. The 10-year, 4.37%, with the 2-year, 3.75%. And gold, 3,067 on the precious metal. Gold surging 2.8%. Bitcoin down 0.1%, 76.
What's interesting about the Asian session last night was the spike in gold too.
On Bloomberg Intelligence.
My base case is that if we see tariffs remain at these relatively high levels, we're more than 50% probability of going into a recession this year. Doesn't mean that it's going to be a deep recession, but I think that certainly the odds are in favor of recession if we see tariffs remain at relatively high levels. But if we were to see a de-escalation, we could easily see a risk-on environment with U.S. assets benefiting.
Christina Hooper of Invesco speaking last hour right here on Bloomberg Intelligence. Keeping an eye on that.
Just slowly buy into the market, the larger market, the S&P 500. Just slowly buy into it, all right? And you're going to benefit in the long run.
And the company is reducing its exposure to tariffs imposed by President Trump. Again, recapping U.S. stocks right now, we've got the Dow, the S&P, they are both in the red. NASDAQ is advancing, S&P down 30, choppy session down by just about 0.6%. For on-demand news, 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Alex Steele, Paul Sweeney. We are live here in our Bloomberg Interactive Broker studio in Midtown Manhattan. We are streaming live on YouTube, so head over to youtube.com, search Bloomberg Podcast Live, and that's where you will find us. Charlie's just reporting the indexes are all over the place in the equity markets. Let's see what the action is under the hood. We do that with Isabel Lee, also a site reporter for Bloomberg News. She joins us here in our studio. Isabel, what are you looking at?
I'm looking at Eli Lilly, so shares are edging lower by almost 5%. So Trump has long promised that his tariffs on pharmaceutical drugs will be coming soon, and it is coming soon. This is the latest signal that he really plans to press ahead with those sectoral tariffs, despite this really huge market fallout. I believe it's more than $10 trillion in the past 4 days. So Trump believes the tariffs will encourage pharma giants to produce more in the U.S., and he's confident that they will come back because the U.S. is the biggest market. But again, the lack of information makes any assessment really difficult. That's according to Bloomberg Intelligence. and implementation could take time. And also the generics, which are mostly made overseas, I mean, that may affect prices too. And if you're hard on money, you usually go to the generic. So.
Oh yeah, well I go to generics anyway. I mean, $1 drug is better than 300 for sure. And medical devices too would get hit from that end as well. All right, let's go to Walmart here. So I was surprised that they reaffirmed their outlook despite all the uncertainty.
Exactly. So it was higher by around 5%. It's pared back some of those gains, but still up by around 3.3%. So they did reiterate their guidance despite the barrage of tariffs and weakening consumer sentiment. And it really just highlights how the world's largest retailer basically is confident that it can navigate economic uncertainty. So Walmart said that it's seeing net sales growing 3 to 4% this year. So the forecast accounts for tariffs, unlike its previous outlook in February. And Walmart is really seen as a barometer for consumer sentiment. I mean, it's really due to its sheer size and exposure to a broad swath of U.S. consumers. And they said they plan to absorb potential price hikes and they plan to keep their product affordable. We do have D.A. Davidson analysts saying that this could squeeze profit in the near term. But still, Walmart has actually performed historically better during economic downturns.
Okay, they can deal with a mom and pop shop owner. I'm not sure.
Yeah.
Boy, they vote too. So again, the politics is lost on me. What else you got?
Ford. So Ford is edging lower. And now actually it's down by around 1%. We're seeing a lot more pressure there. We have Bernstein downgrading the stock to underperform for market perform with a price target of $7. Bernstein said that there's significant downside for the stock that's not priced in by the markets. I really feel like these automakers are just getting hit day by day. So the analyst, Daniel Rosta, says the tariffs impact Ford just as consumer sentiment wanes. So he says that this is really going to have more downside. But Ford still has 5 buys, 13 holds, and 8 sell ratings.
I mean, this is tough. This analyst at Bernstein, sell Ford stock because there's nowhere to hide from tariffs.
Yes.
I mean, yeah. There's still 5 buys, you said? I mean,
I think about it. We should talk to Mike McGlone about the farmers. If Walmart's okay, that means probably the smaller retailers not. And auto industry. I mean, these are American constituencies.
Yeah.
I don't get the politics. That's my thing.
Politics.
I understand the economics. I just don't understand the politics.
You know, we get the bond market. All right, Isabel, thanks a lot. Bloomberg's Isabel Lee joining us. For more conversations just like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. And listen to Stock Movers on Apple, Spotify, or anywhere you get your podcast. So speaking of bonds, it is the most important auction we've ever had. This is what I'm hearing from analysts. Even Paul is pumped about it.
Yes, I got
I
my
put that in
vote.
relative terms. We get 10-year auction today at 1 p.m. And the big question is, what will the direct bidders be? That domestic demand. What is the real demand for treasuries right now in the middle of the sell-off that we've seen? Ira Jersey is Bloomberg Intelligence chief U.S. interest rate strategist, and he joins us now. We finally got Paul into the auctions, Ira. How are you going to be receiving and looking at the auction today?
Yeah, so, we'll see where we are at 1 p.m. You know, earlier today, actually, when Paul and I talked this like an hour and a half ago or so, I was thinking, 10-year yields were up 14 basis points, 15 basis points today. It feels like dealers are trying to make room to absorb some of the supply coming out the next 2 days. And maybe they, even investors might dip in their toes, at cheaper levels. And now, of course, we've rallied now 7 or 8 basis points, so you've taken away some of that relative value. We'll see where we are at 1 o'clock, but like you said, the lack of direct bidders at yesterday's 3-year auction is really interesting because there's very little insight that we get into who those direct bidders were, whether they were banks or domestic investment managers, foreigners, like foreign central banks. We know some of them can bid directly for treasury auctions. So we're making an assumption that it was foreign investors that didn't participate yesterday. I think that's a solid assumption, but it can't be all of it because foreign investors only took 8.5% of the auction of the 3-year auction in March. So how is it possible that for the 3-year auction in April, when you saw direct bidders go from 25% to 6%, it can't only be foreign investors. It has to be domestic investors as well. And I think that I suspect that people don't want to catch a falling knife. So today's auction could be, I don't want to say pivotal, but it certainly could be, it is something to watch and pay attention to. And it always is, right, Alex? So, auctions are boring until they're not. That's why we pay attention all the time.
Ira, early in my career at Solomon Brothers, as a young banker, we would look at the government bond traders as just kind of larger than life. You step aside when they walk down the hallway here because they had such sway on the market, and we had so many of them, and they had such a big book of business, and they made a lot of money for Solomon. It's not like that today, and I'm wondering, can the primary dealers today, can they really?
That's how Bloomberg started his business. He was a bond trader for Solomon, and then they were bought out, and he was given a payout of, I think, $10 million before tax. He took half of that amount and invested it into Bloomberg. That's how it all started.
Dealers own more treasuries than they ever have. Now the market's bigger, that's true. Lender of last resort activities, which they used to do prior to 2008 on a daily basis. So they can do traditional repos, what we call temporary open market operations. The government reducing and or taking treasuries out of the supplementary leverage ratio, one of these big capital rules, I think would help quite a lot as well. They're already talking about it. They've been talking about it since Donald Trump took office. So, maybe this will help accelerate that process and help create a little bit more market liquidity for treasuries, which quite frankly is in the best interest of the government to do.
All right, great stuff, Ira. I'm super looking forward to 1 o'clock. I'll be pinging you after that. Ira Jersey, Bloomberg Intelligence, U.S. Chief Interest Rate Strategist, joining us there. Let's take a broader look now at the relationship of U.S. and China. It's not good. What's the off-ramp at this point? Joining us now is Leland Miller. He is a CEO of the China Beige Book. Leland, you are deep into the China economy, China-U.S. trade relations, etc. What levers does China have to pull to help support its economy in the middle of a trade war?
Well, markets have been expecting there to be some sort of giant stimulus response for years, and they were always disappointed because it wasn't in Xi Jinping's interest to sort of rejuice the economy after they'd gone through maybe not the leveraging, but certainly a tightening of credit to areas of the economy outside of the priorities, like advanced manufacturing, et cetera. We're entering a very new era here. And so depending on how severe geopolitics and the trade wars get going forward, they're going to start looking at these levers more seriously. Obviously, one of the big ones is fiscal spending. They don't want to do a bazooka like 2008, and they've already done a lot of monetary easing over the course of the past couple of years, so there's not that much oomph there. But there is spending they can certainly do. And in our latest data, we have actually seen our proxy for infrastructure spending start expanding and go up. Transportation construction, firms are borrowing more, they're investing more, they're hiring more. So they are readying the ammo gun in case they need to use it. But I think they're trying to figure out whether this is going to be a short-term problem or whether this is the new norm.
So, Leland, nobody knows this better than you, but where is the capacity for China and the willingness for China to really go toe-to-toe with President Trump and the U.S. on these tariffs? What is their capacity there, do you think?
Well, their capacity and their willingness are two different things. I think their willingness is very high. I think we're already seeing there was a signaling before it happened, and then now that it's happened, you see there was the message was always, if you do something to us, we're gonna respond. You do something else to us again, we're gonna respond. And the problem here is that China doesn't have the capacity to go one-on-one in the trade field with the United States, simply because the United States is a massive importer and China is a very weak importer by comparison. So if you're just talking about trade, the U.S. has much more leverage and put much more pain on China. This is why once you get to a certain point, and to the extent that Beijing is willing to risk an escalation, you're going to see things expand outside the purely trade realm. It's not going to be just a conversation about tariffs. Already, we're moving outside of it, but you can expand it more dramatically to other areas and even punishing U.S. firms on the ground in China.
I mean, yeah, we already heard the headline that China's, telling students that want to study in the U.S., think twice, for example, before you do that. In terms of levers it can pull, I know you mentioned helping domestic capacity and sort of pumping money into the system for consumers might not be the best. But in terms of the UN devaluation, for example, how orderly can China keep that?
I think they can keep it pretty orderly because they want to keep it orderly. It seems like every time there's any kind of geopolitical tension to the U.S. and China, any trade tension, there's anything going on in terms of just a weak Chinese economy, there's people screaming to the sky, the yuan, devalue it, devalue it. They really don't want to do this. It's not that it's not a tool in the box to use. It's for break the glass emergencies. It doesn't mean they're not going to blow off steam against the USD. It doesn't mean they're not going to, have a signaling purpose from moving it incrementally. They really don't want to do one of these one-off devaluations. It would be a massive escalation. It would be seen very poorly, not just the United States and around the world, but you're also sitting in a situation where you're going to create a lot of stress inside the Chinese economy. You're going to put pressure on having more capital outflows. You're trying to increase consumption. By weakening the yuan, you're going to hurt consumption even further. So this is not just some piece of trade artillery that they can use willy-nilly. To go there in a big way, they need to really have a substantial escalation.
Hey, Leland, does China view this U.S. nationalism from President Trump administration, from a global trade, from a global military, political, as a real opportunity to expand its influence? Do they view this as a once-in-a-lifetime opportunity to do that?
I think there's a lot of voices in China. I think that they don't like some of what's happening. I think other things they see as an opportunity. Certainly, if U.S. allies and partner relationships are breaking down, either in the region or around the world, they'd love to take advantage of that. And not necessarily by replacing the U.S., but simply saying, stop helping the U.S., stop buying into what they're doing. So there are opportunities in here if it's played wrong by the U.S. government. But I think that we're in such a dramatic place differently from where we were a few months ago. They're trying to digest this just like the rest of us.
Will this move China to make connections and trade deals and more economic ties with the rest of the world? Is the rest of the world open to that?
China would love lots of trade deals, but China wants them on their terms. And what they want to be able to do is not import other countries' exports, and they want to just shove their exports down everybody else's throat. So to the extent that they can strong arm,
I want to go to Fox News. About an hour ago or so, they published an interview with Jamie Dimon.
IRS e-file is now open. Snap your W-2 and file your taxes 100% free. Plus, get your biggest refund. Roughly 37.
Welcome back. Let's check markets here. Futures are indicating a decline of better than 700 at the opening of trading, about an hour and 15 minutes away. That's down almost 2%.
This was in the morning.
1.5%. President Trump's reciprocal tariffs took effect at midnight last night, and China is retaliating again this morning. It is announcing an 84% tariff on all U.S. goods after President Trump confirmed that the U.S. will move forward with a tariff of 104% on Chinese goods. Beijing also adding 6 U.S. companies to its, quote, unreliable entity list and 12 companies to its, quote, export control list. JPMorgan Chase Chairman and CEO Jamie Dimon releasing his annual letter to shareholders this week, writing, tariffs raise prices and slow down economic growth. We are here now with the man himself to talk more about the backdrop in this Fox Business exclusive. JPMorgan Chase Chairman and CEO Jamie Dimon. Jamie, great to see you.
Very happy to be here.
Thank you so much for joining us. And congratulations on this incredible career and your leadership. We appreciate your leadership.
Thank you.
You've seen so many crises in your days before, financialcrisis.com, et cetera, et cetera. How does this moment in time compare to those?
Yeah, well, it's nothing like 08. Okay, so big clarity. Nothing, and the 2000.com thing was very brief. I mean, it lasted like 9 months or something like that. So,
but how did the financial crisis when you almost paid $2 a share for Bear Stearns?
Yeah, we paid 10.
I know. You wanted 2 initially.
Paulson wanted to do. I wanted to get the deal done. So it doesn't compare to that. The world was massively over leveraged. There was a mortgage problem. You're gonna have $500 billion or maybe $1 trillion actual real problems. The banking system's not that leveraged today. But it's serious, and it was serious before the last election. We have a huge, complex geopolitical situation, huge fiscal deficits, not just here, but around the world, sticky inflation, which I personally think will not go away so quick. And then you have, what's going to happen to tariffs, what's going to happen to trade, what's going to happen. So, tariffs and trade is part of that mix. They don't completely stand alone.
So what do you think about the tariff plan?
I think it is perfectly reasonable for someone to say that trade was unfair. There were unfair trade things. And remember, it's not just tariffs. It's tariffs. I think they have the VAT wrong, how they understand it. I think they should really get a better understanding to make it easier to negotiate. But there are all these non-tariff barriers around food and energy, and then subsidies, which China's famous for. So it's totally reasonable to say we want to make trade better. But I also want to point out to the Americans, we have the best economy in the world. Our GDP per person is $85,000. China's is $15,000. So you got to put a little bit into context. But, you know, and then of course, when they put the tariffs in, it was way beyond what people expected. That will cause a little inflation, slow down growth. But I hope what they really do is let Scott Bessent, when he's a professional, negotiate. I know Japan, I gather Korea, Vietnam have called, and then eventually get those things done quickly. If you want to calm down the markets, show progress in those things, and let Scott take the time. Trade deals are very large and very complex. They can't be done overnight, but you really have to have teams working them to get them right.
It sounds like you're taking a calm head in the face of all of this, despite the fact that we've seen $6 trillion in market value wiped out in about a week.
Yeah, I'm taking a calm view, but I think it could get worse if we don't make some progress here. And of course, you know, trade wars, you saw China raise the rates today, you know, and people get angry and they're going to have responses, and every country's got choices. So there's short-term choices, the long-term choices. But I also want to point out, if you kind of look forward in the next, 60 days, every company is going to be telling you guys, what it means to them. I think today I saw Delta remove their guidance, and things like that will affect stock price again. So it's not over yet. And then you're seeing tremendous moves in swap prices, asset prices, treasury prices. There's a 10-year treasury auction today and how they go. So yeah, let them settle down, take a deep breath, negotiate some trade deals. That's the best thing they can do.
I want to get back to what you just mentioned, the earnings season, in a moment, because I spoke with a number of CEOs just last night, and they said, I'm cutting expenses, I'm cutting my CapEx, so I want to get your take on how that plays out. But look at the 10-year this morning, Jamie. It's up almost 17 basis points. Yeah. And I just spoke with the Treasury Secretary, Scott Bessent, and asked him if part of this is China selling treasuries. Here's my conversation, a snippet of it with Scott Bessent. Watch this.
There's one of these deleveraging convulsions that's going on right now in the markets, and I think it's in the fixed income market. There are some very large leverage players who are experiencing losses. They're having to deleverage. I believe that there is nothing systemic about this. I think that it is an uncomfortable but normal deleveraging that's going on in the bond market. And I expect that as we see the leverage come down, the risk managers tapping people on the shoulders, telling them to bring their books down, which is what happens every couple of years as leverage builds up, then the market will calm down.
Is China jumping treasuries to try to put pressure on this market?
Yeah, I think it works against their purposes if they are dumping treasuries, because if they're dumping treasuries, then they have to buy something else. If they sell dollars, then they strengthen their currency. And as I said earlier, they've actually been weakening their currency, which is a loser for everyone. Right. And again, when I hear all these stories, the dollar is no longer going to be the reserve currency. If you end up with the Chinese who are willing to use their currency as a trade tool, that doesn't seem like a very good reserve asset to me.
Yeah. Jamie, your reaction?
Well, he's exactly right. You have a lot of deleveraging hedge funds and players out there, which he obviously is quite experienced in things like that. And that is the initial effect. There will be other effects, and we still are the reserve currency, which will be true for a long time. But a very important point, China and Russia have made it clear they want to kind of dismantle the post-World War II system. And I think the goal of all this trade stuff should be to make Europe and our trading partners, Japan, Korea, Philippines, stronger, not weaker, bring them closer as we build up our military. And any trade that protects military, that we should definitely do. I mean, we made a lot of mistakes about, as you know, pharmaceuticals,
We just have to make our chatbot more agentic. Whoa, future John here. You're here too? Yeah, and thanks to CX1 Empower, things are going to get way less awkward. What is power? Is it control? Is it freedom? Or is it something primal? Maybe the better question is, how much of it can you handle?
Pharmaceuticals, shipping, pharmaceutical-grade penicillin.
That we're so reliant on China for all
we
this
can't
stuff.
rely on any potential adversary for things we need for our military. And so, there I'm quite sympathetic. That we should do, that's absolutely paramount.
And you wrote about this in your annual letter to shareholders this week, and you talked about national security being the #1 priority here. But it takes time to get the supply chains to America. So in terms of getting this done fast, I mean, how much faster can this happen? And was there another way to get corporations to move supply chains here other than forcing them to it? Because we've been talking about this for a long time.
You can't really force them, but I guess there are tons of ways that people manipulate trade, but, and as subsidies, and as land grants, and as guarantees. We need to do that for rare earths, pharmaceutical devices, semiconductor chips. We should do it right. I mean, we shouldn't do it in a way that wastes a lot of money and lets corporations feed that great tax trough or something like that. And it could be done, but it will take years. But we need to start right away. And even some of the other supply chains, a lot of companies are too reliant on one country. It'll take them to move. But I think you got to separate, making sneakers from making guns. One is like really important. One is, it's not as big a deal. So,
Great point.
But the point about national security is economic security, national security are almost directly related in the long run. Hopefully when these wars get resolved, and I hope in the interest of Ukraine, where they have sovereignty when it's over, and the interest of Israel without being constantly attacked by terrorists on 3 sides, you need to keep the economic alliance together. I think it would be in Russia's and North Korea's, Iran's, and China's interest to fragment the Western world. And I think that would be the biggest long-term mistake. I'm talking about over 30 or 40 years. But I don't want to read the book about how the West was lost.
Yeah, but at the same time, timing is of the essence, right? I mean, you just mentioned a moment ago that we're headed into the earnings series. You're obviously reporting earnings on Friday, so we're sensitive to that. But is there anything you can tell us about the environment right now in terms of loan demand, in terms of defaults? Because while all of this is happening, you've got, for example, your economics team predicting a recession this year, and you've got corporations saying, I'm cutting back on spending and investing right now.
So normally I don't pay that much attention to anecdotes, but you heard them, they're real. I hear from just everybody now. I'm going to cut back a little bit, I'm going to wait, see what happens. That is kind of recessionary talk. So we've been in this kind of very soft landing for a long time. Consumers have money, they were spending money, corporates are making profits. I do remind people, part of that was because of our extraordinary fiscal spending. We borrowed and spent $11 trillion since COVID. And that obviously drives a lot of growth. It drives corporate profits. So I think what you're going to see now is corporations making announcement after announcement about, don't expect my guidance to be true. I'm going to hold back here a little bit. These are long-term decisions they have to make. They may want to see the tax bill, which hopefully they get done in July. So yeah, I think you're going to see a slowdown. I think the economists are probably right to say that you should expect that.
Well, how significant is a slowdown? I mean, are you seeing defaults?
Not yet, but I expect them. And the other thing, which we haven't had any slowdown or real recession, and COVID was so short, I almost don't include it, and so long that if you have rates going up a little bit, and inflation is sticky, and credit spreads are gapping out, which they're going to, I think you'll see more credit problems than people have seen in a long time.
And yet, you've got to get ahead of it and cut expenses now. You've talked about the 10% to all of your different groups at JP Morgan.
Yeah.
You say JP Morgan is going to be fine, but we could see a softening of the macro story.
Yeah. So JP Morgan, I did say to the JP Morgan people that 10%. I think we just got a little sloppy the last 5 years. I'm kind of mad at myself. I remind people, kills companies is complacency, arrogance, bureaucracy. And the little speech I gave, I was talking about Sears and AMP and Eastman Kodak. And it's amazing to me that these companies, that they just get too lax in what they do. And we got a little bit of that too. So going back to killing bureaucracy, we put some headcount controls in place, not because we're not doing well, not forcing people to cut. I call it just like going for your run and eating your spinach. It's not a big deal. We can handle that, and we'll become a better company. People are having a lot of fun, by the way, raising their hand and saying, why are we doing this? Why can we cut this out? And whatever the guys say, just do it. Go ahead. You got my permission.
So are you hearing that from CEOs as well in terms of business managers? Are they now going to start pulling it in and cutting back on various expenses?
I think you can see a little bit of that, yes.
Yeah. But how significant would you expect that? Do you personally expect a recession?
I am going to defer to my economist at this point, but I think probably that's a likely outcome.
Mm-hmm. Yeah. Because markets, I mean, when you see a 2,000 point decline, it sort of feeds on itself, doesn't it? Because it makes you feel like you're losing money in your 401k, you're losing money in your pension. You got to cut back.
Yeah. I always remind you, markets aren't always right, but sometimes they are right. I think this time they are right because they're just pricing uncertainty at the macro level and uncertainty at the micro level.
Look on dollar.com to get our lowest rates.
Why are you in my house?
What's going on here? Have you seen their detection times and their MTTR to die for?
Come on! Amy, hey, I know your team's doing some amazing work with Splunk, but I think it's going to their heads.
And your problem with boosting digital resilience and making sure our systems are safe and reliable is what exactly?
Touche.
Level and uncertainty at the micro level, at the actual company level, and then how it affects consumer sentiment. It's hard to tell. You know, consumers still have jobs, wages are going up the low end, which I think is a good thing. But if companies start cutting back, yeah, the consumer sentiment changes and business sentiment changes. You know, I think you've already seen business sentiment change a little bit. Hopefully, you know, no one's wishing for that, but you know, hopefully if there is one, it'll be short. But I do think fixing these tariff issues and trade issues would be a good thing to do. That will get one major uncertainty behind us. We have the strongest economy in the world. It'd be good not to add to the uncertainty out there.
How long would you wait to see these fixes take place?
I don't know. I mean, I would, whatever they can do, you know, like I said, trade is really complicated. I mean, these trade agreements are thousands of pages long. It is product by product and area by area, non-trade barriers, subsidies. You know, there's tons of food. If you spend time on just food alone, you'd be shocked how many different food agreements there are, and disagreements and protection of local farmers, which almost every country does. So the sooner, the better.
Well, in terms of
they should get at it.
In terms of the capital markets business, you got to believe that trading is going to do well in the first quarter. But we've sat here with various CEOs who said, "I'm not going to do my IPO right now. Right. I'm not going to do my deal in terms of M&A." We spoke with Ken Leon from CFRA, and he says that the first quarter was very weak for those kinds of capital markets businesses.
Yeah. So,
without giving anything away, because you're reporting earnings.
Yeah, so I mean, I always say the volatile markets generally are good for a capital market trading business, but they're generally not good for, you know, equity, debt issuance, stuff like that. So, you know, I mean, at a certain point, JP Morgan's going to be in fine shape, but almost no matter what happens, we always run the company so we can serve people in good times and bad times, just like we did during the great financial crisis. But I do expect the bad part of these volatile markets isn't what it does to JP Morgan, it's what it does to the capital markets and the ability of companies to raise money. So IPOs are being canceled, you know, a couple of hung deals out there in the high yield land and bridge loans, and that just slows everything down. And so that's the bad part of these volatile markets. It's not that it's bad for us. It's bad for small businesses, middle-sized companies. You know, large companies can usually get the funding they need.
President Trump has been trying to put America first. Is he doing that while also alienating foreigners to America? Somebody told me last night, look, I'm trying to do a deal in Canada. They said, we don't want to buy American in any way right now. Do you see any anti-American stuff?
Yeah, we've lost a couple of bond deals already because they're not mean. They simply say that, you know, look, we'd rather just do this with a local bank than with a U.S. bank. Look, we can overcome that. You know, that's why part of me thinks that don't let this go on too long because it's causing cumulative damage, including huge anger in the United States. Like I said, if my goal would be keep the allies together, get them together, keep work on that, you know, and you fix the trade. If there's unfair trade, fix it. Doesn't matter an ally or not, it should be fixed. And I think there are legitimate complaints about military spending. You know, they need to spend more in the military. So I hope what you saw, like for Europe, is a wake-up call. Fix their economy. You know, they have huge bureaucracy, you know, red tape, which I now call blue tape. And, you know, and if they fix that, that'd be good for them. And then, you know, pull them closer and keep the Western world together.
And the European Union, by the way, I don't know if they're unified. I mean, it's called the European Union, but, you know, Germany is in a different place than I think Italy is. So how does President Trump do that?
Yeah, Europe should seize the moment. There's the Draghi report. I think they all acknowledge they need to spend more in the military. They all acknowledge that. I think their GDP per person in the conference are like 75% of Americans to 50% of Americans. I mean, they gotta look inside and say, what did they do? And it's literally rules, regulations, and red tape, and anti-business, and, you know, too expensive tax systems, and labor laws that were meant to protect workers, but very often these laws are passed, they have the complete opposite effect. You know, they protect existing workers, but not new workers. they don't adopt technology fast enough, they don't have enough innovation. They could fix that. And I actually think you now have, between President Macron, Chancellor Merz, Maloney, Keir Starmer, those people are coming together and they're kind of saying all that.
Yeah.
They have to do it. It's hard, in Europe.
And Maloney is on her way to the U.S. to meet with President Trump on the 17th. In your annual letter, you wrote about how successful J.P. Morgan is moving, what did you say, 10 or 12 trillion dollars a day in terms of the amount of business that you're handling, and you gave the kudos to all of your people. What's interesting, when I was reading that, I thought, it's interesting that here's a bank that's moving so much money and doing so much activity, and you're not even the biggest in the world. Chinese banks are much bigger. So tell us about that a little, and the competition that you face when you go up against some of these large Chinese banks for business. Because I think most people realize now China is an adversary, if not an enemy right now.
Yeah, well, I'd put them in the adversary category, not enemy. But well, first, we compete with banks in every country. We compete with fintech here, and that 10 trillion. It's important to put.
Are you sure your tax expert is right for you? Switch to TurboTax Full Service. You'll be matched with a TurboTax expert and get real-time updates on their progress, and you get your best outcome guaranteed. Switch to TurboTax Full Service.
Thanks to Gone, our sales teams are closing more deals than ever. To celebrate, we gave everyone sales goals.
The 10 trillion, it's important to put in context, $10 trillion of money being moved, 3 trillion securities being bought, but it's also representative of the enormous flows around the world. So when people can estimate, they predict the effect of global flows of capital, it's hard to do. I mean, you're talking about hundreds of trillions of dollars a day that are moving around, people making all these different decisions about where to invest and where to send their money and who to pay, things like that. So the Chinese banks are bigger in terms of total assets, not in terms of market cap, probably about the same size. They're supported, they're state controlled. So it's very, very different. So they're kind of part of how they look at it. And China has this state, I'm going to call it state capitalism, kind of this mix of subsidies and how they run things, and it gives them the benefit they can run their country as a whole, and we don't. We have a democracy, and it's very different. But I do think, what I'm going to say about us is we need to get our own act together. We need to get, if you want to have America be very strong, our own health care, our own infrastructure, our own immigration, our own regulations, our own red tape, our own affordable housing, we could be growing at 3% a year. And I think we should be striving to that. And have we done that the last 20 years? Our GDP per person would be $15,000 more. So, to me, China isn't, if you look at us, 85,000 GDP, theirs is 15. We have all the food, water, and energy we need. They import 10 million barrels of oil a day. They're surrounded. They have a very complex geopolitical neighborhood. Philippines, Korea, Japan, Indonesia, Vietnam, Pakistan, India, Russia, and they're kind of angry, some of those folks too, because of what they're doing in the South China Sea. We don't. We have peace with the Atlantic and the Pacific. We have peace with Mexico and Canada. We're kind of blessed. We're blessed with the gifts of God and the gifts of the founding fathers. And so we should just get our own act together and we'll be fine.
Are there areas around the world that you see right now that are doing well?
Well, America's probably doing the best. And part of that is fueled by the fiscal spending. I remind people, we are exceptional, but not quite that exceptional. If other countries had borrowed and spent $1 trillion, they would have had more growth too. But there's other sides to that, the sticky inflation and things like that. But there's no, look, there are a lot of countries do a lot of things well, but there's no country with quite the innovation we have, quite the capabilities. This energy, it's an unbelievable thing because not only does it reduce the...
This is the reason why I said, do not bet against the United States. You will lose if you bet against the United States. And that was something that J.P. Morgan said, in the late 1800s and the early 1900s. All right, the founder of the bank that Jamie Dimon actually is running. All right, don't bet against the United States ever. You're gonna be hurt in the long run. All right, so just buy into the market and don't worry. You'll be much better off in 12 months from now. You'll probably see it better off by the end of the year.
For all of our industrial companies, But, that LNG that we could send to Europe is cleaner for Europe because the alternative is coal, and they need it to be secure. So to me, we have this unbelievable position, and it's unbelievable. Our financial services, we have the best financial markets in the world. I'm talking about all of it: capital markets, hedge funds, private equity, investors, and it is part of the flywheel.
And you have Democrats that want to erode that promise. They don't want you to export LNG. They don't want you to have functioning, markets. They want to add regulations and kill the goose that lays the golden egg.
All this innovation you see, and you have to see it in New York, you see it in Silicon Valley, you see it in St. Louis, in Kansas, in Austin, in Nashville. And so, this country is unbelievable. Democracy works, despite the fact, we seem to have a lot of polarization these days.
I want to get into policy with you, Jamie, and get your thoughts on what policies are needed now. The tax cuts conversation is going on. We're going to take a short break and tap into the energy capacity in America and the efforts right now to...
All right, that was the end of her segment there. Please go to my store, the-studio-reykjavik.com, and get this stack that will help with your bone health and your cardiovascular health. Get the vitamin D. Like I said, make sure you take it with magnesium. You can get magnesium from my vitamin C magnesium and zinc, or the Boomer Boost. But take D3 to absorb that calcium, and the K2. They work together to help reduce the calcium buildup around plaque. And over time, you can slowly pull that calcium deposits around the plaque out, all right? But it takes some time. And if you do resistance training and you take in calcium through a supplement or through drinking milk, you do resistance training, you're going to build thicker bones, all right? More dense bones, really important, especially when you turn 50, especially when you turn 40 plus years of age, for males and for females. Females lose more bone density quicker because of hormonal changes. But taking D3 and K2, really important, all right? But so you can improve your bone density and your cardiovascular health with the D3 and the K2. Stack it with the nattokinase and it supercharges the cardiovascular aspect of the stack. Nattokinase breaks up clots because it's fibrinolytic, and it helps with your total cholesterol. It'll help to lower LDL levels and increase your HDL levels. That means you have less plaque buildup. So take the stack, nattokinase, K2, and D3 together to help with your vascular health, and also by doing resistance training, the D3 and the K2 are going to help with bone density. So please go to my store, the-studio-reykjavik.com. Link is in the description. Use discount 5, you get $5 off. If you spend $150 or more on your order, any order, you will get a free gift until supplies last. Let's go back to Bloomberg.
Airlines pulls outlook as Trump trade war squeezes air travel. Stop trading up on the news, but interesting that they reported a pretty good quarter, but they don't have good visibility on their future travel. So they're going to pull their outlook, not provide it. And then I'm seeing Air France cutting fares to keep transatlantic budget seats full. So the airlines are starting to see some weakness from the consumer from some of this uncertainty created by the tariff policy discussions here. So we talked to George Ferguson, he covers the airlines for Bloomberg Intelligence. George, let's start with Delta here. What did they say on the call today? And why do you think the stock's up on the news? It's up 6%.
Yeah, because I think the call wasn't as bad, I think, as a lot feared, right? I think I'm still trying to absorb all that we just heard, but a lot of it, what we heard was the premium markets are still good. Europe is still good, but they're watching it very closely. Asia Pacific was a good market as well. Non-premium, back of the airplane travel in the domestic market is poor. And because of all that, they're going to they're going to flatline capacity, no growth for the second half of the year. So it sounded like
things are okay, maybe they're okay, but we're watching things very close.
But I remember that Delta and the other U.S. carriers probably several weeks ago cut their guidance. This was before, I think, an investor conference. So they've already cut guidance once here. So where are we there? I mean, do you feel like street estimates need to come down here?
Agreed. Well, so when I looked at the preliminary guidance for 2Q, it did seem like street estimates for 2Q had to come down, right? Because Delta gave some pretty broad ranges, but it looks like capacity is going to rise 5% when I look at schedules for them in the second quarter. And they said revenue could be up 2 to down 2. And if I did my math right, that means that either way, fares are softening. But the market seems to think things have gone too far. Delta stock price, and they're rallying, right? So again, it's we're definitely working off lower expectations after they cut earnings, expectations after the JP Morgan conference. But
so
seas are choppy here. So
George, I know every year you take a boondoggle over to Europe, either to London or Paris for these air shows, and this is where these big airlines may place big orders with the airplane suppliers, Boeing and Airbus principally. Are we going to get to a period, George, where if they even allow you to go to Paris, if the French let you in, will European carriers buy Boeing planes and vice versa? Will European carriers buy, or Airbus?
I think they will. I think they will because the queues for airplanes are so long. You're not going to get out of the queue you're in and go to someone else's queue and wait longer. You'd have to wait 7 to 8 years for an A320 out of Airbus, I think, as near as we can tell from the backlog they show. But what I will tell you, an interesting part of the call today was discussions with Ed Bastian about taking Airbus airplanes and who pays a tariff. And he said he's not going to pay a tariff and he's not going to take any deliveries, very few deliveries this year. So it does sound like Delta has a tariff problem and isn't ready to take new airplanes. Now I know they're flatlining capacity for the back half of the year, so maybe they don't need them. But if the market was growing significantly right now, I think he'd have a problem. And so it's interesting, right? Because in a call previous, he said he had ways to manage tariffs, but we didn't hear that this call. It's going to be an issue. The question is, how long does this tariff problem stick around? How long does the administration continue to push it? The negotiations come up where countries negotiate away these tariffs by making concessions, or at least making what looks like concessions. But right now, we're not seeing an impact, and if the world's slowing, we just may see a push out of deliveries for places that are affected by tariffs. Again, a lot of changes right now.
Yeah. So you mentioned kind of the weakness Delta was calling out on the back of the plane, maybe some of the more economy prices and seats. So does that mean the discount airlines, they're really going to face some trouble?
Yeah, I mean, the funny thing is, again, when sort of Delta, United, and American adjusted earnings a month ago, the low-cost carriers did a little bit, but the moves weren't as great. And the low-cost carriers had already been cutting capacity, right? If you think about it, Spirit Airlines went bankrupt. They cut, 40% out of their schedule or something like 30% of their schedule. Southwest significantly slowed growth. They went close to zero. JetBlue has been cutting. And now Delta came in today and said, look, we're going to cut the back half of the year to flat. So I feel like the full service have to make up ground here because they had been growing a little bit too fast. We'd seen that at the beginning of the year. We're going to see an earnings season whether or not maybe low cost got ahead of the curve here. I still can't believe that Delta can deliver a seat as cheap as a low cost carrier. So I personally think the low cost carriers still have a valid business here and they'll fill airplanes and do okay. But when you get into times of trouble in this industry, trouble is big in this industry, right? There's a lot of operating leverage. And so we're going to see, right?
But hey, jet fuel prices are coming down. I mean,
they are.
That's a thing. 30 seconds. Top airline to manage all this right now. What do you think?
I'd go with balance sheets, right? That's going to be companies like Southwest and Delta that have strong balance sheets can weather storms.
All right, fair enough. Thank you so much, George. George Ferguson, Bloomberg Intelligence, and your aerospace defense and airlines analyst, taking a look at.
Please go to my store, the-studio-reykjavik.com. Get the NAD+. NAD+ supplement will help to boost up your NAD+ levels. That will help to boost up your energy, and NAD+ helps to repair DNA damage, cellular DNA and mitochondrial DNA. NAD+ also protects your neurons. Extremely important to take this supplement if you're 40 years of age or older. Ubiquinol, the most bioavailable form of CoQ10 that you can buy. Ubiquinol helps to soak up free radicals because it's an antioxidant. It helps to boost up energy levels. Your ATP helps to improve the health of your mitochondria. And ubiquinol helps to protect neurons. Extremely important if you're 40 years of age or older. Stack these together, NAD+ supplement and the ubiquinol, take them together to protect your neurons. Now, what you also want to do to help with your neurons is learn new things. The more you read, the more you write, the more you talk to people in the real world, that will add to your neurons firing, all right? In addition, mindfulness is really important because through mindfulness, you're calming your body down, but not just that, you're reducing the chances of depression. And if you are depressed, there is research out there that suggests that depression actually reduces the connection of your neurons. So that's a bad thing, all right? So you want to keep those neurons healthy. The more neural connections you have, the faster you think, the better your sleep will be, the better your memory will be, and that will carry you into your geriatric years. If you have poor neuroplasticity, if you have negative neuroplasticity in your 50s, don't you think when you get in your 60s or 70s that it's going to be pretty bad for you? So please take my advice, protect your neurons. Another thing that you need to do is do exercising in all 4 modalities. You need to do cardio to get that blood flow into the brain. Very important for nutrients and just proper blood flow. And the other 3 more modalities are resistance training. When you're actually building muscle and you're contracting the muscle, you're using your neurons, you're firing neurons to actually contract muscle. If you're doing stretching and balancing, you are activating different types of neurons and activating the cerebellum, which is really important. So if you want to prevent gait issues when you get older, if you want to prevent atrophying, if you want to prevent negative neuroplasticity, then it behooves you to actually do these 4 modalities of exercise, learn new things, and protect your neurons with the proper supplementation. And taking ubiquinol and NAD+ together is going to help you protect those neurons. So please take my advice. It's a holistic approach, and it's a lifestyle. It's a lifestyle change so you can have more vitality throughout your years as you do age, all right? So please go to my store, the-studio-reykjavik.com. Use discount 5 and you get $5 off any order. All right. Let's go to CNN. Anderson Cooper is interviewing Scott Calloway from NYU. He's a professor at NYU and he's a marketing guy. And he's I haven't seen the video, but he's probably going to say Trump's tariffs are really bad. Right? But let's see what he has to say.
However you book your car, first check Kayak to compare hundreds of travel sites. Then do what people do. Recheck sites Kayak already checked. Check routes, research hikes, think about big.
We're now just a little more than 3.5 hours away from a big escalation in what has developed into a trade war between the world's 2 largest economies. An extra 50% tariff on Chinese imports on top of the 34% extra imposed last week, in addition to the 20% originally, 104% in all. Perspective now from Scott Galloway.
Oh, hey, Mr. Yale, intern at the CIA, working for CIA, Anderson Cooper, didn't want to say that there was an unfair tariff imbalance starting with China. But he doesn't want to add that really important caveat.
Podcast and co-host with Kara Swisher, the Pivot Podcast. So, Scott, do the president's tariffs make any sense to you or any more sense to you now than they did before? I mean, and what is the end game here? Do you see this as a route to some negotiation country by country?
It would be difficult to think of a more elegant way to reduce prosperity globally than these levels of tariffs. These are more than 10x the levels of tariffs in the first administration. On a gross level, they're actually greater than the tariffs levied in Smoot-Hawley. It led us into depression, where we lost a third of our GDP and unemployment was at 25%. If we're looking to alienate the largest trading partners in the world and shove them into the hands.
Yeah, let's use comparisons that are pre-World War II. Let's use comparisons that are pre the computer age. Let's use all these different Guess what? Things are different right now, all right, in terms of the way to, attack this problem with trade, all right? So using historical precedents or historical guidance may not be prudent, Professor Callaway. Don't trust
China. Japan, South Korea, and China are having talks for the first time in a while. If we're looking to reduce our purchasing power, our prosperity, take our markets down, this is literally the most elegant way I could think of doing this.
What about the 35 fucking years of NAFTA and throwing away our economic cluster, Professor Callaway?
In graduate school, I was a graduate student instructor in macro and microeconomics, and we used to talk about tariffs the way I imagine they talk about leeches in medical school, saying, can you believe they ever did this? So I don't know what the end game is here, other than somebody who believes he's a great deal maker and can go country by country and figure out a better deal. But
so you think that labor arbitrage should continue non-abated so the globalists can benefit and the middle class doesn't? Is that what you're saying, Professor Callaway from NYU? Really?
That I think the structural long-term damage here is really significant.
Beyond tariffs, the structural long-term damage, what, to America's reputation, to faith in our economic system?
The reputation of America means risk, innovation, IP, great universities. It also means consistency and rule of law. And in literally the last 10 weeks, rule of law has been thrown out the window, whether it's defying court orders or having essentially a used car sale on the White House lawn. It appears we're no longer engaging or holding up rule of law. And we seem totally inconsistent. The tariffs are on, they're off, they're on, they're off. Global trade has been this enormous unlock for the US economy and our prosperity. And anytime we take it down, we get especially hurt. This is the definition of stupid, is doing something that hurts yourself while hurting others. This could not be more stupid.
And so to the argument that the administration...
So it really sounds like he's promoting the status quo. Erode the manufacturing prowess and our military prowess and hand it over to the Chinese. And he's talking about IP. The Chinese have been stealing our IPs multiple ways. You want to sell stuff in China, or you want to build stuff in China? You have to have a partner that's, more than 50% or 50%. You have to hand over your IP. You have to hand over technology transfer. What about the 1,000 talent program, Professor Callaway? You think that was really, above board? People need to wake up. And, here's another, elitist promoting the status quo. Harm the middle class and ship the jobs overseas.
Bring American manufacturing back, to have iPhones manufactured here in this country, to have great jobs for people here.
The notion that somehow we're just dying for more first off, we're the second largest manufacturer in the world behind China. We have a lot of manufacturing already. The Cato Institute did a survey about manufacturing.
Yeah, and we lost a lot of it over the last 35 years. We have a lot of economic clustering that was shipped overseas. Detroit's tool and die industry was shipped to Windsor, Canada. Professor Callaway.
Percent of Americans think we should have more manufacturing. About 1 in 4, 1 in 5 have any interest in going to work in manufacturing. There isn't a line of people looking to go work.
See, this is where he fucks up. This is where Professor Callaway is just a jackass. To understand an industry, you got to work in it, and you got to work in it at the ground level. You think you're going to learn about automotive industry by business school? Let's say you get a MBA from Harvard. You're really going to understand the auto industry, or are you going to understand the auto industry by working your way up the ladder, by understanding the manufacturing, working in the manufacturing, moving into design, moving into management. And what that does is it allows people coming out of high school and allows people coming out of college to do their internships and to, plug into a certain industry and learn the business. And when you have those entry-level positions, you can actually do family formation and purchase homes. But that can't happen. Like I've been saying in this transmission today, that can't happen when the entry-level jobs aren't there, when the manufacturing isn't there, Professor Callaway. It's a stepping stone for a better life and understanding that industry. This guy's bullshit. Bullshit. And he's a professor at NYU.
Cottrell summarized it perfectly. We want to wear Nikes, not make them. We have outsourced the most underpaid jobs. Now, some people we've left behind.
No, wait. You got a lot of people coming out of fashion school and technology schools, and they can't find work because the manufacturing and the design is sent overseas. So you have a lot of people that actually want to make businesses, let's say making shoes, designing shoes. And because of automation now and the speed of design with CAD and additive manufacturing, 3D printing, all right, the capability of doing custom work quicker has increased, and you're lowering that cost barrier. So if you bring the manufacturing back to the United States, you actually can have more customized manufacturing and not mass produced. And now what happens is these kids that are coming out of FIT or these other fashion institutes or industrial design schools now can work in an industry and build businesses in the industry. If all of that economic clustering is another country, how are these students going to build their life? No, because what happens is they get the degree and they don't find a job. The economic cluster is not there for them to build a business. When you bring back the economic clustering, then what happens is that you can now build businesses. You'll have more students building businesses. You'll have more students going in and doing entry level and starting and learning the business. That's really important. But he's not thinking like that. He's not thinking 2, 3, 4 steps ahead. He's thinking, oh, we just don't want to make he's a marketer, all right? He's a marketing guy. And so he has this bumper sticker phrase. We want to wear Nikes. We don't want to make Nikes. All right? Now let's dive into that statement. All right? If you don't make stuff, you don't innovate. Really simple. If you don't make stuff, then the younger generation doesn't have a stepping stone to build their career. Not only that, you're losing all of those peripheral industries that build around these economic clusters, the mom and pop shops. So how are we going to get rid of our debt to GDP ratio if we're not growing our GDP? Well, we just want to wear Nikes and we don't want to make Nikes. such a dumb phrase. He doesn't really understand the industry. But there's another issue with this, and that's that whole rapper, urban mentality. And that is just to consume and not to produce. Not to really put effort into something, you're just a consumer. But eventually, that breaks. That system breaks. If you're not making stuff, you don't have a vibrant economy. You don't have the economic clustering. You think that you're going to have economic clustering by just consuming? No, of course not. Of course not. There are a lot of people that are coming out of design and engineering schools, and they can't find work because the economic clustering isn't there. You have fashion institutes now that are designed, they have programs where you actually, a course or courses where you're actually learning on how to design shoes using different fabrics, different materials, additive manufacturing, how to do prototypes. And these students getting out are ready to set up a business, but they don't have the economic clustering to do it, nor do they have the money to fund it. But if there were more businesses that they could plug into and learn the trade, they can build businesses later down the road. And that's how America was built before NAFTA. So I am completely in disagreement with Callaway on this. Professor Callaway is 100% wrong on this. No, we just want to, it's that bumper sticker phrase, we just want to wear Nikes, we don't want to make Nikes. No, that's not the case. Really? Why are there so many students that are going into FIT and in design in industrial design? Where are they going to do this work if it's overseas? So they pay $60,000, $80,000, $100,000 for a undergrad degree, maybe even a master's degree in design. Where are they going to work? Where are they going to work, Callaway? No, they do want to make the Nikes. Not only do they want to make the Nikes, they want to make their own brand. And that is that spark or that flame of freedom, of self-determination, life, liberty, and the pursuit of happiness. You can't do that if you destroy the manufacturing cluster, Professor Callaway, that teaches at NYU. An idiot.
Secretary Lutnick said that there are millions of people looking to drill in these screws in iPhones. If these tariffs go through, your iPhone's about to go from $1,300 to $2,100. To produce it.
Oh, okay. So it's going from $1,300 to $2,100. Okay. Do you really need this fucking iPhone? You really need to make Tim Cook more of a billionaire? Or maybe you can use a Motorola flip phone. Maybe this is the point in time where we detech our over-teched life.
$3,500. So we're not going to bring back iPhone manufacturing. These companies produce products on average 50 to 80% less expensively than we do, and we reinvest that prosperity in higher value add products. We import energy from Canada, we refine it, we add value to it, and we sell it at 3 times the price. So the notion that all these great jobs are going to come.
So wait, Professor Callaway, then why is it that the younger generation can't find entry-level positions? And we're not talking about students that just have humanities degrees. Professor Callaway, why is that? Oh, Dr. Paul Cottrell says it's because you destroyed the economic cluster. If the economic cluster isn't healthy, you're not going to have a vibrant economy for the youth that be plugged in. And therefore, they can't do family creation, and therefore, they can't afford a home. His thesis sucks.
Is nonsense. America doesn't want these low-paying manufacturing jobs. The basis of trade is that you do a great job of producing something for a lot less money than we do. We do another great job of producing things at a lower cost than you can. It tends to be our products are high value add, very high margin. NVIDIA chips have 50, 60 points of profit margin. Mercedes operates at 8% profit margin. So for every dollar we make, we effectively get a maximum exponential shampoo effect or echo effect of much greater value. Global trade has been the unbelievable unlock.
All right, then why are the millennials still living at mama's and daddy's home in the basement after they get their $100, $120, $150,000 education in college? Non-humanities degree. Professor Calloway, I'm waiting. I'm waiting for the answer. Crickets.
And massive prosperity in the United States.
What do you make of Elon Musk's criticism of the administration, in particular, some of the folks around the president, Peter Navarro in particular? I called him a dumber than a sack of bricks and a moron.
With the help of Xero's small business accounting software, I've got the right information at my fingertips.
So business is a breeze. And I know to the plan. Search Xero with an X.
It was absolutely amazingly divine.
You know, it makes for good theater. I think Elon Musk is going to fade to black. I predicted 3 weeks ago that within 30 days he would be out of government and Doge, because the bottom line is he could not have anticipated this type of blowback. And I think what really sent chills down his spine was when the province of Alberta and Poland, the nation of Poland, said that they were reconsidering their Starlink contracts. His brand has been so damaged by this, sales plummeting in Europe, and Starlink, which is his growth vehicle and now constitutes more of his wealth than Tesla. He's gonna leave the administration because this has not gone well for him. He is seen as someone who is not empathetic, someone who has usurped constitutional power illegally, and it is really damaging his brand. So, you know, the fight between him and Peter Navarro, that's good theater. He's going to be gone. He's out.
You've been very transparent in your podcast about the millions of dollars you've lost in the market in a 48-hour period last week. Obviously, you know, you're able to take a hit. Luckily, there's a lot of people who are depending on their retirement savings to make ends meet right now, thinking about retiring. We're now thinking, well, I can't retire. And what are they supposed to do right now?
Yeah, look, I want to be clear. This really hurts people. In terms of financial advice, and I've got a lot of emails saying, what should I do? My advice for anybody right now is to do the following: nothing. You don't make decisions when you lose someone you love, when you have a financial catastrophe or something really bad happens to you. I don't think you make decisions in the moment because you're not thinking straight. And also, this guy's so unpredictable, he could announce tomorrow that the tariffs are off and stocks could go up, the Dow could go up 2,000 points tomorrow, and then you really hate yourself. What I would consider doing is the following, Anderson, and that is, if you think you're just diversified because you're in an S&P index fund, you're not. You need to be geographically diversified.
Wrong.
And that is
totally wrong.
Talking about.
He is totally wrong. See, he picked that. Remember what I said? Don't bet against America. He's picking the strategy of a globalist. You got to diversify and hedge your bet because America might be going to. Don't bet against America. Trust me on this. We are moving into a new revolution. This revolution that we are seeing is a life, liberty, and the pursuit of happiness, but it is not the same type of revolution that we saw in the 1700s. This one is an economic revolution. We will prevail in this. Trust me. Trust me. Do not invest in foreign assets. Trust in America. Long term, you're going to benefit from this. America is fighting another revolution. We will not lose. We will not lose. That doesn't mean there won't be pain. But here's a red coat. During the revolution, there were lots of New Yorkers out there that were actually for the King of England. There were lots of people that were from Harvard, and the Harvard the Harvard administration that were for the King of England, not for George Washington and the founding fathers or the revolutionary cause. They were trying to hedge their bet. They were saying, well, you know, these roughnecks, you know, that are roaming around in New Jersey with George Washington, guess what? They're going to lose. We're going to be aligning ourselves with the King of England. How's that any different than Professor Callaway, who benefited from life, liberty, and the pursuit of happiness, and the ones that decided to take the call of duty and fight for this great nation? This little shit is running away, and he's a redcoat.
The multiple contraction in stocks, in my opinion, are due for 5 years of decline in the U.S. You may want to think about taking some tax losses and then diversifying into other geographies, Asian, Latin American, and European stocks.
No. This is what I want you to do. I want you to buy into American stocks, but do it at a broad index level. Now, you may want to do it in the Russell 2000. You may want to do it S&P 500, which is what I recommend. You can do it lots of different ways, but do it in a broad index and buy in slowly. All right. And as we recover, it's going to go up. Now, we just played what Jamie Dimon had to say. That seems a lot different than and who do you trust? Jamie Dimon, who's running JP Morgan, or Professor Callaway, that's a professor at NYU, that's a marketer. And, oh, by the way, a redcoat.
Out of emotion, because usually the same emotion you're feeling is what other people are feeling. And if you had followed some advice from famous CNBC people in 2008 and said, you can't stand the volatility, get out, and then the markets ripped back and recovered all of their losses within 14 months, think about the hit to your mental health. So what do you do right now? You do nothing in the short run. You do not have emotional panic selling. You talk to people and maybe think about diversifying across geographies, not just across the S&P.
Don't bet against America, because what happens is if this does turn negative, there's going to be a war between the United States and China. And who do you think is going to win? The United States is not going to win. The United States will win that. We will not lose. All right? We cannot lose. The United States' back will be to the wall on this. That means that the Forbidden City will be gone. That's where this is going. Do you really want to be diversified if this thing gets really bad? Okay, let's assume it doesn't end up into World War III, and that and Taiwan isn't a flash pan. All right, let's assume that. But there's a global recession. Do you really think that your diversified portfolio in overseas assets are going to perform better than American assets? Don't be a fucking idiot. There's the interconnectedness of this is so vast that if there's a global recession, who's going to benefit the most is the United States. Do not diversify in a different country. Don't do it. Don't do it. Don't do it. You're going to hurt yourself in the long run. Now, if it goes to World War III, you better be betting for America, not against America. Because we can't allow China to win. We just can't. And even if that means nuclear weapons. It's amazing. It's just amazing how many people are willing to try to sell America down the river. It's so sad. All right. Bloomberg is on break right now. So let me plug another product. But I'm very passionate about this subject matter. All right? Do not bet against America. In the long run, you will benefit. Most of the tariff will be negotiated with these other countries, and it'll reach some sort of equilibrium, some Nash equilibrium. With China, it's going to be a game of chicken between President Xi and Trump, and I suspect that President Xi will swerve. Now, what could happen is that President Xi feels the stress of potentially being overthrown by internal politics that's happening within the CCP because he doesn't have full control. That's another thing that people aren't paying attention to, and that he may feel as though he has to make a move on Taiwan. So this could lead to a major escalation that leads to military conflict. That's what this can mean. That's the bigger issue here. Now, when you don't have a manufacturing base to build for your war effort, especially for the Navy, don't you think you're going to have a problem? Voila. And this is why Professor Callaway is a fucking idiot. Please go to my store, the-studio-reykjavik.com. Get the clarity factor. This will help to remove that brain fog. And believe me, Professor Callaway has a lot of brain fog. He just obviously cannot see through the fog that's in his brain on how important it is to stay the course and don't bet against America. Now, clarity factor will reduce that brain fog. And also, clarity factor will help to support your memory. You're going to have better neuroplasticity. You're going to have those neurons firing. And when those neurons are firing better, you're going to have that better connection. When you have better neural connection, you're going to think faster and you're going to have better memory. And you'll also notice that you're sleeping better. But besides that, when you are learning new things, you're going to improve that memory. You're going to improve that neuroplasticity. Get some blood flow going with cardio. You're going to get those nutrients that you need for helping with that neuroplasticity. And you're changing that lifestyle. You're slowing down the atrophying of those neural connections and you're improving the connections. And that means that you'll have more vitality when you're older. So please go to my store, get the clarity factor, and buy a few bottles and send it to Professor Callaway, because obviously he has a lot of brain fog. He's telling you to diversify into international markets. Really? Really? If you're going to have a global recession, do you really think you want to do that? I mean, come on. Please go to my store, get the clarity factor, and also get the Myotrol. You can stack it with the clarity factor. The clarity factor is focused on your brain function. Myotrol is focused on your musculature. Myotrol will help with the gene expression to build more muscle and to maintain muscle mass. Really important. Once you turn about to age 40, you start to atrophy with your musculature for males and females. So it's important to take this every day. Do resistance training. It stacks really well with gladiator barley, which is a high density protein. And Myotrol has flavonoids, polyphenols, and lignans to help with that gene expression and also improve your mitochondrial health. And so you'll have more ATP. You need lots of ATP to maintain those muscles. Do you notice with people that get older, the health of their mitochondria starts to go down and their ATP starts to go down. And when that ATP starts to go down, you lose muscle mass, you're not as active, and the cells don't perform as well, and all of a sudden other things start to decline. You start building up free radicals, and you get further decline. Your immune system starts to weaken. Your endocrine system starts to weaken. Your bodily systems don't function as well. But you can reverse that by increasing the health of the mitochondria, by doing resistance training, building up energy levels, speeding up your metabolism. And when you're doing that, you're reversing the effects of that atrophy that is associated with age. All right? So please go to my store, the-studio-reykjavik.com, get the Myotrol. Do that resistance training, build that muscle. Stack it with the clarity factor to also help with your brain health. All right? You don't want to be a Professor Callaway. That's a red coat. All right? Don't bet against America. It won't turn out very well for you.
Forget Democrats. They're not part of this process. And Republicans agree on how to move forward here. With news on tariffs, this came initially from Punchbowl, since codified by Congressman Don Beyer and others on Capitol Hill talking about this. Republicans are using the rule for the budget resolution here to turn off privilege for any resolution dealing with the April 2nd trade emergency that the administration is using to justify these tariffs. It shuts down Democrats for the rest of the fiscal year till September 30. Interesting moment as we wait for a rules vote and a floor vote, with headlines on the terminal that you might not have envisioned even a couple of weeks ago. China raises tariffs on U.S. goods to 84%. Remembering we slapped 104% combined tariff on China. And as I keep the doom scroll going here, Amazon canceling some inventory orders from China after tariffs. So it's already having an impact here. This isn't 6 months down the road. It's right now, just like the market has been pricing.
And none of these experts say that if the economy, which is not that great in China, starts to decline because they can't ship their goods to the United States because people aren't buying them, then there's going to be internal pressure to overthrow Xi. But Professor Calloway can't see that because he's a marketer from NYU.
Disney movie of the brooms carrying the buckets of water, that is a Chinese business model. It never stops. They just keep producing and producing and dumping, and it's going somewhere.
It's a cool movie. Naveen Girishankar does this for a living. He's the president of the Economic Security and Technology Department at CSIS, Center for Strategic and International Studies, former senior official at the Department of Commerce, and back with us right now on Balance of Power. We wanted to speak with an expert, Naveen. We welcome you back. It's good to see you. Thank you so much for your time. Just broadly speaking here, 104% the U.S. slaps on China, the world's second largest economy. China bites back today, as we were just saying, with a much higher tariff of 84%. If these stay in place, what does it mean for the global economy?
Dumb question. Dumb question. It's going to escalate, not stay in place. It's going to be higher tariffs.
1% hit the GDP, price rise of about 10%, and basically a fall in real wage. Now you add to that the 104% tariff that President Trump announced and the 85% on China. We are in the midst of a unraveling trade war. And remember, it's a multi-front trade war. It's not just the Chinese, although they've taken the headlines today. It's also our erstwhile allies like Canada, Mexico, and then the EU. And they've also announced or are undertaking countermeasures. We are in the middle of a multi-front trade war. Be not mistaken.
You specialize in tech. Everybody's looking at Apple right now, NVIDIA, Taiwan Semiconductor. They all have their own challenges here. If you remove the Chinese market, what does that mean for their business, for their shares? Has the selling been justified?
Yeah, I think it's going to be a hit to companies that sell in China, but I would add another piece to the trade agenda. All of the technology value chains that we're involved in, whether it's semiconductors, AI, chips, clean technologies, biotechnologies, these are all global in nature. And so when all of these tariffs are accounted for, they make it all the more difficult for U.S. companies that are competing in those technology value chains to compete effectively. It's an unraveling of those competitive advantages that are essential to our long-term economic security. And that's the message that I want to make sure that we don't miss here. You can't win the tech war if you're fighting a trade war.
I was looking at a note that you kicked out, writing the conduct of U.S. government policy itself is now the main source of risk to the U.S. economy and U.S. markets. Policy volatility seems to be the point. What is the point if the call's coming from inside the House?
Well, you know, the president and several of the cabinet secretaries have said, expect to experience short-term pain for long-term gain, but they have not told us what the game plan is. What's the desired end state? So is this going to be short-term pain for long-term pain, which is what people are worried about?
Trump said what he wants. And he said it on Oprah in 1980. He hasn't changed. It's really simple. Manufacturing needs to come back to America. The ripping off of the middle class needs to end. We need to have the economic clustering back here. It has been accelerated with the loss of our manufacturing and the economic clustering since NAFTA. We've had 35 years of a bleed out of our economy. And they just want you to become a consumer. They don't want you to be a producer. They want you to just consume. Bread and circus. Oh, things aren't that good? Oh, we'll just pump more money from the Federal Reserve. Oh, we'll just produce more fiscal spending by Congress, and we'll just send, ship and sell more bonds overseas. Meanwhile, the younger generation can't find a good paying job when they get out of high school or college. And therefore they can't buy a home, and therefore they're living in the basement, and therefore the society goes to shit.
Our agency, we're going to have armies of Americans screwing in screws into iPhones, assembling products like that here in the United States. Not advanced manufacturing, quite the opposite in that case, the type of thing that is done in China and in other countries. Dan Ives suggests if that happens, an iPhone will cost you $3,000. Is that the type of vision that you share as well?
Certainly not. I think that there's a problem with trying to go backwards to a world like the 1950s or 60s or even earlier, when you have manufacturing in the U.S., but it's not competitive and it's labor intensive. Can we compete? We can't even compete on that basis. I would subscribe to a vision where we think of the most advanced technologies and the full range of skills that are needed to compete on those technologies. Our best scientists, our best technicians, but also people who are building semiconductor fabs, people who are building the infrastructure that's needed to compete on that basis. That places a premium on American ingenuity and innovation. Screwing in screws in iPhones doesn't do that. And so I think we have to get clear on what is the desired end state.
Here's the thing that he's not, to build an iPhone is a lot more than just putting a screw into an iPhone. You ever open up an iPhone? And it's hard to do, but I mean, I've seen an iPhone opened up. You can look on the internet and see it. All right. There's a lot of pieces to it. All right. A lot of that is automated. All right. But it's not just putting in a screw. All right. And those screws can most likely be automated to be put in. But the thing is that you're going to be hiring manufacturing engineers, and you're going to be hiring statisticians, and there's going to be tool and die. And to make all of that economic cluster, that tier 1, tier 2, tier 3 supply chain, that's going to have more jobs. So you're building tools to actually be used on the assembly line that is primarily automated. All right. But not just that. When you have, if you're building the circuit boards for these phones, and you have a college student or a grad coming out of college, all right, a great way for them to learn the business is to be on the manufacturing floor for a while, to be able to actually move into the design. And therefore, they understand the whole process. See, it's obvious that he doesn't understand manufacturing because he thinks it's just about putting screws in. What about the actual tool and die for all of these components? The way, a lot of people don't know this. You may have 4 different clusters, or let's say a 10 cluster housing for the iPhone. The dimensions of that iPhone are slightly variable, but if they're so tight, what it does is that they have scanners that scans the dimensions of the housing and looks for a piece of glass that will best fit for those dimensions. All right. So they have another scanner that knows the full dimension of the glass, and it will pick which one will be the best fit. all right? Before these kinds of scanning technologies, it was just, are you within tolerance? And then the glass would be put in, and you would have slight gaps between different products. They tightened up that gap by doing they literally are customizing the pick from the batch, from the housing batch and from the glass batch to actually have the best fit. That's an automatic scanning process. But it takes humans to build up the tools, the housings, programming the scanners, the movement of the robot for that to take place. Those are high-paying jobs. They're selling you something. They're selling you it's just about screws, putting screws. No, wrong. You got to look at every single piece and how it's put in and how it's fully assembled. And what goes into building that apparatus, that manufacturing apparatus, all along down that assembly line. And different stations will have different things. That's manufacturing engineering. Those are high-paying jobs. We're being sold a bill of goods where they want you to believe that you absolutely have to have a phone, which you don't. But they also want you to believe that to get a phone, you have to have it in a low-cost center. No, what it is that they have manufacturing tooling that's cheaper, not the assembly, but the manufacturing tooling companies will do the work cheaper than what you would have in the United States. But the thing is that once you do the manufacturing design and you set that all up, then you're producing so many pieces that the actual cost per item has gone down drastically because you're talking millions of these, not 10,000, millions. So the price differential between a manufacturing tier supplier for the iPhone is going to be absorbed by just the volume. That's the thing that they're not telling you. Because they got a fancy degree. And they've never worked on a manufacturing floor ever in their life. I bet they've never walked on a manufacturing floor. I mean, it's ridiculous. All right, so Bloomberg's on a commercial break. Let me just plug another product here. Please help support my work. I do these videos for free, all right? I guess they're entertaining. Maybe they're not. I don't know. But I really want you to get the products on my store, the-studio-reykjavik.com. It helps support the work that I do, but also I want you to get healthy, all right? It is in your power to get healthy. And it's about taking charge of yourself, and it's a holistic approach, all right? One great supplement that I have is resveratrol. Resveratrol I've been taking for decades. It's an antioxidant, so it's going to soak up free radicals. It'll help with the health of the mitochondria, boost up those energy levels. With good healthy mitochondria, you're going to have higher ATP levels. It will help with youthful gene expression, get rid of cells that are in senescence. So please go to my store, the-studio-reykjavik.com. This stacks really well with NAD+, ubiquinol, and C60. So use discount 5, you get $5 off. If you spend $150 or more, you get a free gift until supplies last. Make sure that you take a look at the anti-aging boxes or the longevity boxes. They're at a discount. They have a built-in discount compared to purchasing the items individually. They're at different price points, and they're focusing on different areas of the body, so you can customize this to what you're looking for, all right? And you can use discount 5 on top of it. I have done everything in my power to be able to get the prices to a reasonable level so you can get these products in your hands, you use them, and you get healthy. This stuff works. You stack it the way I tell you to, and you're going to get healthy, but it's a holistic approach. It's not just taking supplements. It's also a proper diet, proper exercise, proper supplementation and sleep and mindfulness and learning new things. They are all important. If someone says, just take resveratrol and you're going to be healthy, wrong. If someone says, just pray to Buddha, you're going to be healthy, wrong. If someone says, all you need is just proper sleep, wrong. If someone says, just eat your vegetables and everything will be fine, just be a vegetarian, wrong. It's a holistic approach. Please go to my store, the-studio-reykjavik.com. I am the most comprehensive on this. All right. What is going on with Bloomberg here? Yeah, so let me just read some of the texts that Andrew and everybody's typing in, Amber. All right, let's go back to Bloomberg here.
Discussion on Wall Street that the Fed may need to step in to stabilize the Treasury market if the rout that briefly propelled long-term U.S. borrowing costs above 5% continues. We've got stocks trading higher right now with the Dow, the S&P, NASDAQ all in the green. S&P right now up 33. That is an advance of 0.7%. The Dow up 185 now.
Let me do my market update here. So on my dashboard, the S&P 500 is trading at 5,011. Like I said, there is a support level, a very strong support level at 4,810. If that breaks, the next support level is 4,500. Now, so we're okay. We got a little bit of buffer. VIX is a little elevated at 49. Don't like that. We need it lower. The Euro USD is trading at 1.10. Oil is trading lower at 57.38 compared to yesterday. And BITO, which is a Bitcoin ETF, is trading at 16.92. So there's pressure on Bitcoin. Obviously, there's a correlation between Bitcoin price and equities. So as equities are selling off, same thing is happening to Bitcoin. The USD and Japanese yen is a great stress indicator to look for. It's trading just below 145. Like I said, I'm concerned if the USD Japanese yen starts trading below 140, that is a big problem. It's showing a lot of stress internationally, and there's going to be further potential financial market contagion. All right. So going back to what Professor Callaway, who's an idiot, said, he said, well, you should diversify. If you're going to buy into the market, don't buy into the United States, buy into other nations. Well, if the Japanese yen breaks 140, there's going to be financial contagion around the world. And those diversified assets that you put into international markets that Professor Callaway said to do would tank. That's why you don't want to do that. All right. There is stress building up in the international system. Just look at the USD Japanese yen. Watch. If it breaks 140, you got a problem. Now, right now it hasn't. It was just a week ago, a week or a week and a half ago, it was trading at 150. Now it's trading at 144. Guess what? We're not that far away from breaking 140.
So if they're with the wife, they put the helmet on a table there. President spoke for a while. That's going to be the job today. That starts a little over an hour from now. Well, on the other end of Pennsylvania Avenue, Republicans are knocking their heads together over what to do with the president's agenda that will lead to reconciliation. The budget resolution that we've talked a lot about. Yeah, one big, beautiful bill. Well, it's got to get out of the Rules Committee before it gets to the floor, which is Speaker Mike Johnson's plan at the moment. Maybe it's a hope, maybe a dream, because they're running out of time here. He's got basically 48 hours to get everybody on board. They need pretty much the whole Republican conference to make this happen. No Democrats are going to be part of this because they've got to get this done before Easter. Everyone's going to be leaving for a couple of weeks. Next couple of days are going to be critical. Republicans like Chip Roy could make this very difficult for Mike Johnson to get done. As Donald Trump said last evening, speaking here in Washington, close your eyes and get there, he said. It's a phenomenal bill. Stop grandstanding. Speaking to members of his own party, presumably will be picking up the phone at some point if he needs to. That's where we start with our political panel today. Rick Davis, partner at Stone Court Capital, our Republican strategist, alongside Jeannie Shanzano, Democratic analyst, senior.
Now, Rick Davis, Stone Cold Capital, where the hell he is. All right? Nice, fancy leather seats in the background. And he's on Bloomberg all the time. We've been covering this for months, and he's always on Bloomberg. And guess what? Would you want to give Rick Davis your investment money when he spends so much time on Bloomberg and not watching the markets? Literally, this little community that we have here, where you're watching live on Rumble, on YouTube, on my website, and simulcasting on X Spaces, we watch the markets even closer than Rick Davis does, and he professionally trades his shit. This guy is dumber than a box of bricks. Stone Court Capital, LP. And he'll tell you everything wrong about Trump.
This last Tuesday, yesterday, saying there's nothing he's going to tell me that's going to change my mind. So, when they start invoking Trump like that, you got to start paying attention, because at that stage, they're setting up a showdown, and it's probably not a showdown that if they cave to Trump, they're gonna look good to their voters. So I got a sense that this actually has more legs, this revolt, than previous Republican protestations in the House.
No, what the problem is you got Republicans that are worried about the midterm elections, but they're more worried about not so much the voter. Because midterm elections is that's late years away right now. All right, yeah, it's 2 years, but it's late years away, less than 2 years. But in terms of politics, that's a long way away. They're more concerned about what they're hearing from K Street. They're more concerned about their multinational corporations pushing their global agenda. All right, and they're yelling in the ear of the senators and the representatives, saying, "How dare you let Trump do this? Blah 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 blah. We're losing. Blah 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 blah." That's what's happening. And so you have a lot of Republican representatives that are not really caring about Middle America. They're caring about their golden parachute with their insider trading, and it's tanking right now, and their alignment with K Street. Another genius from the Center for the Study of Presidency and Congress, who seems to always get it wrong. Jeannie.
Did he make a strategic mistake? We don't know yet. But imagine had he waited for Liberation Day, got this reconciliation bill done, and then done it. It might be an easier path, but now it is just fraught for these Republicans.
Well, Jeannie went there, Rick. This is something House Republicans using a rule.
Let's go back to history. Bloomberg. George Washington had a lot of problems early on in the war. There were people in the Continental Congress that wanted to kick him out. Doesn't that sound really familiar? You have Republicans that are maybe turning coat, not staying the course, not willing to help fund. It was Hamilton that had to beg people to give provisions to the army while they were freezing to death, literally, at Valley Forge. Guess what? It didn't turn out so well for the ones that were wanting to kick George Washington out. Don't bet against America. I'm telling you. We are going to prevail. But you got these people here that would have said,
members love their privilege. I mean, it's one of
let's just join the king.
Feel, even though they tend to kowtow to leadership and do what they're told to do, they always have this idea that if I need to, I can always move a privilege resolution. That's part of my power. Why would I ever give that up? And in this case, leadership's saying, well, we're going to take it away from you. You're not going to give it up. We're going to put it in the rule of a must-pass budget resolution that, we can't argue that we can get the Trump tax cuts without it. So
It's pretty convoluted. I suspect that's going to cause a lot of anxiety amongst the more libertine members of the Republican caucus. And so I think it does.
The reality of the situation is this. We have a lot of representatives in Congress and in the Senate, especially the Senate, that are really old, all right? Really old. And they have positions in the market that are tanking. So it behooves you to actually buy stock in Depends, because you got a lot of representatives and senators that are going to be crapping their pants as we go through this tariff war. You just got a stock pick.
Silver lining in the opposing party's perceived overreach.
Yeah, Joe, I love when you read these parts of these bills, so I want you to do that more, okay? It's beautiful reading of it.
Thank you.
You know, I think Democrats, there's not a lot they can do at this point. I mean, you know, they are very much in the minority. They have to sit back and continue to speak out against what they see as the single dumbest act a president has ever taken in terms of declaring a global war of trade against every country, including our allies, under an emergency. That's really specious. And so they're going to continue to make that case. They are also going to push hard on, if Republicans can get this through, this, you know, what was supposed to be the easy step of this resolution, what do they face next? Well, what they face next are the potential of cutting billions of dollars worth of Medicaid. And they're going to now be taking these votes at a time when the stock market has crashed in the way it has. People's 401ks have crashed. The price of everything at our stores is going up. You know, this is going to be a very difficult vote. So, you know, this is just the beginning. And I think it is just so fascinating to watch Mike Johnson spin the way he is, or weave, to use Donald Trump's words, and try to remove days from the calendar. You know, we've really heard a new world here. It's feeling very 1984 George Orwellian here.
Shall not constitute a calendar day. I feel like if we just did that Monday through Friday and just lived our weekends, we'd have life pretty well figured out. Rick, based on what we've seen from this speaker, does he bring this bill to the floor without knowing if he has the votes?
We have seen him do that before, so we would have to assume that he'd do it again. It's not clear to us. Maybe he's got a commitment that these people will complain and bellyache and still vote for the resolution. Who knows? But this is not a risk-averse speaker. I mean, the whole reason he's speaker is because of chaos and tumult, and so why not manage a speaker in the same way? And so I don't think he probably knows today where his whip count is, where his leadership's commitments are as far as voting for this resolution. And yet my bet is he takes the vote and tells Trump he's got 15, 20 calls he's going to have to make, because that's how these things have gotten done. Trump has had to intercede and make people vote along partisan lines. And at some point, some of these guys may start saying no to the president, and then his implied authority, his ability to move things through the House upon his own will, is going to be checked. And that then creates all kinds of new chaos.
I don't know if you guys look at the Drudge Report anymore. I don't mean to get all 1990s on you. But apparently Speaker Johnson does, Jeannie. The reporter at Notice, Alex Wordy, just put up a picture on Twitter of Speaker Johnson, pictured on his phone, and it's zoomed in. He's sitting at the table looking at the phone with front page of the Drudge Report on it. This was taken during Donald Trump's speech last night. So I dialed up the Drudge Report and make myself feel like an old man. There's a big picture of a roller coaster going straight down, Jeannie. The headlines are, stock roller coasters, bond rout deepens, street rattled, sell everything American. Does that reflect our situation? And what do you think, Mike Johnson?
Do not bet against America. Trust me on this. You're gonna lose out. Buy into this slowly. Don't spend the whole farm, but just slowly buy into this and you will benefit.
You have the Speaker of the House, his closest ally, watching this train wreck that is happening before them. And by the way, if Donald Trump tries to twist the arms of these folks, is he still going to have Elon Musk to call up and threaten to primary them?
What about Jeannie? What about the slow train wreck that was happening for the last 35 years with NAFTA? And we were shipping our manufacturing overseas and losing the economic cluster. Wasn't that pretty crazy? And now the youth can't find work, can't buy homes, can't form families.
And Zaino, our great panel, back in our second hour here with a lot more on what's happening today in Washington. We've got to cover both ends. This vote could be coming this afternoon in the House.
What's really important is finding out what happens with the Treasury bill auction today to see if yields, how they are affected. And I think that happens at 2 o'clock. But please go to my store, the-studio-reykjavik.com, and just get the collagen. All right, it's the-studio-reykjavik.com. And this is a dual purpose product. This will help with your skin, your nails, your hair, your joints, your musculature, your bones. Really important. Now, it has a typical amino acid profile shown on the screen here. You can see the label more carefully at your leisure on my website, the-studio-reykjavik.com. This has a big scooper. Take 1 scoop a day, mix it with soft foods or filtered water. Some people mix it with milk. Some people even mix it in their coffee, like Amber does. Now, I haven't tried that, but supposedly I guess it works. But collagen is really important to take every day. All right? Take it once a day. Do some resistance training. That's going to help with your musculature. That's going to help with your joint health and your cartilage, and especially your bones. All right. So doing resistance training on a regular basis is really important. But also, if you take the vitamin C and you drink the filtered water, it's going to cross-link and improve your dermal layer for your skin. It's going to help with your hair and your nails. So take collagen every day. This is very important, especially when you get older. All right. So this is a product that you can stack with the structural nanosilver gel, the vitamin C, the C60, and the resveratrol. Why? The structural nanosilver gel is the topical treatment for your skin. The C60 and the collagen, with drinking filtered water, you want to drink about 32 to 64 ounces of filtered water, preferably 64 ounces. But some people can't drink that much water. So drink the filtered water, 32 or 64 ounces. It'll cross-link, and the vitamin C and the collagen will cross-link and improve the dermal layer. And the basal layer, which is where the new skin cells are formed, the C60 and the resveratrol improves that. So it's a 3-layered system, right? You can get those at a discount by purchasing the anti-aging skincare box, beginners or advanced. The advanced has the C60 and the resveratrol. The beginners has the collagen, the vitamin C, and the structural nanosilver gel. Those structural nanosilver gel, vitamin C, and the collagen is also in the advanced box. All right. So if you want to treat your skin better, get those anti-aging boxes I just mentioned. They're at a discount. All right, built-in discount. Comparing it to purchasing the products individually. Use discount 5 on top of it, and you save money. So get the products, spend $150 or more, and you get a free gift until supplies last. Please help support my work. All this stuff I'm doing is for free. I got thousands of videos for free. And where else are you going to get entertained like you are right now? And learn on how to actually trade the market. Because I just told you where the bottom is, major support level for 4,810 for the S&P 500. There is a 40% chance that we just saw the bottom of this issue. All right, 40% chance. Now, there's a 60% chance that it'll go below the 4,810 level. If that does break, then the next support level is 4,500. All right. And then you have another 40% chance that that will be a bottoming effect. And then there's a 20% chance of that breaking and it going down to 4,100. And then most likely that will be the bottom, all right? So you have 40% chance that 4,810, another 40% chance of 4,500, and a 20% chance of 4,100. All right? With that, you can position yourself to buy in to the market. All right? But we might have seen the bottom on Monday. It all depends on this game of chicken with China. So where else are you going to get that level of detail? Nowhere. And learn how to improve your health. Please go to my store and help support my work. All right. Let's go to, let's go to Jesse Waters. He's talking about how Democrats got rich off of the sucking sound. I'm telling you, I have seen the horrible effects of NAFTA on the automotive industry. All right? It's time to bring the jobs back home. And you got to realize it's about the economic clustering. It's not about the actual line job that's doing the final assembly. That's not the point. The point is the economic clustering that takes place. All right, let's go to Fox News.
Remember that giant sucking sound? We have got to stop sending jobs overseas. To those of you in the audience who are business people, pretty simple. If you're paying $12, $13, $14 an hour for factory workers, and you can move your factory south of the border, pay $1 an hour for labor, have no health care, that's the most expensive single element making your car, have no environmental controls, no pollution controls, and no retirement, and you don't care about anything but making money, there will be a giant sucking sound going south.
They called Ross Perot crazy, but after 30 years, they call him right. Bubba was wrong. He signed NAFTA and the giant sucking sound came from the south. And then he signed the China deal and the giant sucking sound came from the east. Yep. There were a lot of sucking sounds in the 90s. And Chuck was fed up.
We are fed up, Mr. President. The Chinese should play by the rules once and for all. But how can we stand by?
Well, let me get this straight.
As millions
on C-SPAN in 2005, Chucky Schumer, who puts cheese on his hamburgers, meanwhile he's Jewish, he's not supposed to do that. Chucky Schumer states that China is cheating. But it's okay to say this on the floor of the Senate because it was against Bush. The Democrats, the Democrats going against Trump on this is going to fail. And I mean, Chucky Schumer has always been like tier 2 to Nancy Pelosi. Who the genius of the Democratic Party for the last 20, 25 years has been Nancy Pelosi. Now, since she's a drunk and she's like really aged out, there's no leader now. And he's a shell of himself.
Lose their jobs. As thousands of American companies can't compete fairly. No one seeks political advantage. What we seek, rather, is fairness. Fairness in trade.
The party that represented workers, the Democrats, immediately recognized the giant sucking sound was bad for workers, but good for donors. Wall Street got rich off the giant sucking sound, and so did Pelosi, Hillary, Kerry, Gore, all of them. So they talked about it to win votes, but didn't do anything about it, and turned China into a monster, their monster.
I worked at a factory. Went to the factory in 1989. We made radial passenger tires for cars. I worked there with my dad, 8 of my uncles, and 12 of my cousins. I was a union short there. That plant now sits in China because you can import small radial passenger tires pretty cheap because of our
failed trade policy and this Democrats' opinion. Detroit, Pittsburgh, Cleveland, St. Louis, Milwaukee, I could go on and on. They traded jobs and honor for cheap phones and TV screens. Trump's declaring an end to the giant sucking sound and decided to slay the monster.
Countries like China, who have chosen to retaliate and try to double down on their mistreatment of American workers, are making a mistake. President Trump has a spine of steel, and he will not break.
Why did the voice end? Come on. What's wrong with this?
Not break under his leadership. When America is punched, he punches back harder. That's what.
And tariffs going into effect on China tonight at midnight?
So when the clock strikes midnight tonight, the battle begins. China will be hit with triple-digit tariffs. The export menace should have never retaliated. Trump believes he has the cards and likes his chances.
Trump has maximum negotiating leverage right here, right now. And I think it would be a mistake for anyone to think otherwise. I think it was a big mistake, this Chinese escalation. If you look at the history of the trade negotiations, we are the deficit country. So what do we lose by the Chinese raising tariffs on us? We export 1/5 to them of what they export to us. So that is a losing hand for them.
China had a plan. Dump cheap goods into the rest of the world, use the money to build their military, and pass the U.S. as the world's top superpower. But if China can't dump cheap goods here, and we're the world's biggest market, they have nowhere else to sell. They can't sell to Europe. They don't have the consumer power. And they can't sell to themselves because their birth rate's cratered. And once China can't sell, they have to lay off their workers. And the communists don't want 1 billion angry unemployed Chinese. That's how regimes get toppled. But we have to let Xi Jinping lose face gracefully. A quick, violent death makes us collateral damage. So we have to lower the Chinese casket into the ground diplomatically. While Trump's taxing Chinese products, he's kicking them out of the hemisphere. Pistol Pete's down at the Panama Canal today, flexing the Monroe Doctrine.
The United States of America will not allow communist China or any other country to threaten the canal's operation or integrity. I want to be very clear. China did not build this canal. China does not operate this canal. And China will not weaponize this canal.
China bribed the Bidens, but boy,
we just have to make our chatbot more agentic.
Whoa, future John here. You're here too?
Yeah, and thanks to CX1 Empower, things are going to get way less awkward.
At Harbor Freight, we're committed to ensuring our tools are expertly engineered and built to last. We rigorously test and refine our tools until we're absolutely certain they're every bit as good as other top-name brands. Look no further than Harbor Freight.
China bribed the Bidens, but boy, did they pick the wrong horse. Trump knocked the big guy out, and now he's wrestling their precious TikTok away. And Beijing's on its heels. Breaking China also guts Russia. The Chinese can't fill Putin's shaky economy, so now that Trump's engineered oil down to $60 a barrel, Putin's war machine's going to take a hit. Russia's influence in the Mideast is weaker than ever. Their proxy in Syria got picked off, and their other proxy, Iran, as we speak, is surrounded by 2 U.S. aircraft carriers, the USS Truman and the Vincent. Oh, and we have B-2 bombers waiting at Diego Garcia in the Indian Ocean, while Trump's chief negotiator, Steve Witkoff, starts bargaining with the mullahs. So if they knock off their nuke program, we can bring Iranian oil back online and drive the energy prices down even lower. That'll hurt Putin, bring rates down, and take the edge off any inflation that the trade war triggers. And Europe knows where its bread's buttered. They can't afford their socialist welfare states without the American security blanket. And we're not going to give them that little blanket if they don't drop their tariffs. And
Okay, so it looks like the U.S. Treasury's pair losses after good demand at 10-year auction. So that's good. I'm looking at the futures for the 10-year note, and that's when you're looking at it from a price level, it's at 112.205. So that's probably still at about the 4.37% for the yield.
Said they're willing to go down to zero tariffs.
4.4.
And if they kill their VAT tax and
All
sprinkle
right,
in Greenland,
10-year yield is 4.4 right now.
the deal. America dominating the Arctic is necessary for international security, and world peace costs money, which is why we need Ukrainian minerals. Who else does the world want on top? Us or China? Trump's logic is that China doesn't have the cards, and they're bluffing. China wants to make a deal badly, but they don't know how to get it started. We're waiting for their call. It will happen. And China can't afford to play the long game here because the rest of Asia is racing to negotiate with us. The Chi-Coms are isolated, and they know it.
President Trump made it very clear that the era of American economic surrender is over. President Trump is no longer going to allow American workers and companies to be ripped off at the hands of foolish trade practices that shipped away millions of high-paying jobs and hollowed out communities across the country.
Trump could go to China like Nixon did and rewire the world all over again. Give Xi a soft landing, let him put out domestic propaganda like he won, who cares? Now, I don't know if any of this is going to happen or how it's going to end or when it's going to end. But I know every phone at the White House is ringing.
We're managing a massive number of requests for negotiations. It's actually logistically quite challenging just to go through them. It's something that I'm spending a lot of the time this morning doing because at NSC and NEC, what we have to do is prioritize the meetings for the president. And there are so many to go through that, we're actually getting ready to present a plan for him on, who and when.
The White House is having to put world leaders on hold. Excuse me, Prime Minister, I have the Chancellor on the other line. What's a good time to call you back? Hungary is actually going around the EU's back and trying to cut a one-on-one deal with us. I didn't even know you were allowed to do that. Ursula is going to be fuming. The Philippines, Cambodia, Thailand, they're all ready to slash tariffs. But Trump's not just handing out deals willy-nilly.
We're taking in almost...
Stop letting handover be a headache. With Kahua's asset-centric approach, you gather accurate asset data as you build. So when it's time to hand over, you're ready. Kahua, build with the end in mind.
We're taking in almost $2 billion a day in tariffs. $2 billion a day. And we're doing very well. And we're doing very well in making, I call them tailored deals, not off the rack. These are tailored, highly tailored deals. Right now, Japan is flying here to make a deal. South Korea is flying here to make a deal, and others are flying here.
Trump says his call to South Korea went great today. Aside from dropping tariffs, Seoul is ready to invest here and buy American. American companies are investing here too.
Ford is America's #1 auto manufacturer, and we assemble more U.S. vehicles and we employ more U.S. hourly auto workers than any other OEM. And we want to do more, not less, here in the U.S. 80% of what we sell in the U.S. is assembled right here in the United States. And it would be helpful to have certain parts here in the U.S. and the White House gets that.
If Trump can pull this off, and we hope he does, he'll go down as one of the greatest presidents in history. Maybe it's because he got shot. Maybe it's because he nearly went to prison. Or maybe it's his age, or maybe taking 4 years off and coming back on the job, he got a fresh head. But he's going for broke, and he knows how to use power.
He ain't no lame duck. If anything, he's a soaring eagle. Get this. 86% of the American public believes that Trump's approach to presidential power is completely different from past presidents. You can agree or you can disagree with Donald Trump, but what you can't disagree with is that he's doing things very differently. I have used the Frank Sinatra quote before. He is doing it, quote unquote, my way,
Critics on the right and the left agree with the president's goals. Return the country to an industrial superpower for the modern era. But they disagree on tactics. Trump says this kind of shock therapy was necessary.
Yep.
It's the only way to bring the patient back to life. And it scares the rest of the world into submission. They can't slow roll it. It'll never get done. Because the next thing you know, here come the midterms. He's not tinkering around the edges. He's breaking it and putting it back together. And we pray we never hear that giant sucking sound again. Click here to subscribe to the Fox News YouTube page to catch our hottest interviews and most compelling analysis. You won't get it anywhere else.
All right, let's go back to Bloomberg here.
They now going to start pulling it in and cutting back on various expenses.
I think you can see a little bit of that.
Yes. But how significant would you expect that? Do you personally expect a recession?
I am going to defer to my economist at this point, but I think probably that's a likely outcome.
Larry Fink earlier this week on Bloomberg, Barat said he thinks we may be in one already. Are we in a recession now?
No.
Well, as I said, some of the data from January, February, and March, to my mind, was pretty concerning when you saw the pullback among both business investment and retail spending, very soft retail.
You need to have two consecutive quarters of negative GDP for it to be a recession. We don't have any of that in the data. None. Zero. So we're not in a recession right now. Come on.
Puts us on the trajectory for a recession in the second half of the year. And I think it would be one of the few recessions in American history, maybe the only one, that was completely the result of a single person's complete misunderstanding of how the economy works.
Well, he wants to reshape that economy, he argues, Barat, revive American manufacturing. In our final 90 seconds here, what would actually have to happen to the wage structure, cost of living considerations in the United States if we actually are to bring back workers, in the words of the Commerce Secretary Howard Lutnick, who are actually screwing the screws into iPhones, doing work that has been up until this point outsourced to other countries in recent decades?
And look, as you noted, I worked in the Biden administration. If you look at the data, it's very clear there was a surge in investment in American manufacturing in 2022, 2023, and 2024 under the Biden presidency. That was accomplished by doing targeted investments in American manufacturing through the Inflation Reduction Act, through the infrastructure bill, through the CHIPS Act, bringing all of that onshore, paired with some targeted tariffs on China and on steel and aluminum and some other specific sectors. Doing this across the board in the way that they have done completely undermines the ability for American manufacturing to recover. Remember, American manufacturers, in many cases, rely on some inputs that come from abroad. So by imposing tariffs across the board, what you are doing is driving up the costs for American manufacturing, which makes the value proposition for investing in American manufacturing worse than doing it in Southeast Asia or China or South America. So it's really, like I said, I don't want to overstate it, but it's really almost like an act of arson on the economy, and it's based on some theories about how the economy can and should work that really aren't grounded in fact.
Barat, good to see you. Barat Ramamurti, Senior Advisor for Economic Strategy at the American Economic Liberties Project, live with us here on Bloomberg TV and radio, the 10-year yielding 4.38%. We'll have much more with our panel coming up next. Rick and Jeannie on the way in here on Bloomberg.
Please go to my store, the-studio-reykjavik.com. Get the C60. This is a very potent antioxidant. I've been taking C60 since, I think it was 2016. All right. So you can get it in MCT coconut oil, avocado oil, or extra virgin olive oil. All right. You can get it in a 2 ounce, a 4 ounce, or an 8 ounce configuration. It is cheaper per ounce to get the higher ounce configuration, so you can save money that way. In addition, take a teaspoon of this every day. The best way to take it is on an empty stomach for best absorption. C60 has to be in a lipid, an oil, for you to be able to absorb it. C60 is a carbon molecule of 60 carbons, and what is unique about the C60 molecule is it looks like a soccer ball. It's a fullerene, all right, or a buckyball. And the electron field of this molecule shimmers, all right, and it moves around. And because of that, of the way the electrons move around, it allows for absorption and neutralization of lots of free radicals. If you compare it to, let's see, vitamin C can only neutralize one free radical, but one molecule of C60 can neutralize hundreds, if not 1,000 free radicals. So it's much more potent. So all you need to do is take a teaspoon a day, every day, all right? Take it on an empty stomach for best absorption. If you work out, take it before your workout so you're soaking up the free radicals, and you will notice you're recovering quicker. So take a teaspoon a day, every day. It's going to soak up those free radicals, reduce the stress in the cell. And when you're reducing the stress in that cell, you're also improving the mitochondrial health, and your ATP is going to improve. So you're going to have more energy in the cell. You're going to have more energy in the tissues. Your organ systems are going to perform better. Your immune system will perform better. Your endocrine system will perform better. In addition, by improving your mitochondrial health in your neurons, by soaking up free radicals with C60, your neurons will fire better and produce those neurotransmitters. So those neurotransmitters that are firing, and they're firing more rapidly, what happens is you're going to have better neuroplasticity. And when you have positive neuroplasticity, you're going to be thinking better. You're going to have more and a stronger memory. And if you couple it with proper diet and exercise, filter your water, stay away from processed foods, and get that better blood flow, what's going to happen is that you're going to improve that neural connection. Plus the different modalities that I've been telling you about. Do resistance training, that activates certain types of muscles. Balancing exercises will activate the cerebellum and activate different types of neurons and neural networks. Doing stretching activates a different set of neuron networks. So it's really important to do all four modalities of exercise. So please go to my store, the-studio-reykjavik.com, and get the C60, take it every day. C60 is a very strong molecule. You can't break it. You can't break it, all right? So what will happen is that you're taking it, it's soaking up those free radicals, and then eventually what happens is that you're excreting that substance out. But you want to take it every day, all right? So please go to my store, the-studio-reykjavik.com, soak up those free radicals. And what you're going to notice that over a 1 year period, you're going to start physically seeing your body aging slower, all right? You're going to start noticing benefits with your eyesight and with your energy levels. For your eyesight, for me, I started noticing improvements in my eyesight within 2 months, 2.5 months. And with energy levels, you're talking about just a few weeks. So you're going to see in a relatively short amount of time the benefits, but you get these compound benefits by taking it on a regular basis. And you'll take a picture of yourself 1 year if you haven't been taking C60, and then taking another picture a year later after taking C60 for a year. And you're going to notice a difference. You're going to also notice that the people that you associate with that are your peer group that aren't taking C60 versus you taking C60, you're going to notice your energy levels are better, your immune system will be better, and not only that, you're aging slower. C60 is very potent, and it's one of the key pillars to improving your health and slowing down the aging process. So please go to my store, the-studio-reykjavik.com, and get the C60. It's something that you should be taking every day. Stack it. Stacks well with Max 35 or Max 14, the Boomer Boost, turmeric, ashwagandha, and lignans as the core protocol. It also stacks well with resveratrol or NAD+ and ubiquinol. So please go to my store, the-studio-reykjavik.com. Use discount 5 and you get $5 off any order. If you spend more than $150 or more, you will get a free gift until supplies last.
President suggesting, based on the fact that more than 75 countries have called representatives of this administration to discuss and negotiate a solution to matters of trade. He says countries that have not retaliated in any way, shape, or form against the United States, he is authorizing a 90-day pause on the tariffs and a substantially lowered reciprocal tariff during this period, he says, of 10%, also effective immediately. After he led this post by saying effective immediately, he was raising the tariff on China, which has retaliated to 125%, but clearly risk assets and others are seizing more on the 90-day pause for everyone else ex-China.
Guess you read Bill Ackman's tweet.
Yeah. This is exactly what he suggested.
Based on the lack of respect, kind of interesting. We've got a red headline now in the terminal. This is all happening before our eyes here on Balance of Power, which is something that we're getting used to these days. 90-day tariff pause on non-retaliating countries. Remember,
now take a look at the look at the dashboard. Look at that dashboard for the ones that are on YouTube. The S&P 500 is now at 5,275. See that spike? You see VIX going from 49 all the way down to 39. You see the Euro USD, the dollar is strengthening. Oil skyrocketed to $60 a barrel, and Bitcoin ETF is now gone to 17.66. And look at that stress indicator on the USD Japanese yen. It is now 146. So the weaker, when you see the weakening of the yen and the strengthening of the dollar, that is meaning that stress is starting to abate in the market. So this news gets to the point that I'm making. All Trump has to do is do the proper negotiations, and you're going to see a major market rally. But Professor Callaway says to diversify and put it into foreign assets. Yeah, that's turning out real well right now, Professor Callaway. Don't bet against America. Trust me on this. You remember, the crisis in 2020? I wasn't wrong on that either.
Uncertainty and all of this destruction is a big looming question. And I think his supporters have the right to ask that, particularly those folks in the UAW who, against a lot of odds, have supported him throughout this, last week as he's raised these tariffs around the world and talked about reshoring and permanent.
All right, so now Bitcoin is trading at 80.5 thousand.
8% gain on the day for the NASDAQ 100. That would be the biggest single day price move going back to the depths of the COVID pandemic in March of 2020. The S&P 500 right now up 6.5%. Take a single stock like Apple, it's up the better part of 12 percentage points. NVIDIA around there as well. Nike, some of these countries we know were highly vulnerable in this tariff scenario are rallying in a big way. Nike's up the better part of 8% too. And Rick, all of this coming out.
Professor Callaway from NYU, who's the marketer, didn't look like it turned out too well by diversifying in foreign assets.
Obviously, the trade news is positive, but everybody's been watching all day for this Treasury benchmark sale, and $39 billion went on the market, and it was a very well received auction. So
So what does that mean? What does that mean, Rick Davis from Stone Court Capital LP? It means don't bet against America. And isn't that what Dr. Paul Cottrell said last week?
Is within the trading day to affect that. We're in uncharted territory here when it comes to market manipulation.
No. And I think Andrew will appreciate this because he, knows a lot about boats. All right. It's not about the rough water. It's about how you learn on how to navigate the rough waters. And the thing is that we have people like Rick Davis and Jeannie on Bloomberg that are fucking idiots. It's called leadership.
At the same time, giving relief to those people who aren't arguing or aren't retaliating. And we don't have a list of who they are. We assume that it's within that core group of countries that he's already raised tariffs with and will now delay their implementation, at least on the reciprocal side, for the next 90 days. But to think that this is going to add any stability
to the markets, I would be shocked and surprised.
It's pretty wild here. The S&P 500 now up 7.3%. The NASDAQ is up by almost 9%, Jeannie. Tesla, by the way, rising 11%. It's back above $247 here in heavy volume. Remembering that Howard Lutnick suggested that people buy the shares. He said a lot more than that, actually, at the time. This is when the stock was at about $235. He said to Fox, $235.86. Buy the stock. It'll never be this cheap again. Donald Trump, this is a great time to buy. Rick Davis just said it out loud. Do Democrats start accusing this White House or calling for investigations into market manipulation?
Oh, I think they absolutely are going to do that. I think that we will be hearing about that. The reality is that we have a president who has just, with the sort of stroke of a pen, but it's not even that. It is just going on Truth Social, can move this much of the market. And you bet that Democrats are going to be wanting to ask questions. The problem is investigation is hard in Congress when you are in the minority. So that'll be trouble for them. But I do think
but the converse is true too, Jeannie. When the Democrats were running the show in Congress and in the Senate, they wanted to impeach him into every hour on the hour. But you would know that because you're at the center of study for presidency in Congress.
Certainly going to hear Democrats call for investigations.
All right, Jeannie Shanzano and Rick Davis, our political panel, Bloomberg Politics contributors, the both of them. Thank you so much for being with us as we contend with this breaking news from President Trump. Yes, maybe bad news for China as that tariff is immediately going up to 125% according to the president. But for those who have chosen not to retaliate against the U.S. measures, a 90-day pause will also be immediately.
So what Trump did was he basically slapped more tariffs on China and rewarded individuals willing to negotiate. Great strategy. It came out. That was a bullet out of the blue sky. And now you have, the S&P 500 trading just, at about 5,300. All right. Now, to answer the question by Amber, why not to buy individual stocks? I have been more focused on macro trading. All right, and commodities. So I'm always looking at the macro play, all right, the global macro play. And when you purchase a broad index, it's well diversified. All right, picking individual stocks is tricky because you have what is called idiosyncratic risk. Idiosyncratic risk is unique risk to that company, and it's hard to hedge that unless you build a portfolio of 15 individual stocks. And you need to understand the beta and the alpha for each one of them. So that's more of a sophisticated play that most people do not have the training for. So it's just better to buy a broad index. You are taking too much risk if you just purchase one stock in an investment portfolio. If you're buying more than one stock, it takes approximately 15 stocks to build a decent diversified portfolio that may have alpha, which could earn more, but could lose more too, compared to a broader index. But that's a sophisticated play that most people at home should not be doing. So trust me on this. Can you gain money by purchasing individual stocks? Yes. But you can lose too because of the idiosyncratic risk. And most investors don't know how to hedge that idiosyncratic risk. That's why.
On Wall Street, the projections that the U.S. economy would tip into recession have been steadily growing. A lot of people, including Larry Fink of BlackRock, were saying that many company executives were telling him that the economy was already in recession. So it kind of became this default scenario that we were in recession and it would be only a matter of time before the data backed that up. So this is a break in that bad news story. So far this week, we've seen the bad news really turn to the bond market. Last week was all about the stock market kind of in collapse mode.
The S&P 500.
Fluid, volatile this week, but the bond market has really
The S&P 500 is up almost it's at 6.7%. It may hit over 7% today.
Bill Ackman, in regard to tariffs too, as Joe reminded us just moments ago, did push for the 90-day pause to begin with, which is what Donald Trump seems to have decided here. He posts simple message on X now, just thank you, nothing else. So I guess he likes what he's seeing here, just as risk asset investors do. But Carolyn, it's remarkable
to just add to the statement from Andrew, he was saying that 15 stocks to try to diversify. If you're buying individual stocks, it seems to be a lot. But statistically, that's what it takes to be able to diversify the idiosyncratic risk. Now, it's also important to realize that if you buy 15 stocks in the same sector, you're actually adding problems, because now you're building in not just individual and idiosyncratic risk of the individual stock, but the idiosyncratic risk of that sector. So the reason that you need 15 is to have a broader base through the different sectors within the economy. So statistically, it's 15 stocks. But picking those are difficult, very difficult. You need to know what their beta is, and then you have to calculate their alpha to be able to and know what sectors they are in, and that you're diversifying that risk. That's why it's just cheaper and less headache and less computational wherewithal by just buying a broad index. Or if you want to be a little bit more sophisticated, you can buy like 3 or 4 different sector ETFs, and then play that game. But that's in between the broad index and the 15 individual stocks. But it's just better to buy the index. Just better to buy the index. Don't get fancy. Most people get killed when they play fancy.
A 1,455-point rally as the Commerce Secretary takes to Twitter. Scott Bessent and I, he writes, retweeting or showing a screen grab of President Trump's post on Truth Social, sat with the president, he says, while he wrote one of the most extraordinary truth posts of his presidency. The world is ready to work with President Trump to fix global trade, he says, and China has chosen the opposite direction.
Yeah,
interesting moment here for this administration.
It certainly is, and quite a split screen between what we're seeing the markets reacting to and the reception, at least the majority of countries subject to reciprocal tariffs seem to be now getting from the administration, which is a pause.
So let me get this straight. So the whole market early in the session, like 5 hours ago, early in the broadcast, everyone was saying that Trump's an idiot and he's going to tank the market, he's going to tank the whole world, and blah blah blah. Now you got a major market rally. We almost had 8% up on the S&P 500 by him just tweeting. I'll tell you, I love 2025 because it is 10 years wrapped in 1 year, and I'll tell you, anything can happen. Anything can happen this year.
Is enough to carry risk appetite through for now.
Interesting to see tech taking off like this, because the prospect of a $3,000 iPhone might not do a lot for Apple shares. But as the rally moves here, we want to go directly to the White House. The press secretary and treasury secretary just walked into the briefing room. This is live now. Caroline Levitt alongside Scott Bessent on Bloomberg.
Speak to that. We will continue with the tailor-made negotiations that I spoke about yesterday. In the meantime, there will be a 90-day pause on the reciprocal tariffs as these negotiations are ongoing, and the tariff level will be brought down to a universal 10% tariff. The secretary here has been a huge part of the president's trade team, of course, and will continue to lead these negotiations moving forward, to look out for the American worker, which is always President Trump's goal. So I'll kick it over to our great Treasury Secretary, Scott Bessent.
Thank you. And we saw the successful negotiating strategy that President Trump implemented a week ago today. It has brought more than 75 countries forward to negotiate. It took great courage for him to stay the course until this moment. And what we have ended up with.
What did DrPaulCottrell say 5 hours ago? Do not bet against America. Meanwhile, Professor Calloway from NYU said diversify in other foreign markets. Don't bet against the United States. I'm telling you, don't do it. Don't bet against the United States.
For them, and China will be raised to 125 due to their insistence on escalation.
Three quick things. State clarity, the markets are open. First of all, Mexico and China, are they part of this 10% universal?
Well, China, no, China.
Mexico and Canada, are they part of the 10%?
Yes.
Okay. Second, given that you have the rest of the world essentially calling it not China, is this not just all about China?
Well, it's about bad actors. And what we will see is some of the very early countries are China's neighbors. That we're going to see. I'm seeing Vietnam today. Japan's at the front of the queue. South Korea, India. So we will see. And as I've repeatedly said, and President Trump has been saying it for years, China is the most imbalanced economy in the history of the modern world, and they are the biggest source of the U.S. trade problems. And indeed, they are a problem for the rest of the world, because what we've seen is that as the U.S. announced the tariff wall last week, many of those goods have already started flooding into Europe.
As you see it now, this trade war is China versus the rest of the world.
Well, I'm not calling it a trade war, but I'm saying that China has escalated, and President Trump responded very courageously to that, and we are going to work on a solution with our trading partners.
Now let's get this straight. Do you really think that the Chinese are going to be able to outbeat playing chicken with a New Yorker? Really? You really think that the Chinese are going to be able to outbeat playing chicken with a New Yorker? And that New Yorker is Donald J. Trump. All right? You really think that China is going to lose out in the long run?
And as the president has shown great courage, as the secretary has said, in choosing to retaliate against China even higher. Elena, go ahead.
Let me see if I can get a better mic feed. Let's go to live now. I might be able to get a better
They need this president in the Oval Office to talk to them. And that's exactly why more than 75 countries have called, because the United States of America is the best place in the world to do business. And as the president has shown great courage, as the secretary has said, in choosing to retaliate against China even higher. Elena, go ahead.
No, again, President Trump created maximum negotiating leverage for himself, and which tariffs went into effect 15 hours ago. The ones that we have lowered went into effect a week ago, they were announced a week ago, and we've just been overwhelmed by the response from mostly our allies who want to come and negotiate in good faith. So we are expecting them to come with their best deal. As I said a week ago today, don't retaliate, hold your ground, let's see what happens. And China, they kept escalating, and now they have 125% tariffs that will be effective immediately.
Go ahead.
No, it's because because of the large number of inbounds, we've had more than 75 countries contact us, and I imagine after today there will be more. So it is just a processing problem. Each one of these solutions is going to be bespoke. It's going to take some time, and President Trump wants to be personally involved. So that's why we're getting the 90-day pause. look, it's all the president's decision, and the president had a level in mind to raise the China tariffs, and then he had the 3-month pause in mind, and we were just discussing the exact wording. Sorry? Of course.
The president's decision.
It was the president's decision to wait until today. And again, as I've said in the past, no one creates leverage for himself like President Trump.
Shelby, what does the president want to see when I think it's July by deadline is it just trade barriers coming down, or is it more than that?
Well, these are trade negotiations, but if countries want to come and offer other things, I talked about yesterday that we are thinking about a big LNG project in Alaska that South Korea, Japan, Taiwan are interested in financing and taking a substantial portion of the offtake. But again, in essence, that is trade because it will increase the trade deficit that we have with those countries. So everything's on the table.
What happens to those countries just at 10% based on trade? Like Brazil and others, are they still going to have these kind of costs because we're saying that those million tariffs will 10% for others? So what happens to those just at 10%?
Yeah, that's going to remain.
If you call this an embargo to China?
Pardon?
You call this an embargo to China, a trade embargo?
Well, I'm not sure what you mean by the word embargo.
125% tariffs rate.
It's not an embargo.
Well, it's China's decision that we have the deficit with them. They sell us almost 5 times what we sell them. So again, I think it's an own goal by China. It signals that President Trump cares about trade and that we want to negotiate in good faith. And as I said, each one of these is going to be a separate, bespoke negotiation. So we are confident that having seen the other side of where this could go, and it was like I said last week, the market didn't understand. Those were maximum levels. The countries can think about those levels as they come to us to bring down their tariffs, their non-tariff trade barriers. We're going to discuss currency manipulation, subsidy of labor, and industry.
Also apply to sectoral tariffs that the president announced, pharma, lumber, anything else?
No, it's on the reciprocal.
Andrea, go ahead.
I didn't say that.
What? The markets have changed, right? There's a lot of volatility in the market, not just in terms of stock markets, but also so what's the
Well, I think what we've seen, I think the willingness by more than 75 countries to come and negotiate, I think now the market understands that everything they saw last Wednesday was a ceiling, and now we have a 10% temporary floor. And I think the market, in my 35 years in the market, I always wanted certainty, so I think we've got more certainty.
Maggie, the Secretary, why do people assume this is the last war? As I began this morning saying, equal 5 hours later, why will investors in the market assume that this is it?
Because again, as I said, we've given 90 days, and the only certainty we can provide is that the U.S. is going to negotiate in good faith, and we assume that our allies will too. And in terms of certainty, we will see what China does. But what I am certain of is that what China is doing will affect their economy much more than it will ours, because they have an export-driven, flood the world with cheap export models, and the rest of the world now understands, because when we put up our tariff wall, those exports were already flowing to the rest of the G7 and to the global south.
Larry, how much of this was driven by the bond market cratering overnight? What is happening? China selling their bonds?
I have nothing that says that, and we actually had quite a good 10-year auction today, and all this was, again, this was driven by the president.
Notice the question? The question was, was this because the bond market was cratering over the Asian market? First of all, it wasn't cratering. Yields did go up. But when we did our bond auction, it actually turned out pretty damn good and orderly. Again, don't bet against America. Don't. I'm telling you. She will always surprise you.
Who did not retaliate. It wasn't a hard message. Don't retaliate. Things will turn out well.
How long will that take? Would it be a matter of weeks? Would it be a matter of months? Do you expect financial markets to be stable during that time period?
Well, we started with a 90-day pause, and we will see if more countries turn up. But what will happen? But we have a meeting with Vietnam today, and we have one of the largest trade deficits with them. So I'm hoping that we'll move in a good direction. I was at the Japanese ambassador's house last night for the Cherry Blossom Festival, which was quite festive. And he and I had a good chat. They are going.
I suspect that if we have a lot of these trading partners coming to an agreement with Trump, and we have China still playing chicken, all right, and there's an escalation between tariffs, back and forth between China and the United States, that eventually it'll crack the economy for China, and there's a potential overthrow of Xi, potentially, all right? I'm surprised that there wasn't an overthrow of President Xi during 2020 crisis. But okay, with that said, but what will happen then is that there is a higher probability that we saw the bottoming on Monday of that. Remember what I said, that 4,810 support level was tested on Monday, intraday, and it held. If we start hearing news that these other 75 trading partners are willing to make a deal with Trump, then that's going to be positive for cash on the sideline to invest in the equity market, and we probably will have seen the bottom on Monday. Last Monday was maybe the bottom, but it depends. That piece of information that we need is how many of these 75 other trading partners are actually going to negotiate something that is beneficial for their country and for ours. So we got to wait and see. But if it does play out that way, where most of those 75 countries negotiate, then it's just China, and we're probably have already seen the bottom. And, you missed an opportunity to buy. Now, if many of those 75 nations decide to play chicken with Trump, then we're going to see another test of the 4,810 on the S&P 500.
Work these deals out with the countries, and if that 90-day, that 10% reciprocal tariff will be placed.
All right, let's go to Bloomberg here on their analysis of this.
Financial markets, that can't persist very long. When you see moves like what we saw last night, I know the Secretary of Best there said this was not a response to what we were seeing in market volatility, that it was all, art of the deal, et cetera. Nonetheless, Clearly the markets were under extreme distress. And I'll just say a couple other things. The market is, looking at NASDAQ 100 futures, they're still down 5.5%. The China tariffs are a huge effect on lots of American companies. There's the 10% sort of floor tariff. Those are still in place. So look, I think it's a big relief. But I think there's still quite a bit to work through here. Some sort of like true all clear. Every major index is still deeply in the red on the year. S&P is down 9.6% on the year.
Wow.
Yeah,
it's great to have you with us.
Use this as an opportunity to buy in. But don't bet the farm. Just slowly accumulate, all right? Don't sell, just slowly accumulate, because we may actually have another test of that 4,810 support level, but things are looking more positive. But this back and forth between the United States and China, that might lead to war. And guess what? I think we need to have a war with China, a real one. China companies. But I think even outside of the stock market, you have to think about actual investing. And the business side sentiment surveys, absolutely horrendous. We haven't gotten a lot of hard data that really speaks to what was happening economically in the middle of March. Earlier in the week, we heard Larry Fink. He said every CEO that he talks to thinks the recession has already begun. Jamie Dimon talking about recession being the base case. So even with the 90-day pause in the non-China countries, it's worthwhile to think. Why is this? For some reason, I had problems with my. Sometimes the speaker, the master speaker, doesn't work. Environment where, if nothing else, the trading relationship is highly uncertain, which at least in the short term is not conducive to investment. But they would probably argue, short-term gain for long-term gain.
Well, it's incredible that these headlines. Clock hour ahead of the Fed minutes, which are due to come out just a few minutes from now, Joe. I guess whatever news we might have seen in them probably overshadowed by these developments. Yeah. Keeping in mind it's backward-looking minutes, and they didn't know what the tariff levels were going to be in the first place, let alone that they would be pulled back. But it speaks to the kind of uncertainty we keep hearing Chairman Powell talk about as to why the Fed isn't enticed to move in any direction. So much is so unclear.
There's so much that's so unclear. Short-term market-based inflation measures going up, long-term ones going down. So much. Going down, hard data still going up. And the other thing is, speaking of uncertainty, look, we all heard, the White House's presentation there about the art of the deal, and China has now been goaded to being revealed as the bad actor, etc. And okay, that's a fine story. However, last week at the Rose Garden, those reciprocal tariffs were very specifically presented in such a manner that every country that runs a bilateral trade surplus with us, almost every country, was per se engaged in bad acting. That's the whole premise of reciprocity. And so, it's clearly not presented that China was anything particularly special last week. The story has evolved. Whether it's negotiations versus non-negotiations, etc. So, again, I'm not surprised.
He's analyzing this wrong. China was one of the worst actors when it came to tariffs. India is also another one. Please go to my store, the-studio-reykjavik.com. Get the Boomer Boost. This has 68 nutrients. It has a very comprehensive nutrient profile and vitamin profile. Take this every day. This is going to target your heart, your vascular system, your brain function, your musculature. They'll boost up your energy levels and your metabolism. You will start to lose weight. You should be taking this every day, either for breakfast or for lunch. There's a big scooper. You take it once a day, mix it with soft foods or with just filtered water. Some people mix it with milk, or you can mix it with a smoothie, whatever, but take it every day. You're going to notice the benefits of this within 72 hours. You're going to have a steady burn of energy. You're going to be able to think more clearly, and you're going to be able to sleep better. You're going to have more vitality. And then over time, you're going to start seeing these other improvements that are happening at the different system level, your different tissues and organs, and your immune system and your endocrine system. So this is very powerful stuff. You should be taking this every day, and you will lose weight and help to improve your blood glucose levels. You can also take separately or with the Boomer Boost, the Gladiator barley or the heirloom barley. So some people will go, well, what's the difference? Heirloom barley is going to help to detoxify your body, soak up free radicals with superoxide dismutase, and bring down inflammation. That's important for your vascular system and for your immune system. All right? Take it every day. Take a half a scoop or a full scoop. It's a high density protein. You need to take this every day. All right? But you can take it by itself or with the Boomer Boost. All right? Another thing is to take the Gladiator barley. You get all the benefits of the heirloom barley in the Gladiator barley, but it'll also help to build muscle. So do the resistance training, take the Gladiator barley, take the Boomer Boost, and you are supercharging your ability to control your A1C levels. That means that you're controlling diabetes, all right? That means that you're getting healthier. The two biggest chronic problems in the United States are, well, the three biggest: stupidity, diabetes, and cardiovascular disease. All right. So if you watch my show, you'll learn more, so you won't be as stupid. And two, by taking the Boomer Boost and the Gladiator barley, you're going to help with your cardiovascular health and control your blood glucose levels. You can take charge of your life. All right. You don't have to be reliant on pharmacopoeia. So it's a holistic approach. Take the Gladiator barley, take the Boomer Boost, stack them together. That's the best combo, and do the resistance training. Really important. This stacks really well with Myotrol. Why? Because Myotrol helps gene expression to build muscle. If you are an athlete, younger or older, you will also benefit from this. Use this stack as your pre or post workout fuel source. I wish this was available when I was doing triathlons. So you fuel up before your workout or after your workout, and it'll help you to improve your sport. But even if you're not an athlete, younger or older, and you're just, average Joe or Jane, taking Boomer Boost and Gladiator barley or the heirloom barley are very beneficial for your health. All right. Let me mix it right here. All right. So please go to my store, the-studio-reykjavik.com. Get the products that I offer, stack them the way I tell you to, use discount 5, you get $5 off. Take a look at the longevity boxes or the anti-aging boxes. They're all at a discount, built-in discount compared to purchasing the products individually. If you spend $150 or more, you will get a free gift until supplies last. That is my well, let's go. The Fed minutes just released, so let's listen in on that.
Growth and employment weekend. On the balance sheet, although Fed Governor Christopher Waller was the only one to vote against a slowing of the balance sheet runoff, the minute shows several participants said they did not see a compelling case for a slowdown. There's no indication whether the participants felt that this would be a permanent move or a temporary move. Guys?
All right. On a normal, ordinary Fed minutes day, Mike, we would have some more for you, but we got to get back to the markets because we are seeing certainly a rally underway. Of course, our Mike McKee there at the Federal Reserve in Washington. Just a reminder, folks, we've got up a gain of about 395 points on the S&P 500.
So S&P 500 almost 8% up today. All right, and we were down. So there's a big swing. I've been transmitting for more than 5 hours, and these files get pretty big, so I'm going to stop the transmission. But thank you for listening. The ones that have been watching live on Rumble, the ones that have been participating with the YouTube chat, and watching the market telemetry. We just saw a historical event just happen in real time. And just look at that chart. That's the reason why I created the dashboard, so you can see while we're covering the news how it affects markets. All right, how the news affects the market, and you can benefit from it if you just listen to me. All right, not only will you improve your health and slow down the aging process, but you can actually save some money for your retirement. So please go to my store, the-studio-reykjavik.com. Help support my work. All these videos are for free. All right, that's the end of the transmission. Hopefully I'll be able to do another one tonight. Thank you for listening. Have a nice day.